Good morning. Sort by this. Good morning. How y'all doing? Got some weirdness going on with my mic this morning again. Let's get on Twitter.
ECB's legato Swiss authorities didn't have many choices on Credit Suisse.
Yes, F. Live stream. Good morning. How y'all doing out there? Hope everybody's doing well. Assuming everybody's tired. I'm tired today. It's like the hump day, Wednesday hump day. We'll get right into it here. Coffee Wednesday morning time. Good morning. See if I can. Happy May the 4th. If you're just joining us right now, happy May the 4th. In the overnight last night, we had a bounce in the middle of the night last night, somewhere down here, bounced back up. Came right back up into the daily trigger and sold off again. So we have a lot to go over today. Hopefully we have a bunch of stuff to look at today. Well, like we did on Monday. I think it was Monday or Friday or something like that. So we have a lot to look at this morning. So we'll take a look around the market and see what's going on.
The banking industry has been outperforming the US.
We have Winky coming on, I believe, this morning at 11-ish or around there. I think he might be on the program today. We had Binky yesterday, and today we have Winky on the show. Today is the 4th. All of our news is out at this point for the day. Tomorrow we've got the unemployment report at 8:30, hourly wages year over year. Then we've got Bullard speaking at 1 tomorrow and consumer credit at 3 p.m. And then we'll wrap up the rest of this week. That's all the news is out at this point. We're going to take a look at a few things this morning. We're going to talk probably about regional banks as well at some point today. We're going to talk about Apple. Maybe we'll start with Apple right away. We should start with Apple right away, and then we'll move into what the market breadth is showing us, what the PMO, the PPO is showing us, what the triggers are showing us for the way forward here. And then we'll get into the S&L crisis, possibly. Regional bank crisis, is this real or not? How much it impacts the stock market. And then I've got some other stuff to review with you this morning. And so we'll take a look at that this morning as well. Yeah, hopefully we can get all that out of the way today off the opening bell so that we can get into talking with Winky. So we set all this up and then we'll get into the Winky conversation.
ECB's legato's data dependency is not forward guidance.
Now, just off of what I showed you this morning, or the title card today on Apple, that's on the video for this stream, shows that top tick yesterday in Apple. And so when you see that top tick came in yesterday morning on Apple, you noticed that the SPY didn't squeeze like Apple did. Apple squoze up into the opening. I bet it was 172 and some change or something like that. Hold on, so let me check I gotta check this better. Oh, that's so much better. Ooh. So yesterday, Apple squoze up on the open. I didn't see it yesterday happen in the morning. Maybe somebody had said something to me yesterday, and I missed it, but I didn't see it squeeze up on that opening bell. I was so focused on FOMC that I didn't see it. So yesterday, at the end of the day, I was like, what's going on with Apple? And I was talking to your wife's boyfriend yesterday, so I popped up the Apple, and I'm like, whoa. I'm like, it actually did squeeze yesterday before the opening, or on the open yesterday. It's almost like it's an instant short. The opening bell on Apple yesterday was an instant short, and this is irregardless of if they have. We'll talk about if they have a good earnings this morning. Or if Apple's going to continue higher, any of that kind of stuff. But just on fundamental, I don't know if it's called. I wouldn't call it fundamental. On I had a term for it yesterday. And it's like it's like one of these it's just like Tesla. When Tesla had come up and was going to trade 220, everybody knew you take profit there. And that included people that were long Tesla and everybody that wanted to short Tesla. Like if there was you might have like bulls and bears on each side of an argument. But looking at Apple yesterday, I would think two things. Number one, if you were long Tesla, that was your exit. And I think bears are like, well, regardless, we're going to short this here, even if it does continue higher. You're going to get sell side stepping in and long Apple stepping out. We'll look at that briefly. So we talk about that even in day trading here is my point that I'm trying to make to you, is that even when we're day trading, when we come into support or resistance, I'll bring this over so we can look at it. If we are looking just at support or resistance, I forget what I called it. There's a term that I had for you yesterday. It's kind of hilarious, but it's truthful. It holds itself up in life. And you know, if you were if you were like the Apple bull, and you're like, it's going all the way up to this resistance up here.
Had long discussions about core inflation.
You still know that it's like 1, 2, and 3. And we have previous ones too. You have another one right here, right? So you got 1, 2, 3, 4. Just based upon the principle of it, you're gonna exit here. And so even if a bear's like, it's gonna, let's say a bear's like, let's say you bought down here, and a bear says, gonna crash, 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 gonna crash. Gonna crash, 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 gonna crash. You know, as a long Apple bull, that you are taking, no matter what, you're taking profit here. This works on a daily basis, a weekly basis, monthly basis. Doesn't matter. No matter what, you're going to expect two things to happen here. And the same thing down here. Even if Apple is going to go lower. If you were short here, you would close your short here because you'd want to take your money, and you know that buyers are going to step in down there. You know they are. You know buyers are going to step in. Whether they're successful or not is irrelevant. You know there's going to be a reaction there. There's going to be some emotional reaction there from people. So the same thing is happening here. Does that mean that Apple cannot continue higher? No. But it does mean to expect a reaction here. And so it's almost like a free trade. So just off the open yesterday, like 9:35. I missed it. I was talking to your wife's boyfriend, and I was kind of angry at myself because I was like, this was an easy short. I think it was 172 got tagged or something, 172 and change. It was like an instant short. Regardless. So something just to keep in mind and pay attention to yesterday was that this was like a clear as day As a matter of fact, when Tesla came into the resistance, they started selling at like 217 and not even the 220. They just started early. They were just like, fuck it, we're out of here. And started taking the money and running. So when you see stuff like this here, when you see stuff like that there, right away, your question becomes, there's a couple things I'll go over here for the open here. We've got, I want to show you something else real quick, too, before the day gets started, just so you're prepared for the day. Hang tight here. Excuse me. Whew. Got some allergies going on. We got weird seasons going on here. So just for today, before we even get rolling, I want you to see something. We've been talking about the daily velocity getting a little long in the tooth, right? If you look at these yellow bars down here, we're beginning to, so when we're up here, right, we're at like max bullishness, which is very bearish. When we're down here where my cursor is, I don't know if you can see it here, but down here, we're at max bearishness, which is actually bullish. Excuse me.
ECB's Lagarde is watching the Fed, but ECB is independent central bank.
And so when we're up here, it's, it starts to get a little toppy, right? We know on the upside too that we have rotation trades in here before it actually begins to come down. So just on a daily basis, the hour looks pretty bullish right now, but the daily at least is beginning to roll right now. So we are beginning to roll over in the market. So just be aware of that. And there's one other fundamental difference here.
Fed pauses.
I want to show you something fundamentally different here in two different scenarios here. I want you to see that when we're topping out here, and remember when we came down, so this is back on May 2nd, right? And we were going down, and people were like, it's going to crash. And I'm like, no, it's not going to crash. And the reason why it wasn't going to crash is if you see this green line right here, this hourly, trigger was not down here following, okay? There's some other characteristics here. Normally you get about, at least depending upon the cycle, you get one more bounce. If it breaks through, it squeezes back up. There's a bunch of rules. I got a bunch of rules written down, but not really that relevant at the moment. But what is key here is, the one key thing that I want to show you here is where that green line was above here when we first had an interaction with the daily trigger, is that the green line is now closer. You see the difference in the cluster? There was no cluster between the daily and the hourly. There is a cluster on the daily and the hourly forming.
Hear that news yesterday that PacWest Bancorp was exploring its options
to the upside. So, and you've already seen the first rejection here. When I talk to you guys about that you're looking for signs, right? Right here on the SPY, we dumped, we came up, we confirmed a rejection here. So as of right now, we've confirmed a rejection that we are below the daily trigger. I want you to be aware of that. Here. This is the daily trigger here. This should turn down, and this should turn down as well. So when you're getting like the hourly rolling over here, and you have price below the 1 minute, the 5 minute, the daily, and the hourly, it's signaling a few things. The hourly is now interacting with the daily, right, where it wasn't above here. We hit price is below the daily. Notice how it bounced here, and it did not bounce here. It got underneath. We always talk about on higher time frames, when you get underneath support and you turn it into resistance, that it becomes a place to short, actually quite a large short. So it's something that should pay well. And furthermore, to that point, that you have a decline on our daily velocity. So when you're seeing, when I'm seeing this here, I'm saying, yeah, even if we squeeze up here, and you can actually see it back here, right? Get underneath. It's kind of similar. Get underneath, but then we have that last capitulation move right there. And so I'm expecting that. I'm expecting some kind of a capitulation move down here. Now, where do we go is the question. Like, what's the price target? How do you divine that? How do you crystal ball that? How do you know if we're going down here? If we are going down, how far do we get down? Winky was talking to me this morning saying, hey, man, are you looking at how far down regional banks are right now? And, you know, we should get a bounce in regional banks. But I agree with that we should get a bounce in regional banks. I'm not anti that bounce in regional banks. But at that same on that same token, the broader market is saying, well, we already talked about May 5th, right? We're looking for like May 4th. Today's May 4th. Tomorrow's May 5th. And I was like, yeah, between the 3rd and the 5th, somewhere in there, we should get a roll in the market. And it's already starting, right? You can already see it beginning to start at this point. We didn't get the Jerome Powell squeeze higher. I think this is more than likely, personally, I think this is more than likely due to selling Apple. That Apple tagged its 172, and the banks didn't care. They're like, fuck that, we're selling. They got the price target they wanted, and to me, Jerome did not matter to the banks. Personally, that's what I think. So, at any rate, as we head into the 5th, now we're in today's the 4th, 3rd to the 5th, you're going to expect some weakness to come into the market the next few days. Today, tomorrow, and into Monday. Now, the next question becomes, though, what is a price target to the downside? Where is the risk in the market? Hang tight here. And I'm always looking for price versus breadth. It's an important one that I'm always looking for. Actually, let's look at cycles first. I'm always trying to check back in as price declines to see even inclines. If we're going up in price and like just grinding sideways and up, but not getting large new highs, that's an issue too, right? And with cycles, not so much. We'll look at cycles right now, but then we're going to look at breadth. Give me just a second here. Bring this up for you next. I think we looked at this on Monday. So on breadth, at least, I'm kind of happy here. I'm kind of happy on breadth, at least. This is breadth right here. We had that nice little bump up here. All right. And we've actually come down quite far. This is actually pretty good. As a matter of fact, we're at a total of 35 right now, 31%, 31.4% out of 1,100. So if we can get down to 21%, and breadth is way down at the bottom here, or close to it, I'll be a happy guy. Now, if we get below 21%, we will get a liquidation event. Now, that's when we liquidate the market. Now, without having a liquidation event at this point, we're still in trend. If we were to sell today, like bloodbath today, let's say today was it. My target for down below is
ECB's legatas are not planning changes on the PEPP reinvestments.
395.64. I think it's closer to 396, somewhere in there, and that's all I'm expecting. I'm expecting breadth to come down, price to come down here and stay within this channel. 396. That's kind of the place. We have targets of 4,000. Targets of 4,000 and then targets of 396 as well. So I'm hoping for 396 on PMO and PPO. This is also showing. Just going to bring this up for you.
Banks have prepared for tilt-true expiration.
I do want you to see something developing on PPO as well. I don't know if you can see it here. Maybe I need to change the colors here. But I do want you to take note of, maybe you can see this on I want you to see that cross right there. See that cross right there? I want you to see that cross right there, where the blue line crosses over and below the red line. And you can see that happening right now. Let me see if I can make this larger for you so you can see
ECB's
it.
regards as it wouldn't surprise me if more standing facilities would be used more again.
And you see this blue line right here crossing over, the red line right here, and it's signaling some downside to come right there. And you can see it yesterday right there. Just into that close, how the overnight went, that we're getting a roll in PMO.
ECB's regards says the ECB can be inventive on bank liquidity.
So I'm looking for this low down here. I'm looking for this. If it was today, be 395.52. I don't think it's going to be one day. I think it's going to take 2 days, 3 days, something like that.
Tick Strike allows you to actually hear order flow in futures, forex, and stock instruments.
And then just back on to Apple. I don't think that it matters what Apple's. I don't think it necessarily matters with what the price was yesterday at 9:30 in the morning. I don't think that it matters much. Here's the previous low, pre-market low at 405.01, right down here. And then I want you to also understand that Apple. I used to trade Apple all the time. Like for years, I traded Apple. And if Apple isn't putting some new product on the market, and we've traded to 172, it's going to be sell the news. Even if they have a great ER, it's going to be a sell the news kind of event. Take your money and run. We typically have sell in May and go away. We typically have 2 lows in May, one in the beginning of May, and then one the third week of May. So you're going to be expecting, no matter what Apple, no matter what Apple says, for that to be a sell. I guess if we got to 396 today, maybe we'll get a nice rip out of Apple from that. But outside of that, it's take the money and run. It's take profit and run on Apple, and that will impact the S&P 500. Got two. Let me just show you this. We've got two gaps to fill on the downside. Right here, we've got a gap below at 405.63 and another gap down below at 405.39. I want to show you, I posted this chart last night on the futures. Let's see if I can get this on futures last night. Give me a second here. I posted this on Twitter last night. So put this up real quick. Huh, I don't know why that's not showing up now. It's on another instance that I have. Why is that? Oh, there it is. Right there. I'm like, why isn't this not showing up? So I made this post yesterday on FinTwit.
Seeing PacWest resumes, trades down as much as 48% to a record low.
And so if you're trading ES, I made a post last night and said, you actually see where this thing was last night. I'd said it was bouncing last night. It was like bouncing here, and I was like, yeah, you're going to get another chance here to sell this right back down. So if you're selling futures, and you're able to jump on this daily, and you can see the daily on futures at least. Let me get rid of this. It's on FinTwit. So wait a minute here. You can already see the cross. The cross is already taking place right now. You've got the daily and the hourly trigger above. You've got price below. You've got price trading below both of those, and then of course staying below the 1 and 5 minute. So that target down below, I'm going to give you 2 targets for ES. First target's going to be 4044.50. And the next target down below that is 3990.25. Yeah, there we go. Hold on a second here. Already starting to sell right away. Didn't even take long for it to happen. Hourly trigger, or excuse me, this is not the hourly trigger. This is the weekly trigger down here. Below right there. Now revisiting the previous low on now revisiting the previous low at 40501. Whew. Morning, how y'all doing? Yeah, I had to sell. I actually sold futures. I was up last night selling futures, and then I had a sell order in this morning for the open on calls this morning, right on the bell. So you likely get
So just in correlation of the moves we're seeing in the S&P 500, analysts are saying that US stocks were set to slide for a fourth day as investors weighed the possibility of a pause in rate hikes by the Federal Reserve amid.
Yeah, I was talking to. I see Winky's in chat right now. I was talking to. So Winky was talking to me this morning, and I'm like, yeah, we're probably gonna start selling right off the bell this morning. He's like, God damn it. Usually I'll call Winky in the morning. I'm like, it's trend day. Sell the open. I should post that shit more often. I don't post that stuff on Twitter. I should post like phone calls with Winky every morning. Phone calls with Joe Donut every morning. I think they hate, like, I don't think that they hate me. I think that they're like, bro, we're doing this, we're doing that. And normally we're in line. We're both like, fuck yeah, we're doing this and we're doing that. And then so every once in a while, I'm like, oh, no, dude, it's trend day today. He's like, oh, shit. Some days I'm like, sell, 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 sell. I should do an update post to that ES post. Because it was pretty much like right on the line. No, trading 404.92 right now. I think the term I'll use for Apple was it's like based on pure principle. You sell Apple yesterday. You should have if you were like long Apple stock, you should have had just an auto sell. Like, yeah, if we ever get to 172, I'm out. Like, I am fucking out. Like, the most bullish of bulls would be like, I'm selling. There's no point. And I didn't catch it until after the close. It was like after the close, I was talking to my wife's boyfriend, and we were like talking about Apple earnings, and I'm like, I think it's tomorrow, or it's within the next 5 sessions. I'm like, I don't even know right now. I just stopped paying attention to it. And your wife's boyfriend's like, I don't know if it's tomorrow or not. And I'm like, I know, we're going to go look right now. So we went and looked, and I'm like, oh, shit, Apple earnings is tomorrow after the bell. So I'm like, I'm going to pop open a chart of Apple. And I looked at the chart for Apple yesterday, and I go, I'm on the phone with your wife's boyfriend. I'm like, dude, they sold that shit right on the open yesterday. I'm like, we're totally fucked. I'm like, it's like the principle of it. I think it came back on stream too for like the last 5 minutes, and I was like rambling on about it on the stream. I think I came back on at like 3:55 and was like, "Yeah, we might be fucked here." So hold on a second. Let me go through. So economic calendar, not much going on there. We're gonna probably talk about regional banks, the S and loan crisis. The one thing I'll say to you is this: the savings and loan crisis. I'll just get it out there right away. Savings and loan crisis did not impact our stock market. You're going to hear some people say that it did. We never went back through the entire thing to a previous low. So we did have some major lows. We did have stuff like hold on here. We have a blank chart here. We'll just look at it, I guess. I guess we can look at it. Hold on here. We'll just get this out there right away. So if anyone's out there panicking about the savings or like regional bank crisis, we'll look at it right now. But so here's our low. This is SPX down here. If it was the same thing, and now there's argument out there that the S&L was worse than the Depression, right? But it was like this. The whole thing, the entire thing was like this. So we actually never came back to check these lows. We didn't even check them. We just kept having higher lows through the entire thing. I guess you can do that on your own. You need me to show you that, but maybe you do. We can go there. So I guess if anyone's causing, and we'll talk about JPOW today as well. Let's see if we can get over to the 1980s here. Bring me the 1980s. Yeah, we never came back. I'll take this market right here. This is 1975. I'll take this market all day long. I'll take a savings and loan. I'll take a savings and loan crisis. Right? Never saw that low again. 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 And you know what we did in 87? We just ripped faces off. As a matter of fact, my father got rich. This is when my dad got rich right here. He became quite wealthy with this final. Believe it or not, he lost a lot in this, but he got filthy rich through all of this. That's what no one wants to tell you, right? Is that people don't get rich here, but they did. And even in 87, we never came back, right? We never came back here. 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 This one here was a bit of a doozy. But again, time in market, never came back. S&P 500, woo! You gotta love it. There's no, so even if we get an S&L style crisis, I don't know, maybe they're expecting this over here, maybe. But even here, you're talking, this is 210, 215, and this right here is $230. So we haven't had a squeeze like this, have we? And if we ever did have a squeeze like this, we know it's going to sell off, right? We already know. You guys might, I don't know how many of you know this, but during the .com crash, we had like multiple days of like Apple going up 5% in a day. 6% in a day, stuff like that. If you ever see something like that happen in the S&P 500, like if you see like Apple go up from 172, I don't know, to like 230 in 3 days or 4 days, that's likely a liquidity grab to crash. So it's not like came back down just now and touched our previous low down below here. Closed both of the gaps that were left behind on SPY. So we're going to talk about the S&L crisis. We'll talk about the banking crisis, regional bank crisis today. We're going to chat about it around 11 o'clock this morning. Like, does it actually impact the stock market? I mean, it's like throwing shit at a wall. We'll talk about that with JPOW too. There's like it's like you're like out there with your pitchfork, you're out there with your shovel, and you're out there with your I don't know, your torch, your fire torch or whatever it is. And you're like, well, we should crash because of the inverted yield crisis, and we should crash because rates are going up, and we should crash because of this, and we should crash because of that. We just had a crash, 3 years ago. So we shouldn't be crashing once every 3 years. There shouldn't be a crash. And we had a bear market, a silent bear market in single tickers and spec growth that actually began in December of 2020. So do you get like that, like a crash every 2-3 years? That shouldn't happen. I know that was sold. I remember in 2022, the first quarter in 2022, I might have this wrong, but the first quarter of 2022, it was like buying volatility as an asset class. We expect the volatility trade to only grow. Like, we're going to have a crash every year or two. And that hasn't been the case, right? May, June, we started to stabilize. By October, we were actually making inroads. We actually stopped truly crashing in June, May, June. I think it was like 360, 365, and then we went to 345. That's the same ballpark. You buy that shit. And then October, we had a low. And, those are all buyable bottoms. May, June was a buyable bottom. I believe that October was a buyable bottom, and then right up until this point right now, we're in May. We're in like May 4th, May 5th of 2023. So, just the whole point here is even like you can have, I'm fine with throwing shit against the wall. That's okay. And I think we always have to be aware of throwing shit against the wall or like risk to the market. The debt ceiling. I mean, you heard Jay Powell yesterday. I was talking with Winky this morning about this. Jay Powell yesterday pretty much had the same response that I had on here on stream. And Winky and I this morning were like, it's kind of like having that conversation, like a sober conversation like is being had right now or being purported publicly. Or the seriousness that we should take the debt crisis is kind of like us making material changes to our lives because aliens are coming in June. Right? Like, it's not happening. It's not ever going to happen. Ever. It isn't. So it's like saying, yeah, we're gonna crash the stock market because the aliens are coming on June 1st or something. Now the market will get volatility from that discussion and from why this is being created. And that's because we need volatility. We don't have volatility. We have to create it. Can't have like VIX go to 0. You have to like make shit up. Right? When you don't have something material, you have to make it up. If we sell off the debt ceiling crisis like the last week of May or something, you're going to see like news articles come out saying, you already know before it's printed, right? It's going to come out and they're going to say, you'll see like the red graphics on CNBC and you'll say, there'll be a news broadcast that says, investors and traders are concerned with the debt ceiling limit and they're being cautious right now. That's not true. We know that's not true. It's a matter of supply and demand, buying and selling. And then we'll tell you what the news is when it comes out, right? If we're at a bottom, if we're at like 360 and we get debt ceiling news, it's likely going to be good news. Make sense? If we're at a top, likely it's going to be a time to sell. It'll be considered negative news. So anyways, debt ceiling. We don't have that. It's not really real news, so you have to create it, is my point. SNL crisis. Maybe you could make an argument that the SNL crisis or an SNL style crisis for regional banks could result in summer Senate hearings, along with volatility for like some kind of summer Senate hearings, along with debt volatility and war volatility. But if you're like asking me a serious question on stream, like, Do you think we'll crash because of regional banks? I'm not on that boat. I'm not on that boat. Normally, it has to be something material. Now, saying that, yesterday when the market was closed, my oldest daughter is away at a K-pop concert, so I'm playing some Mr. Dad
56.8, 56.8.
or Mr. Mom or I guess whatever, Mr. Mom right now. So, I had to take a step away from like checking on the news and reading all these articles and all that kind of stuff on the presser yesterday. But I was a little shocked at the messaging that was passed along after the presser yesterday. And I'm always fascinated by the narrative that's pushed after these pressers. As a matter of fact, Barclays yesterday came out, and immediately Barclays was like, we're getting a rate increase in June. Like, there's just no way we're getting a rate increase. And that's the reason why you watch these things, is because you want to see what it really was. What really was the message that was given, and not the narrative that's being pushed by someone that's short the market. Like, hey, I'm short the market right now. I want to get paid. I'm not going to tell people I need to get paid right now. I'm just going to tell them that we're getting another rate increase in June. Right? So that's the narrative that you push to get the prices that you want. But I'm still digesting what J-Pow had said yesterday, but I was initially yesterday when he said that we have not paused rate increases, I was like, sweet. I was like, we're getting the rate increase and no pause.
2023 full report on the newsfeed for those of you that are interested.
So I was on board with that statement, with him saying that. And then as the
halts Western Alliance on additional information. So just to repeat that there, NYSE halting Western Alliance on additional information.
WAL, baby, halted. So, to my point though here is this, is as that presser, as his disclosures, as he talked, and then as he was interviewed, he became less and less convincing. Usually I leave a J-Pow presser, and between the statements, like the statement did not say we're getting another rate increase. That's plain as day. The verbiage was removed. You can't deny it. It's a fact. And that does signal pause. He came out firm, and then he became less firm as the interviewing continued on. And that was some concern for me yesterday. As the day ended, as I was trying to think about everything that was said from yesterday and and also the statement
and market profile levels by signing up at To The Tick.
Even the statement that was released yesterday that he read off and then added some color to it. It reminded me of there's been multiple times in the past that I can recall Jerome not being. It's rare, but when it does happen, it's usually not good. That's my fly in the ointment. If you guys that are bears out there, collapse bears, if you wanted me to have a fly, like if you wanted me to be bearish, it was that. It was. As a matter of fact, if any of you were trading before 2020, before COVID, when COVID first began, he had an original presser, and it was like put together in 5 minutes, and you could see that he was out of his element. He was very disheveled. He didn't know. You could basically see that he was a deer in the headlights, and I felt like that yesterday. Or I didn't feel like he was deer in the headlights yesterday. But his body language, his acid reflux, his general disheveledness, what it really made me think of was someone that is saying things that he thinks will come back to haunt him. one way or another, that there's something there that's going to come back to haunt him, and he didn't do the best job hiding it. And I know that it's a public persona. I know that he's a consummate professional, all this stuff. But even so, your psyche sometimes gets in there. Like, your psyche will get in there and just show. You can even see the last presser he had when he was put to the firing pin or the firing iron or something on whether we were getting more rate increases. He was firm. He was like, no, fuck no, this isn't over. And he was like, oh fuck no. He was like that all through the beginning of the year, all through the beginning of the year. He's like the stock market's saying we're not going to raise. It's like, you guys are smoking crack. So that's him being firm, right? When he's firm in what he's saying, the market likes that. Market likes Jerome Powell when he's firm, either saying rate cuts, firm in rate increases, firm in we're pausing, not pausing with rate increases. Yesterday, he was, I did not like his wishy-washiness. Let me know in the chat if you think that too. I don't know. And then, of course, I'm watching yesterday how it was spun, and I was like, man, I didn't get any, or not any of it, but I didn't catch, or I didn't interpret that presser and that press release how it's being spun right now. Usually, I'm in agreement. Like, usually when a press release comes out and the press release and the presser and all this other stuff comes out, I'm like, yeah, it's kind of all in line. This one specifically, I was a little, I don't know. I was like, and then the weird part was Barclays. I'm like, in my view, I'm going to be honest with you. In my view, from that presser, you won't see another rate increase until September. I don't think you're going to see one. I think we're done with rate increases right now. I don't think you're going to see one. I think you'll be lucky to see. I think if you're going to see a rate increase this summer, I'll put a caveat on that. If you see a rate increase this summer, it's going to be that the debt ceiling shit goes away. It's going to be that there's zero volatility all summer long. You're talking about, like, we have to go to like 380, 390. If we go to 380, 390, you're getting a rate increase. I'll tell you that. I think you're smoking fucking crack. I'll be honest. I think you're smoking fucking crack if you think that we're going to get debt ceiling volatility, regional bank volatility, and then a bunch of rate increases, and we likely have other institutions that'll fail along the way. We likely have we likely have commercial banking that's going to rear its ugly head at some point, late summer, midsummer. We talked yesterday about if I was a bank CEO, if I was like a regional bank CEO, and I can get a bailout, there's probably another industry or two that's going to be looking for a bailout in the future. So, if you're a commercial real estate, if you're like a if you're like BlackRock, and then you were like a mid-sized commercial real estate firm, probably like, yeah, how do I do a corporate rating of a mid-sized real estate firm? How do I make those fail? And how do I get their stock price for $1 and a bailout along the way? If they're giving them to these regional banks, we should do the real estate market too, right? Or commercial real estate market. This is like when greed kicks in. So like when you like this corporate rating that's going on right now, to me, I'm smelling shit somewhere. I'm straight smelling shit. I'm like sniffing around going, man, I've seen this before. Like this smells like horse shit to me. And I doubt that he can say that in the presser. I don't think that he's going to come out in the presser and say to you, yeah, we're expecting 2 or 3 more crises. It's not guaranteed, but there's a possibility of 2 or 3 crises coming down the road here that we don't know about. And so we're going to pause rates. Now, if he said that yesterday, Fucking stock market would go to like fucking zero tomorrow. Like we'd be down like 10% today. So he's not going to say that. And he's kind of riding this, and that's my ultimately my point is. He was so wishy-washy yesterday, in my view, and I think that they know that we're going to get a crisis that we don't know about sometime this year. You're going to get something. So if we get that crisis, if that crisis does present itself, how could you think we're going to get another crisis or two and they're going to keep raising rates? I don't know, man. I don't think so. Although I want to get above the rate of inflation, I don't think we see 7.5 until next year sometime, maybe even farther out. 2025, maybe we see 7.5 by then, by 2025. I think they support, just like they did the regional banks. I think they're going to support all along the way and do whatever they can. And the only other whammy in there, again, is right back to the politics. You'd need to have like a Reagan-esque
ambassador to the US says South Korea will make an effort to engage with China soon and will also seek opportunity for trilateral cooperation with Japan and China.
You need to see some kind of like Reagan-esque change. Whether that's good or bad, I don't care. I don't know. I got my trader hat on, my Main Street hat. Not my Main Street hat. And that would be something where Jerome's probably going, yeah, it's like a 15% chance that I'll never raise rates again. Like I'll say that I'm going to raise rates. We'll be fighting these crises. We'll roll into a political season. We'll get a regime change. I want to take a break. And, you know, it's like 2024 rolls around, 2025 rolls around, and you just don't see it during his regime. It's possible. It's not a high probability, but it's like 20-30%. You think Paul got hurt pulling the ball gag or the plug out before his speech? Yeah, I was not. Most in previous instances of him giving us a presser like that, not long after he's giving a more firm speech. I didn't talk to Winky about that yet, but not long after you get a more firm speech from him. The market will demand it. Even if they're not telling you publicly, market does not want that speech. No matter how it was spun to you on social media. If you're a market participant with any kind of money, you didn't want to get that speech yesterday, in my view. It was sloppy. Yeah, Winky wants to buy KRW, and I think Binky wants to buy DPST, right? With leaps on them or something. DPST, I think, was trading at $4 this morning. Anybody see that this morning? Yeah, so we're trading right now 405. What am I expecting here? Max down right here, 397.50. Right down in here so you can see it. We're not too far away from that. If we can get down there in the next few days, this is all I'm expecting. Like right down there. That is bottom. We're very close right now. So this is all I'm expecting on the downside. And I mean that's total. Like we're gonna rip some faces off if we get down there. So I think it's 396. This is the monthly trigger, but I think it's 390. I think I'll just write price target down here. I think it's 395.50. I said this morning. Price target. I'll just write it in there so you know where it is. Price target between now and Monday. Right there. Next week sometime. Somewhere in here. Right there. Not too far away from it, are we? And breadth should be at a bottom down there too. So if you want to see breadth get down there, that's where breadth bottoms out. Right down there. Had the cross right above here. This is the 1 minute chart. Let's look at the 5 minute chart real quick. Yeah, should still go down. Price is still below 406.40. Unless price can get above. If you're looking to take a long here as a bull, a recovery trade. If you're looking for a recovery trade, you're looking for price to get above the white line that I just drew. For this line to come over. And you're looking for price to get above here. Recheck here on the bull cross, the bull plane, and then we'll go up right there in a Friday. That's what you're looking for to take a long bull trade. Until that happens, price is still below 406.35 right here. Yeah, I mean, I like DPST there. I'm not anti DPST taking that trade. I'm down with that trade. DPST's trading what? Is that the lowest it's ever been or no? Pretty close to it. I think DPST got down to like 3 and change, 380 or something like that. Let's show that right there. Yeah, can I chart DPST? Like, do you think DPST can go to negative? I think that's the question, right? Can they? We can blow it. We can blow up DPST. We've blown up ETFs before. Absolutely. We can blow up DPST without a doubt. We can make it go to 0. They'll halt it. They'll give them a warning, and they'll put them on a. What do you call it? I forget what it's called, but it's like I forget what it's called on the top of my head this morning. A little tired, but they give them a warning. They're like, you're on probation right now.
So Western Alliance becomes the latest US bank to explore a potential sale, according to FT. So we did see their stock get halted by the NYSE, awaiting additional information. No official confirmation yet, but according to the FT, Western Alliance becomes the latest US bank to explore a potential sale. So we'll get the FT piece out as soon as possible.
Dude, regional bank rating going on right now in the market. Regional bank corporate rating going on. I wish I was rich. Like, when this stuff's going on, I'm like, fuck me, man. Like, I would love to buy one of these banks. Like, I wish I had like $300, $500 million, and I could bid on one of these banks. Bounce down below at 404.35.
So Western Alliance halted again after shares sink 30% on the FT report.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
In 2024 under the Republican debt limit plan versus 2.23% otherwise.
I'm looking at KRE right now.
Moody's Analytics also adds House Republican debt limit plan would meaningfully increase the likelihood of a recession.
Yeah, KRE. What was that low? 27.50. It's gone down to $14 back in 2009. What do you have for a price target, Winky, on KRE?
So Moody's also adds the Republican plan would cost 790,000 jobs by the end of 2024.
$20 maybe? Price target down below in the Qs of 314. Dude, I got some really bad what do you call it today? I got some really bad allergies.
At 10:30 a.m. Eastern Time, we get the EIA natural. Just seeing that Western Alliance Bank has hired advisors. So according to the Financial Times, Western Alliance Bank has hired advisors to explore its options.
What do you guys think? Winky, ask the ask the
Eastern Time, we get the EIA natural gas change forecast 52 BCF on the prior 79 BCF.
ask everybody if they think that we're gonna get the same thing happening in commercial real estate. Consumer defensive up this morning. Coca-Cola's up this morning.
Just seeing that the New York Stock Exchange has resumed Western Alliance Bank.
Pepsi is up this morning.
And have again halted Western Alliance Bank.
I'm also paying attention to oil and gas, of course. We're almost seasonally started, or we're going to start seasonality for energy companies. No, we're not there yet, but we're close to it. Got some basic materials up this morning as well. Newmont Corporation is up 2%. Martin Marietta Materials is up 6% this morning. That's that same industrials and materials trade for late spring into early summer. Real estate's holding up this morning as well, believe it or not. We're talking about how the next one is probably real estate.
And we have posted the Financial Times piece on the feed for all those interested.
Netflix up 1.14%. Restaurants still holding strong today. Yeah, specialty real estate's up today. To run this scanner today. See if anything's popping up. Huh. Dash and OSCR still on my radar right now. Dash holding itself up right now. OSCR coming out swinging again this morning. Talked about them already with you. OSCR. OSCR down 1.22%, but has a bid on it right now.
At 10:30 a.m. Eastern Time, we get the EIA natural gas change forecast 52 BCF on the prior 79 BCF.
Let me know in the I'm reading the chat right now. What do you guys think about so how about this? If you're watching or in chat right now, do not regurgitate anything that you read on social media or on the news. If you read the press release, hopefully you read the press release. I read it to you yesterday, and then if you watched the presser in full yesterday, what was your takeaway without regurgitating what somebody else said? Let me know in the chat. So Dan Cornish is making a good point. He said, I know a lot about CRE. Lending has stopped. Many tenants will cut space in half as leases renew.
Likely to run out of cash to pay bills on June the 8th.
Oh, come on. Stop with that bullshit. I know a lot about, or Dan Cousins saying, or Cornish is saying, I know a lot about CRE. Lending has stopped. Many tenants will cut space in half as leases renew. This will take 1 to 2 years to play out. Dan, do you think that I was reading an article about these commercial spaces being converted into residential living spaces? Do you see that happening as well, or no? This time is different. Dude, when he said that yesterday, Ash,
imports are to reach a 4-year high of 2.42 million barrels per day in May, according to sources.
When he said that yesterday, when he said this time is different, and he said it too in the meme format. He didn't say it's different. He said this time is different. And I was like, this guy. I mean, I'll be honest. I really liked that. When I heard that yesterday, I was like, that's my guy right there. He made me happy when he said that, because then you know that he's drinking beers somewhere, snorting some yayo after he bangs out yelling, and he's cracking meme jokes with his buddies. He's an old guy, right? He knows this time is different. Yeah, we're talking about CRE. I'm assuming that CRE, we're talking about those. I don't know all the tickers off the top of my head right now, but a bunch of them are like in New York City. Like one of them's I forget all the names. I think it's Simon's one of them, New York City. So Dan's making a good point. He's saying that the sublet market is exploding. Did you really just get a VIX ad? That's crazy.
1 minute remaining.
Just got a volatility ad. Yeah, VIX just broke through 2097. Next target above on VIX, 2284. John Haggerty's saying no rate cuts. No rate cuts. We're going to keep raising rates. I'm in disagreement with that one. So, John, we're going to revisit this in June. I think that's the next rate decision is June.
54, a build on the forecast of 52 BCF.
To remind me of that in June, John. Like, be like, hey, Kat, remember when you said we weren't getting rate cuts in June? Or not rate cuts.
This stream is sponsored
Oh,
by
I don't. Yo, maybe I think we do agree.
3 daily pivot points, Fibonacci, and market profile levels.
Maybe I do agree with you. I don't think we get rate cuts either. I think we get a pause until September. So maybe we're same page. It's like he was trying to say it's a pause without outright saying it's a pause. Yeah, I agree with that statement. Getting close to the top of rates, no cut. Ultimately, I want 7.5, if not 8.
EIA natural gas storage report on the
Minimum.
for all those interested.
Yeah, my wife works. Party Bonza, saying my company is shrinking its new space by 50%. My wife used to be in person, and she went remote and has never looked back. And I know there's like a mantra that people are going back to work. I think that it does apply. I don't think I can say, like, looking at my wife saying, that's anecdotal evidence. But I know that her company will never go back. They have no plans on it. Well, whoever they can keep remote, they are keeping remote. I think there is a percentage of people that will never go back to an office. But I have a friend with a software company. He wanted to keep his offices open all through COVID. He was anti-closing his office space down. He owned these office buildings. But furthermore, he has foreign workers. He's got a lot of Indians that work for him. He's got offices in India and here in the United States. And he wanted this guy's not a nice guy. And his reasons for, I don't even want to talk about it. I'm just going to stop talking there on that topic. This is kind of gross what he does. Powell said no cuts. Inflation is higher than they are reporting, and companies cutting jobs. Longer-term goal recession coming. Commercial space is effed. Conversion to residential should happen. Yeah, I was wondering if that would happen. Conversion into residential. Yeah, he is a dank memer. Yeah, you're saying that commercial will turn into residential space, thus bringing markets down more. Supply on the market. Yeah, and then what about the impact of? I guess you need to
down 2.3% after EIA reports a build in line with estimates.
You need to get if you're not going to have people returning to work like they were once doing, that you're going to need inputs are printing pretty good right now. If you're not going to return to the office like we once were, and I hear the not Better Business Bureau, the Rotary clubs and I forget what they're called now, but all these business groups are saying, well, we want people to go back to work so they spend money, right? In these places, we don't want to have derelict downtowns. You spend all this money on the infrastructure and stuff. They would have, if they're not going to reopen these offices, they have to get people living down there, don't they? In these urban spaces, so that we can at least have some kind of commerce. Conversion of modern large buildings is not practical. I've heard that too. I've heard that argument against converting these buildings into retail spaces, that they can't be. Their internals are not built for like bathrooms and electrical and all these spaces. That's not possible in some buildings. Housing starting to show cracks as well. I don't know. I'm in housing. Bebop saying isn't housing starting to show cracks as well? I don't think so. I think it'll take 5 years. I'm in agreement that once they start selling, it's rampant. that housing prices come down rapidly and rampantly. But this cycle in particular is kind of hard. Most owners that I know have been doing this for the last decade to 2 decades. Most homeowners and developers are in the real estate market for the past at least decade, if not 2. So you probably would be shocked at the hundreds of percent some of my properties have gone up. So if we got a if we were down 100%, well, not 100%, but if we're down like 30% or something, if I bought a house for $100,000, it's now worth $800,000, or $200,000. It's now worth $800,000 or $300,000. Now worth $900,000. I mean, my rates are low, and I think that's the key, right? That's still why we have a tight housing market. Is people with money. People with money are just trying to escape it all being taken away. So anyone with money is like, protect my money at all costs, outrun inflation until the next bull market comes. I'll be honest with you, that's my whole thing. Like, my whole thing right now is protect my wealth. Do not give my wealth back to the government in taxation. Do not default. Don't give it back. Don't make bad, unwise investment decisions. Do not buy anything that depreciates. Do not buy anything with high rates, or for me at least, that's what my whole mission is. My whole mission personally is retain what I've made through this cycle until the next bull run in the economy and the market, like the next bull market that we have, to maintain. That's my whole thing. I have no other I have to do this. That's wealth preservation is probably if you had 2 words here, it's wealth preservation. If you can do that, you're like one of the last sitters on the chair, and then we enter that next booming economy, and you go through the next cycle.
Saudi Arabia sets June Arab light crude oil OSP to Asia at plus $2.55 a barrel versus Oman and Dubai average, according to sources.
You start creating generational wealth that way. So I think that's just the name of the game. Nice big fat target down below here.
Gains, yields down 14 basis points.
401.50.
5%.
Yeah, he did say it, didn't he, Johnny? Yeah, there's some truth to that too, but it's not like, so the real estate thing is like this. Let me simplify the real estate thing. So I was talking to Justin. Hold on, what's his name? I was talking about him yesterday. I was talking to him late night. Let's see what's his name. Is it Justin or? I don't talk to him a lot. Let me check my messages. I never check my messages anymore. I haven't been on FinTwit a lot. I should just turn my messages off. Who was I talking to here? What was the conversation that we had? See if I can find it. Conversation that we had. I can just read it right now. Go back and read it. I don't see it. We had a conversation, and the gist is this: is that in VIX now trading 21.11. The idea here is that when we're in a bull market, when they turn the money printer on, and the market just keeps going up and up and up and up and up.
The banking system has substantial liquidity and deposit flows are stable.
New cycle of bulls come out there, and markets just pump. And liquidity re-enters the market in scale. You'll know it because if you buy calls, no matter where you buy them, they just print eventually. Even if you fucked it up, they'll just print. Like a week or two later, they're going to print. When you're trading like that and you're just like, hey, I've got a fat bank account, I made $3 million this year. The key there is to remove your money from the market and invest in something that appreciates. You're kind of locked into that. Like, who said that just there? It was Bebop? No, it was Party Bonza. If you can put that money into an appreciating asset, and it's appreciating, right? You're like going through that cycle. It's appreciating. You take your money out of the market, and then you enter this next cycle that's a down cycle. The first place that the Fed goes to remove that money is in the stock market. Well, then they come after you with taxes, and they come after you with rate increases and higher interest rates, that kind of stuff, to remove the liquidity from the system. And you have to try to like weave and duck and dodge that. So you can make it until the next cycle. So you actually start to cash that stuff in. It doesn't actually ever come back, though, is my point. Is if you bought a house for $1 and you go through a cycle and it goes to $10, it typically doesn't go back to $1. Financial or GFC it did for a lot of people, but for most people, it doesn't. It doesn't go back to $1 ever again. You'll be told that it does, but I had people in stream 6 months ago telling me eggs will be back at $1, and I'm like, you'll never see that again. That's gone. Like, I'm too old now. I know that it'll never come back. It's like 30-cent hamburgers at McDonald's. You'll never see them again. Gone, 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 gone. You'll be told that it'll come back. Your politicians will tell you that it'll come back. That's just not the case. Yeah, Fed meeting's on June 13th. Yeah, Dan, I own properties. I'm not selling shit. I was on, Dan, I was preparing to sell just pre-COVID. Then I felt fearful for my family, so we held through all of COVID. I had one property that was halfway done. I wound up doing myself. Then I bought another property that I had written a construction schedule for, priced out contractors and the cost of goods to build it. It doubled. And so I put that one on hold and started doing that myself as well. And so we haven't sold anything. And I don't think we have any plans to sell. We don't have any plans to sell. And even now, I'm even more fearful than I've ever been about real estate. No, I don't. I think I have to bequeath to my children homes so they can get a leg up. I think we're at this time when you'll never own a home again unless you're in right now. I don't think you'll ever own again. Maybe you might, but you're gonna need to make a lot of money to get in that race. Unless it's given to you or passed along to you. Money is passed along to you. It reminds me of Korea. Korea's like that. Korea's if you get married in Korea, your parents usually buy you a home. Parents will spend like 300 grand on you, $200,000 on you in Asia. If any of you guys ever lived in Asia, no, we're turning into that economy. So if you have children or if you're a young person, maybe some people from Asia that are in the stream could chime in on that. But Indians know about this as well. You pass along wealth to your children. We don't do that here in the United States. It's like pull up your bootstraps, put down the what do they say? Put down your latte and your I don't know. I forget what the meme is. Your avocado toast, and do it on your own. I think those days are over. New York City will go full Mad Max. I didn't say, and check out Ball, Ball. Yeah, I saw packaging was up this morning. I saw that packaging was up across the board. The whole sector was up this morning. Stacy is saying residential may not be fine when people start losing jobs and variable rates. I looked at how many people, nice big squeeze in the SPY right there, on the tag of S2.
Western Alliance says the report of a deal talks were absolutely false.
I heard that argument, and then I looked it up, and nobody's in a variable rate. They are on their credit cards and their vehicles, but not their homes. It's like less than 1%.
Some upside in S&P after that.
That's a lot of the reason why people aren't selling, right? Who's going to sell their property? Like, who's going to sell a house when they're locked in? I want to know, like, why would you sell your home right now? You got like a couple points, and you're locked into a rate. Like, why would you sell? Let me know if you're a homeowner and you want to sell and buy something else right now. If you're in that process, not a first-time home buyer. I want to know if like you own a home and you are in the actual process of buying a home. Yeah, South America, they just let you build a shack. I don't know how people afford fast food anymore. I don't buy it. I don't eat fast food. Very rarely. I might have one fast food meal every 3 months. I don't eat that stuff. I gave up fast food, man. I can't do it. Yeah, China's like that too, where I'm saying. The scanner that I use doesn't have a name. It's I built it myself. And it looks at their year-over-year profits, their guidance every quarter. It looks at real money coming in. Are they producing something real or not? Their forward PE ratios builds in, so we're not knife catching that it's trending up, that banks are actually buying it while the market's selling off, that kind of stuff. I've been posting those pics on Twitter for 3 years. I think Joe Donut and Quinn have been tracking them for the past 3 years. I think I have like a 90, what is it, Joe? Like 91%. Every single one of those tickers have printed like multiples, right? Like 200-300%. They've had one loser in 3 years. That's how good that picker is. They track him in the background. Yeah, you still own your house in Shanghai? I've got an uncle that works for Google in Asia right now. He hasn't sold either. He's sitting tight. Yeah, we did the family trust. Yeah, my uncle lives in Hong Kong. Thanks, Permabill Tom. Thanks, Brandon. We read what people are saying in Twitch. Trade catcher saying, I bought a piece of land building the house myself. It's very hard to get a house these days. Better do it yourself if you're capable. Trade catcher, I agree with you 100%, man. I was living in the West. I have my background. I lived in the West in very wealthy communities, like most wealthy communities in the United States. That's where I lived. Vail, Park City, Santa Fe. And I was robbing Peter to pay Paul. I was making I was making close to mid six figures, and I was poor. I was like, well, not poor, but like I was like one accident away from losing everything. That's how the system is built too. It's for you to, like, our system is built to be in debt. Our tax system is built for you to be in debt and get tax breaks. And when you kick off, they want to take it from you. That's our system. Our capitalist system is, you work your ass off, we will treat you well, and if you make any mistakes or don't invest your money wisely, you'll still have a great time, but the moment that you stop producing, you're out, and your wealth gets recycled to the next young person out there. So that's trade catcher. Dude, it was not easy making the decision to move where I live now and do what I did, but I'll be better off for it, and my children will be too, for making that change. So trade catcher, I'm with you, 100%. First time chat, David0402 is saying, tough one for me. There are places you can find them. Like, I'm in Detroit, but there are places all over the country that you can find to build your own community, and it doesn't have to be Detroit. There's places in Washington. There's places all over this country, California. It doesn't matter where you want. You have to look and find them. Most regions in the country have places. If you look, you just have to put the work in. Yeah, PepsiCo holding up the queues. Yeah, you had Chick-fil-A. I'll admit, like, when I do go out and get fast food, I will hit like a Chick-fil-A, or I'll hit a what's the other one? There's one that I went to. The last fast food that I had was hold on, I'll tell you what it was. But I'll tell you why I went there too. This is so if I do eat fast food, if I do decide to eat fast food, it's usually like there has to be like a reason, like why I'm going there. I went to Culver's. And so I went to Culver's, right? And the only reason that I went was because I was at a Home Depot on a Sunday morning. It was like 9:30 in the morning or something. They were just opening. No, maybe it was 11. I don't know. It was the morning, but it was quiet. Nobody was at Home Depot. Culver's was dead. It just opened. There was no lines, no car lines, nobody inside. And I was like, fuck that. I'm going over there and getting a burger. I was like, I know they're going to make it perfect. I know the fries are going to be perfect. And I even drank a Coca-Cola, which I don't drink. So I'm like, I'm going to get a Coca-Cola, I'm going to get a burger and a fry, and it was awesome. So if you're like, yeah, I go to Chick-fil-A every once in a while, I get that. I'm down with that. I feel you. Yeah, insane amount of land that's not used. Property value doesn't go up. Now it is. Yep. David saying own 20 rentals, house locked in at 2.75, but a mini farm on 16 acres with 30 by 50 shop right at the edge of town. Walking this middle school tax county is available. Seriously, consider selling a couple, 3 rentals to pay for the difference. Yeah, so David's saying he's considering. Yeah, that does sound juicy, doesn't it? But you have wealth to sell that. I wouldn't be anti that. Is this something that you'd own forever, David? The Holy Rip our 412Cs, manufactured bones, bust is keeping people working and the system moving. Left CA, moved to Midwest after GFC, much better. Yeah, agree with that. Best to stay out of debt, period. Chipotle. Dude, I can't do Chipotle. So I lived in Denver, and well, not Denver. I lived in Winter Park, and when Chipotle was a tiny ass company, I remember Chipotle when they only had a few locations, and they had like a spread, like they had a whole spread, and Chipotle was amazing. Like before McDonald's got involved, Chipotle was banging. You go to like a Chipotle, and they would have. Like whatever they offer you now, it's like a quarter of what they used to have. And I never went back. Once they started to expand, it was never the same. Never the same. But I get you with the Chipotle. You're what they call a slumlord? I have a lot of slumlord friends. Did I ever have moral convictions about rentals? I had rentals back in the 30s. Conflicting thoughts on it. Just curious, no judgment. I shouldn't say friends. I have a lot has changed in the slumlord market. I remember when we had foreign investors, and then I remember the Californians were getting involved in it. It was kind of like a big thing to have. If you had like 20, 30 rentals, kind of a big deal. A lot of those people moved into, it was weird. There was this like transition where anyone with like 20, 30 rentals was moving up into the 100 to 300 rental market. And long-time slumlords that owned hundreds of properties were getting out. A lot of guys that I knew so like a decade ago, 5 years to a decade ago, anyone that owned 100 to 300 properties was trying to get out of the housing market or the rental market. They were seeing 20% profits per year getting cut down to like 10 to 15, 10, 12%. And then a lot of governments at that time were changing policy for renter rights in terms of lead, water, upgrading properties for weatherization, stuff like that, tenant rights. And so there's like a generation of real estate investors that were getting out. And then a lot of the people that I knew that had 10, 20 properties are moving into the 100 and 300. I thought that was risky at the time. I was like, why are these people all wanting to sell at the same time? Those people that went to 100, 300 rentals, they made bank. There was another lull that took place last year, I think. There's some COVID time in there that's kind of blurry. But then it ramped up again where anyone with 100 to 200 properties, they started selling like hotcakes, but that was too large conglomerates for buying those up. Privately behind the scenes, not on market stuff. These are like real estate groups. So I'm in real estate groups that are not public. They're private groups, and there's a whole entire off-market industry of rental properties that are bought and sold between investors. Not everywhere, but there are markets around the U.S. that does take place in. Do I have morals? Yes, I've seen both sides of the coin. I've seen great owners get fucked by tenants, and I've seen horrible owners fuck over tenants. I've seen both sides of that coin. And I've actually been involved. I was involved in a case, in a civil case once where I've seen the worst tenants too.
The US is to sell
I'm not callous about it.
$57 billion in 3-month bills on May the 8th to settle on May the 11th.
It's kind of like
The
Airbnb.
US is to sell $48 billion in 6-month bills on May the 8th to settle on May the 11th.
Some Airbnb is good and some Airbnb is really bad. I could tell a lot of horror stories. We should do that sometime. I don't think that's a conversation for right now, but in terms of morals, maybe you're wondering about like. So for myself, I have no problems. If I work my ass off, like someone always has to be a janitor. Someone always has to be a mechanic. Someone always has to be a CEO. I'm not for CEOs making 100 times what their employees are making. Like the obscene, like the whole thing that took place in the 70s and 80s with taxation. It started in the 50s and 60s. I'm against all that. I think you should have wealth, but not like we've had this conversation in previous live streams. But if I work my balls off and I'm able to buy a second home or a third home, there will always be a need for rentals. I know some people argue there shouldn't be landlords. That's a big topic right now in England and in Ireland. But some people want to be a renter. I know people that want to rent. And if I work my balls off and I can afford to buy and renovate and provide a rental for somebody, I don't see anything bad about that. But I do see the other side of that. I do see the other side where I'm just rich and I have the ability to just buy up properties, and then I treat tenants like shit and I don't renovate. There's a whole bunch of other stuff there too. I do the bare minimum. I only do what needs to be done until it gets taken to court. I know all the scams that are run by realtors, or not realtors, real estate owners on tenants. I know them all. I've seen them all. I've never been that guy. Personally, I like to provide a good service, and it's a way for me to keep my wealth from my hard work. I got no problems with that. I believe in the capitalist system. I know that right now it's really warped. I know that it's been mutated for extreme greed. I don't agree with that aspect of our capital. Well, what's our capitalist system has become? Our tax structure that was changed was huge. Reagan was a big part of that. So I don't know what to say on that. My morals on real estate. But I've seen bad slumlords, man. I've seen bad ones and I've seen good ones. I've seen really good slumlords. I've seen really bad slumlords. I've seen both. BAC is officially back at COVID lows. Woof. Haven't been to IHOP in a long time, man. Decades. Yeah, Theta Slayer is saying don't sell rental houses unless you have to. I made that mistake. My dad did that. My dad sold. So how I got into, or why I got into, it is because my father, when I was young, he owned. My father went into a depressed area of Boston, and he bought. We're not done going down, folks. He went into a depressed area of Boston back when Boston was the combat zone, right? Boston was a shithole one time. New York was a shit. I know people will be like, New York's still a shithole, but it was a real shithole one time. Like the Battery and places like that. I mean, it was like Snake Plissken shit. Pussycat theaters, people shooting up heroin in Penn Station. Santa Monica was the same way. You can find these places anywhere. Or at least real estate was dirt cheap at that time. That's kind of why I'm here in Detroit trying to do what my dad did. Now, my dad, he sold. He never should have sold. He owned triple deckers in Boston. He bought them for like $100,000. They're now worth millions. Should have just held. So no, I don't have any plans right now to sell. I understand people love Chipotle too. I can't. I've seen that too. So I had my father-in-law owned a property in California, and his work takes him around the world. He bought some properties in California. And he's like, you know what? If I get moved to another country, I'm just gonna keep them and rent them out. That's the other thing too. You got scams there. If you own property, if you ever want to own a property to rent out, and you are a good landlord, you can get salty too, right? Property managers, scumbags. In general, scumbags. Realtors, scumbags. No offense if you're a realtor or property manager, but I've met some real scumbags. Dude, I know property managers that won't talk to you if you don't own 20 or 30 properties. My father-in-law had a realtor that was renting out properties for him. She was a meth addict, and she was telling him that they weren't rented out. She was renting them out and keeping the money. What else have I seen? I mean, I know that you can't like cry for a landlord, but they run into all kinds of shit too. Where a tenant runs into problems, so don't property owners. Counties can be brutal. City can be brutal. Neighbors can be brutal. There's all kinds of there's risk there still. I'm not gonna paint it as all being peachy. You paint like outside like a landlord. Fuck them, right? A lot of landlords takes 10, 20 years to pay back houses. Not all landlords. Some landlords are able to buy it with cash and then you refinance it and reinvest that money. That's how a lot of guys get started with multiple rentals. We starting to squeeze here, baby. Starting to flatten out right now on the 1 minute. Let's check the hourly really quick. We're 21.39 on the VIX right now. We'll see if we can roll it or turn this around for a little bit. A little bit of a relief rally, maybe. I'm going to warn you here. This hourly trigger has come down now where the daily trigger is. This is a hard sell area above here. Right up here. Oh, I got to read something for red. Hold on a second here. Oh, nice. Winky wants to come on board. Woohoo! All right, Winky, hold on, brother. Hold on, brother. Winky, so I'm so stoked right now. We are officially going to have my man Winky on the live stream. I think this is a first for us. We're trying to get, I want Winky on more often, so hold on here. Give me 1 second here. Okay, so Winky, I am going to send you a link to your Proton. Squeezing higher right now. Oh, yeah, baby. Hold on here. We're going to have Winky on. I got to get this all set up here. Winky's all pumped, dude. I'm so stoked that he's going to be on. Oh, let me see. Hold on a second. I got to change some stuff here. Collab cam. Well, let me open that up right there. Where's the collab cam at? Okay, right there. Dude, we're gonna put Winky on. I'm so stoked right now. Should I make his screener bigger so you can see his face more? Hold on, let's just get him on real quick. I'm so stoked. So excited. It's my bro right here. I'm so excited. I am totally pumped right now. Okay, so shared video source. Hold on here, main display. I think stop sharing main display so you can see the main display. We're gonna dude, I got so much shit to ask him. publicly. I can't wait. All right, Winky. Boom. I just sent you a link. Let me send him a text real quick. Oh my God, we're getting Winky on. All right, let's see. Let's see if we can get Winky on. Maybe Winky's maybe he's naked right now. We can catch Winky naked. So stoked right now. Let's see if he joins us. All right, we're gonna wait for Winky to show up right now. Hopefully we can get Winky to go on a rant. I want to hear Winky talk. Yeah, I want to see him naked. I hope he's like sitting in front of his camera and then he like gets up to walk away and he's wearing like boxers or something. Oh, wait a minute, here he is. Here he is. Hold on. Woohoo! Oh, dude, Winky, turn your camera on. Turn your camera on, Winky. Hold on, let me see if I can hear him. I'm showing him on stream right now. Winky, say something.
What's up, guys?
Oh, there he is. Hold on. I tried to show him, man. He's not showing his face right. Hold on. No white paper. We're not showing the white paper. Hold on, Wink, brother. Say something again.
What's up, guys?
All right, you sound good. All right, so we got Winky, and he's got the crawl symbol down below there. How you doing, Winky?
Pretty good, man. Well, I woke up to Paramount and QCOM in my stock portfolio, so you could guess how I'm doing, but it's all good.
Yeah,
it's all good.
Are you completely upset about Paramount or?
No, I mean I'm gonna buy it at 15.20. I'm gonna buy some more. I mean, whatever. It's gonna go up. I don't care.
Do you think any of Paramount has to do with the writer's strike or just their ER?
I mean, I think, like, honestly, it's just that all they have is Yellowstone and Star Trek. That's like their entire business. But that's worth money to somebody. Probably not as much to them as it would be to, like, I don't know, a company with like a real strategy.
Are you hoping for Paramount to be bought out for that big rip on it or no?
Yeah, I mean it's it's essentially an acquisition thing. Like
Yeah.
same thing with WBD. I don't think anybody can really make an argument that either of those are sensible standalones.
Are you going to add to your Paramount position or no?
Yeah, like 15.25 probably.
Yeah.
That's about where I would even start at. I'd do like 10% at 15.25 and just see how it reacts.
We bought our Scott Volatility Wiz and I traded Paramount for acquisition as well, but we took the money and ran when it was down there at like $15. We ended up buying some last year, and it was like, it's just gone up enough to take the money and run.
Yeah, you can kind of get into some channels with Paramount. Like it doesn't really like being above 24. And so far, it hasn't really liked being below 15. So,
we bought
like
it. Good.
Go ahead. Sorry.
No, you continue.
Yeah, that was all I was trying to say was like it basically just kind of bounces around in that like essential like $9 range. So if you can get it like let's say halfway in the middle of the range at like either 1950 and ride it up to 24, or you just sell it at 24 and ride it down to 1950, like you can do things like that like over and over and over if you can find a good pattern.
Yeah, I like trading Paramount, and I kind of want to buy it as well. You said $14 or $15, right?
like 15.25 is where I would put like 10% of the capital I wanted to put into it.
Fed bids 4-week bills total
And then I
$1.2
would
billion.
just add if it, when you get down, when you like retest the low like that, you kind of want to see how the equity or whatever reacts. Like it's good to get in a little bit, but it could just as easily go to 13. Like it might bounce at that point, but then again, it might not. So
Giant gap to above it, and it also had 35 million in volume. It could go.
Yeah.
Could keep going down. I'm eyeballing AMD. Was trying to catch that AMD. Short. There's they had 0.6 days to cover short on AMD. There's the same setup as May 10th.
Yeah, AMD to me kind of feels like a no-go now because the fury of the buyers seems to have been gone. It's kind of like how do I explain? It's kind of like Upstart. You remember when Upstart was like $400 a share and all people did was buy it,
Yeah.
and then something broke. Obviously, the company's worth like $8, but something broke in that name to where people don't care about it. Enough people lost enough money that they just don't care anymore. And I kind of feel like AMD is sort of like getting a little long in the tooth as like a trading vehicle. So I would look for AMD at 68 personally, but that's just my own bias, I guess.
Yeah, I was thinking of it more like a 2-month call and then get out of it as soon as it starts to print. I figured it would print in 5 to 10 sessions.
Oil OSP to the Northwest Europe at plus.
But I don't like the market weakness right now. But of course, AMD's up right now.
Yeah, Intel's also up.
Crude
It's up
oil
65
OSP to the
cents
United
on
States
nothing.
at plus
So,
$6.25.
maybe.
Oh, let me mute this squawker in the background. Yeah, Intel's up right now. I figured it was. Well, what I did was the only negative where when I was looking at the setup for AMD, I was like, everything looks good for it to print and to print their ER. And then the only question I had was the shorts on. It seemed like it didn't participate in the tech boom that's been taking place the past few months, and so I was like, well, it must be a highly traded and shorted ticker. It must be like a trader's ticker. It's not just like melting straight to the moon like other tickers have, like i.e. Apple, Nvidia. And so I was like, I'm just gonna look at that short interest, and they had the same setup going into like the 10th to the 13th of March. So I was wondering if they would just cover on some weekdays. Like if we get some weekdays in the market, you'd see shorts cover on AMD and or on AMD for the next. But I couldn't time it. I was like, this could be 3 days. I feel like 3.
Yeah, I get what you're saying. I mean, it's kind of like I feel like AMD is one of the stocks that the goblins always show up for. So like the fact that it didn't pop on earnings sort of
that was like the tell, wasn't it?
Yeah, it's kind of like all that like goblin buy energy is like gone from it. So you have to kind of start looking at it like a valuation play, and it's like 400 times or something. So
it's stupid.
Yeah, I don't, like Nvidia still has a little bit of that goblin energy, but that's because of AI. So I don't,
And that didn't work for AMD. Tried that shit, right? AMD tried throwing the AI shit out there the other day. I was like, that didn't work either with good report.
Yeah, I believe people know that like GPT only runs on Nvidia hardware, but there could be some people that don't know that yet. But yeah, that's how it is right now.
What are your thoughts on regional banks?
Regional banks. I think it's kind of absurd where KRE was trading earlier. Like, we're starting to go back in time, like Back to the Future. Like, I mean, so like if KRE goes down a couple more bucks, we're going to be back in 2013. So like 33 in 2013 was probably $65 today. So like, I mean, how is this? I'm just perplexed, I guess would be the one word answer. Like, either everybody else but me knows that every regional bank is going to zero, or it's overblown. That's basically the
Yeah, we're in the ass end of or at least sector and business cycle of which should be the worst for banking, right? Or banking in general, like financials in general. This should be the weakest time frame. So like when we're like we have it under the microscope day in, day out, it's like bad. That's all you hear. It's like just cacophony of bad. But if you were to look back in 3 months, it was some kind of a bottom to buy. Like on a day-to-day basis, it's like the world is ending.
Yeah, I mean, but it's kind of, to me, yeah, I agree with everything you said. To me, it's kind of like a almost like an extinction level event. It's like a lot of times I'll hear people say, well, if Russia launches tactical nukes in Ukraine, I'm going to sell my whole portfolio. But really, what you want to do at that point is buy everything you can get a hold of, because either the world's going to end or it isn't. You know,
Yeah, if the world
kind of
ends, it
becomes a
doesn't matter. You're not
binary.
getting paid anyways, right?
Yeah, it becomes a binary event, right? It's like
Yeah.
0 or 1. Either the world ends and the nuke hits us, or maybe Russia's nukes aren't as good as they think they are. I don't
They'll
know,
make a
man.
market
Like,
for burning tires on the street if they have to, right? They'll make a
yeah,
market.
I mean, you know, like kind of like this is kind of the time where you want to be a little bit more like, oh, okay, is this 2016? I don't know. I mean, maybe we deleted all the money that was created in the system since, you know, the great financial crisis. I mean, that would be, I suppose in a way that would be beneficial, because we'd start, like you said, get price discovery.
Yeah.
But again, I don't think people want that. I don't think you really want that to happen. I don't think so. Like the whole argument about the regional banks is this: if you take out every dollar that is written on the balance sheet of all the regional banks, it's more money than exists in that system. But and that's the argument that people make on like Twitter and all that. You know, it's like there's a $30 trillion of deposits, but there's only $15 trillion in actual money there. But that's kind of like a constant. Like
it's constant. It's constant across all
always
banking.
been the way, because they lend the shit out. You give them money, they lend it to people and try to make a return on the equity. That's return on capital. That's like how the system works.
That's how banking works.
Yeah, that's the whole point.
Do you think it's a I'm with you on this. It's kind of like when I always bring this up with Tesla. It's like, or I bring this up just in general, even before I was streaming. What frustrated me often on social media was that I to tell people, like, if you just turned off the news and turned off CNBC and turned off Twitter, and when we're oversold, you buy regularly.
And like you always say, you could buy VOO, you could buy like a Vanguard S&P index fund. You get up to 100 shares, you start selling calls on it. Like, I mean, that's a pretty relaxing, you know,
it's
that's
an easy way. We all get sucked into this.
Yeah, you don't have to be flipping in and out of, you know, those 67-cent tickers that people sometimes show up. Like, that's not the only way to like live. You know what I mean?
It's like this addictive, like crack cocaine for every. It's like, well, I know I understand you have to act, and I'm in agreement. You have to actively manage your portfolios, and you have to be there. But oftentimes, well, there's two sides to this. Oftentimes, you start to drink the Kool-Aid. That could be bull or bear. And then the other thing is that if you're not drinking the Kool-Aid, myself personally, I get very probably most of my anger comes from like where KRE is right now. That it's just a wall of negative when it should be the wall of information should be, shit, we need to start buying this stuff, or get ready to start buying this stuff.
See, that's not what.
You shouldn't be buying Nvidia. You should be buying these bottoms. Like when Tesla was going to 100, if Tesla goes to 64, you should be like watching. And we know that cyclically that financials are in that. Well, I'll bring that up. Keep talking. I'm going to bring up a chart for people to look at.
Yeah, the one thing I wanted to kind of note on carry and banks in general was that First Horizon acquisition that TD was gonna do. They saw something that looked so bad that they wanted to pay First Horizon $220 million to not buy it. So, and there's this whole argument now that since JPM paid like 80 cents a share or whatever for FRC or their assets, anyway, I don't even know what happened to the equity. It's probably just gone.
Yeah, I think the common is gone. The preferred
Yeah, I
stayed.
assume the common would be gone. But if they're actually going to start pricing all the stocks in the carry as if JPM bought them for 80 cents on the dollar, Huntington's going to be like $4.68
Yeah.
tomorrow. You know what I mean? Like Huntington Bank, like, like
Charles
don't know,
Schwab's going
man.
bankrupt.
yeah, like Fifth Third's going to be gone. Like, I just like, and a lot of the stuff, I get it. I see the stuff on Twitter. My bot like trolls a bunch of Twitter accounts and sends me basically summaries because I don't want to be there in the normal way.
Yeah.
But like it's a lot of people just posting things like they don't really think about like, oh, like the thing we were talking about with the capital that the banks have. Like, they don't have as much as they need if every person tries to withdraw every dollar.
That's every bank.
Yeah, I mean, but people are making it sound like that's only FRC's problem or only WAL's problem or only FHN or First Horizon, that TD deal we were talking about earlier that fell through. But that's just how banks operate.
Here we're gonna show something real quick here. And this is to Winky's point. Is so this is just a cycle chart from stockcharts.com. Let me see if I can get I think I can get a pen on this. Yeah, right here. So just to Winky's point. See if I can draw anything in here. Yeah, so just right here. Okay, so just to Winky's point right here. If you just look at this chart here, you can see financials, or you can see, first of all, you see early recession over here and full recession over here. You can't really take a dart and throw it on like May 1st and say, okay, like financials, you see this early recession. When we're coming into the end of financials, so this would be like you're buying financials, now you're selling financials. And then you're buying discretionary at the same time over here, right? This is full recession down here. And you're buying technology, the early part of buying technology. So you've got two different things happening. You got selling of financials, buying of technology and discretionary. And so, like everyone's so bearish right here when they should have been bearish back here. Like the early recession is when you actually get bearish on financials, not right now. I'm going to show a point on this. I'm going to show this specifically in FRC. But you're deleveraging yourself in financials. You see real estate is the next one, right? So over the last month or two, I've said to you, expect this summer for real estate to come under the microscope, right? Into this summer. And then you saw the buying of technology and discretionary. Next comes communication services. And what are we talking about right now is materials and industrials. Do we get a bottom? And energy, believe it or not. We have a summer cycle on not so much oil, but on the manufacturing, distribution, the materials, all that kind of stuff. And so you want to start these conversations before they happen and start to get. Now, financials probably won't come back for some time. We've talked about, hey, it could be 3 months, 6 months, a year, 2 years for financials to come back. But at least start looking at these companies. Now, I want to this point here that I want to talk to you about. Remember here, right? Early recession, full recession, early recovery, and then full recovery. You don't want to be long financials up here. Does that make sense? Or I guess, yeah, you don't want to be long financials when we're in full-blown bull market. You don't want to be like late to this party. And just
Right.
Let's look at FRC really quick. I want to show FRC to this point here. I want to mute this real quick because I want to say something to his point that's important, which is if you look at FRC on a 1-year chart, right, and you see this bloodbath here, you can actually see that they sold it, right? They sold it, they sold it, they sold it. And if you just looked at that chart, you knew that eventually there was going to be a bloodbath one way or another, a payoff in these regional banks. So I'm talking about institutional level selling, institutional level deleveraging, institutions that know that we're coming into a part of an economic cycle. Now, FRC, of course, took the biggest hit, right? FRC, SVB, some of these companies are not going to make it. Some of these banks are not going to make it. We know that. But some of these banks are going to make it, is the point. You're not going to see every publicly traded regional bank go to zero, go to the over-counter market, lose all the common shares. It's not going to be every single one of these. And so this is a cycle, right? This is 2021 coming all the way down into 2023. You're actually looking for a long-term 3 to 5 year hold on this stuff as we're at the tail end of the financial cycle. This is like a 10-year, 15-year cycle we're talking about here. Not this like month-to-month cycle that we go through. So when it's really doom and gloom down here, it's how do we identify which ones will make it, which ones will not. Is it a matter of you buy 10 of these and you lose? Like, this is fascinating because when you saw the dot-com bust, you could have bought just 10 of these dot-com companies. You could have had 7 of them blow up, and the 3 that didn't, you put like $1,000 in Apple, and now it's worth 20,000% at this point. So just cyclically in the end of a bull run, coming in, creating the next 10 or 15 year run. This is why Winky talks about this stuff. That's why he's focused on the financials in particular, and what they're doing right now.
I mean, also the the thing that I've noticed is going over the economic cycles is they last about 15 minutes now.
Yeah.
So, I honestly, maybe I should have sold BAC when it hit 35 and like probably February 2nd. I'm just guessing. I don't know what the price was. It was probably 35 though. But also we're going to cycle through those like sectors so fast. Like how is any like, I mean, I guess but this is this crisis in the banks is caused by basically just external capital flight.
I think it was in my view, it's like I think everybody knew. I think the people are like, hey, we're in this. I think that if I'm like a Bill Ackman and I'm a Jamie Dimon, I'm like, listen, we're gonna rate any company that we can. We know that we're at the end of the cycle for financials. This is a time to do mergers and acquisitions on them. Let's get them for the best price. Like some guy with that kind of money, it's like let's take it to zero and try to absorb anyone that's not protected or can't withstand a run on their bank. I mean, this is corporate rating. This is just regional bank rating. I don't see it like other people are seeing it, like all the doom and gloom that's associated.
Well, that was my point to your note about the end of the cycle. Like, I don't necessarily know that KRE would have been in the 35s if SIVB hadn't had a $200 million capital withdrawal in one day.
You don't think any of that was manufactured?
I mean,
though?
it could have been destined, but if you just whip up a chart of, let's just say BAC, for example, just because that's the one I know the best. It's not exactly if it's been gangbusters over the last 10 years. You get what I'm saying? Like, it just sort of feels to me like it wasn't the time for the comeuppance for, just like banks in general. Like it just seems like I don't know. I mean, maybe an SIVB because it was what, $300, like some just hilarious number that I just can't even fathom. I didn't even, the funny thing is, I didn't even know I didn't know SIVB existed. They weren't on my bank screens. They weren't like, maybe that's how that there was a problem, because I tracked probably 11 different financials, and that one I didn't even ever look at. So I don't know if it's like time for revenge on Bank of America. Like maybe it is. Maybe they've just like done so well over the last 5 years that like now it's time to kill that company. It just seems stupid to me. Like there's still excess in 900 other areas of the market that, could have been deleted, but I don't get it. So what I'm doing is I'm adding all my cost. Okay, so let me explain this too. My cost basis.
Before you continue on, what do you think? What's the buy price for BAC?
Okay, well, I was just gonna get to that. My cost basis in BAC is between $8 and $13. So I bought it in 2008 when Warren Buffett saved it from going out of business and got a 9% dividend for the rest of his life. That's what I did, but I've added to it and I've sold a little bit since then, and cycles and all that. But like, like it, it's not like there's no extreme greed in any of those things. You get what I'm saying? Like, who cares? Like, that's what they're gonna go after. They're gonna go after, just that stuff. It's not sexy, it's not exciting. I don't get like with the way the market is now with sentiment and like Twitter and everybody just follows, it's like that's the thing that people have the biggest problem with, huh? That's the one. Uber can go to 38 on losses, but that's where the excess in the market is.
Yeah,
is my point. Like I just laugh. I can't. There's not a lot I can really say. I mean, it just makes me literally chuckle when I see things like that.
So we're looking at the weekly chart on BAC going back to 2009, right? 2008. Is there any reason not to buy this trend line going forward, or at least hope for it? Can we get it down to $20, $21.55, and continue? So this would be the short-term debt cycle, and not like, are we at the end of a short-term debt cycle, or are we at the end of the long-term debt cycle where we actually go to like $2, $6 or something down here? I think that's the big question. But even if we were to go to $6, wouldn't it still be prudent to at least buy this $21 and have just maybe like a stop down below it at 19 or something? Wouldn't it just be rational to at least consider buying this?
I'll start buying it another $1 if I'm being 100% honest with you. Like I'd buy it at 25. I mean, I'll add some. Like I mean, it's fucking Bank of America. It's like what we were talking about earlier with the aliens invading.
Yeah,
or
this
like,
is a decade, man. Like if you're not gonna buy this down here, and like we do what day in day out, we're like, just the other day I just lost some money on I lost money on I lost money in a trade where what was it? I forget what fucking ticker was. I lost like $5 or $6 or something on it. I bought it again at $6 and like triggered a stop loss out. And but I'm like, over time, man, like if you were to buy BAC at $20 or at between 20 and 25, or start DCAing and you lose a few dollars at 19.
My other point about BAC in my account specifically, let's say I bought it in 2010. Since then, I've gotten like 212 free shares from dividends.
Yeah.
Like, gives a shit. Just
it's a no-brainer down here.
Yeah, like I honestly, like if I had to guess, I would say you won't see below 20 in BAC like until the next actual like 10-year whatever. I mean, we could have 10-year crises every 3 years, but I won't be in the stock market, right? Like if this ends up being another COVID crash 3 years later, I'm gone. You guys won't. I'll still mod your channel, but I'll just be like, fuck all this. Like, sorry for the profanity, but like, I'm 43 years old, man. I can't like, I just can't mess with these like crashes every 3 years. Like that's the deal was when you got into the market, like every 10 years you were gonna get the rug, like Lucy was gonna pull the football when you're trying to kick it through the uprights.
Yeah.
That was the deal I made, right? Like I'm not I'm not ready for a world where every 36 months it's like a lease on a Lexus. Like every 36 months, like S&P 500 cuts in half. Like
Yeah, I'm not on that train, man.
what
I
the
can't be. Like, I can't believe, and this, just even looking at this chart with BAC, you know, they're telling you to be bearish here. And I'm like, well, if I was bullish here, I'd be rich. 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 If I was bearish here, or excuse me, if I was bullish here, I'd be poor. 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 So, to your point, as we're coming down here, you should be bullish, right? You should not be bearish. And in fact, if the cacophony out there is max bearishness, and it's like, why are you telling me? Why do I hear people non-stop garbage of don't buy banks, don't buy S&P, don't buy this, don't buy that, crashes coming, and I'm like, yeah, but I mean, this is what? This is 2009. This is 2023. Like,
well, and to
you're-
your point that you're making right now, if you look at that trend or that line at 21, like I don't know, like 21.6. I can't really see that number. I think it's 21.6. There's a yellow line there. Anyway, so if you look at that, you'll see that the last time it was there was pretty much in COVID, and then previous to that it was it looks like
17, 16, 2016.
2018. No, I'm talking about the where it touches that top yellow line. So like it was right in COVID, and then if you look back a couple years, it did it again in, let's say, 2018. Like
No, it's 2016.
Oh,
2020.
sorry, I'm talking about
there
a
was
different
another
line.
bump in 2016, but then the last time was 2012, 2013, and then 2009. And we're coming into it again. As my point is, we're coming into it right now. And your point, what you're saying is, it shouldn't be every 2 or 3 years, right? It should be like 4 or 5 years that we're coming down here.
Well, my actual point was more about, okay, so let's say that we're comparing price. Just talk about price for a second. Okay, so the last time it was at 2160, let's say, was I don't know, 2020, and then before then it was 2018, and then
I see what you're saying.
We haven't seen that again. 2008, it dipped down below that line.
You're talking about this right here.
Yeah. I'm talking about like money. Okay, so let's say in 2018 you buy Bank of America for 2160. Okay, that's probably worth, like, money supply growth. Like the pricing shouldn't even be the same.
So
Like-
you're saying to me, so let me just make sure I got this right. So you're saying to me, hey, if I entered the market for the first time in 2018, right?
Yeah.
And I didn't take profit, that I am going back to zero after being in the market for, what was that, 6 years, 7 years or something, right? I'm going back to zero after 6. It's a fair point, man.
Well, my point right now is actually essentially that 2160 in 2018 isn't the same as 2160 in 2023.
Not at all.
It's a wide penalty. Like I would say it's like $16 because how the money supply grew, right? Money is not worth as much as
Not
it
even
was in
close,
2018.
brother.
So, like, sometimes when you look at these technical things, it's like a little bit tricky for me because you have to remember that we went through like 2 years of a shit show, like just 2 years ago. So I don't know, man. Like I'm here with you. I'm not a trillionaire. Like if I knew everything, I'd be,
Do you think the one thing, my one concern here is just the life of a company? Or not my one concern, but my one thing that I always have to say about companies, every company, this doesn't care. I don't care if it's Tesla, Apple. I don't care if it's Walmart or Amazon. This is why I love the S&P 500. It's why I like Vanguard shit is if Bank of America ever did blow up, they can get removed, right, from an index.
Yeah, exactly. You could just, take it out. I don't remember what the last one was that got deleted or something. I thought maybe it was like 3M or something because they
Yeah.
killed a bunch of people. I don't really remember which company got.
Intel got removed recently, right?
Oh,
Didn't
did they?
recently get removed?
I don't think I heard that, but that's totally
thought
possible.
I thought Intel got removed in 2017, but I could be wrong. I could be wrong on this,
Yeah.
but
I know that CRM got added when some industrial got blown out.
and then Shopify got added a bunch of years ago, right?
Yeah.
But I guess but to my point on this is the only argument that I can see not to buy that. Well, at first I get what your point is. You're like, if you're in this market for 8 years, 10 years, you don't want to see, hey, I bought the low like I should have.
Yeah. You don't want all your
its rise over 10 or 20 years. I wonder what BAC's performance is relative to. I don't know if I can do that here, but
yeah, I mean it's definitely not, like I said earlier, it's not the sexiest stock. It doesn't tend to have a large daily percent gain loss beta, but it's yeah, I don't know. I just don't see it happening. I just don't see the whole banking system in the US being worthless at the rate that we are pricing it like that. That's just, but
there's
that's
a major
just my
divergence
opinion.
here, right? It's a pretty
Yeah.
significant divergence on SPX, S&P 500, and
Well,
and
I mean,
banking.
I think everything basically topped in February 2nd, right? So that was when we hit 418.31 on the SPY. And since then, we haven't gotten back to it. I think the closest we got recently was like 416 something. So
They didn't
a
perform
lot of
here
a lot
either,
of the
right?
ETF charts, if you look at them like carry and stuff, they all topped on 2.2. Except for tech. I think tech probably kept running because obviously that's what it's doing now.
Do you think if you ever go to I think my thing I always try to consider the thing that I always try to I don't talk about this on stream mostly because I think remember when I first started streaming I was always like or when I first started streaming I was like, man, I'd really like to or I guess and this is I think I've asked you this in the past too was I would really like to have another stream or recorded videos. We've talked about, well, why doesn't the stream just focus on certain things? And I've always been like, well, because people want action every day. Like they want something to do every day that's like, keep people interested and all that kind of stuff. But it would be great to have like a stock show because you're not going to talk about that stuff 8 hours a day.
Yeah, what you're talking about is sort of like what Kramer does, and I know that's a touchy subject around here, but he shows up at 9:15. He might be on TV at noon, and then he has a show at 6, and that's what
it.
he does.
Yeah, you do like a. Well, I would hope at some point we have a show that's geared not towards day trading, but that's and this is what I'm rolling into here is because you were saying I'm not interested in this like a market crash every 3 years, and I don't think anyone with money isn't interested in it either. I'm surely not, and I'm even at. I don't talk about this often, but sometimes I do, where I say at some point you are looking to own the S&P 500. You want to eventually in life. You're not going to believe this being if you're a young investor, or even if you might hear some long-term Tesla bulls be like, it's going to be $1 million stock after all the splits in 30 years, that kind of shit. But the truth is, if you make enough money at some point, it's really nice to just like, I'm going to buy the S&P 500 and I'm going to just sell puts and calls against it. Just like rake money in for the next couple decades and not worry about it.
Yeah, you get the dividend, you get, you could sell calls on it, like, and just chill by the pool or whatever. I don't know. I mean, like, the only reason, honestly, this is a little bit personal, but the only reason I'm doing this is so like I can try to not be like homeless in a few years. You know, like
You're
I
not the
don't
only
know.
one. There are,
Like
dude,
it
there
feels like the
are.
only way. Like it feels like the only way, right? It's like you have to compete with people who rode Tesla to like $900 in the economy, right? Like I don't know.
Dude, so I want you to know that in our inner circle of people, I don't know if you guys all say it to each other. I'm not going to name names, but that is the discussion amongst every one of those people. Talk to me, and I talk to them, and we all say the same thing, which is, I don't want to be. I have to escape taxes, and I have to escape rate increases, and I have to escape my money being worth less over time.
Yeah, it's kind of like escaping the system or escaping what you're talking about, which is basically the oligarchs like selling everything as a service.
Yeah.
You know what I mean? Like like it's all fine and good to like have things be a service, but then all the costs keep going up and then suddenly you have no savings and you're just destitute and homeless. Like like you gotta think, man. You gotta think about like and I have a 15-year-old son and I'm like terrified for him because I, at least in my life, because I'm 43 again, I'll say that, but in my life I did get to buy a house. I bought it in 2003 and it really sucked.
Yeah.
But he won't even, like, I would bet that he won't even consider owning a house in his lifetime. That would
I
be my
don't know
bet.
how my kids buy homes and not be, or what they're giving up to own a home, like to have home ownership at that price, the money that they're going to need for that home, how they come up with that money, even with a degree. I'm like, if you're not like, if my oldest graduated college today, 90,000 is not enough. She has to make 300,000. If she's doing it on her own, that's what she needs to make.
Yeah, and I mean,
to live
rates
like, hey,
have
white
gone
picket
up.
fence, start her home in a nice place, like not no bootstraps, none of that stuff.
Yeah, I mean, it's almost impossible to like. I mean, if you're starting now, to imagine a point where you'll actually get out.
I have one of our inner circle people, C-suite, big tech company, retired, said he's here, probably here right now in stream in the chat somewhere. I'm not going to name his name, but has done very well in retirement. Made all the right investment decisions, and he's like, I don't know if I'm going to get. Well, this is part of the intent of removing money from the system is you have older people with wealth, and they're being squeezed right now. And he's fearful. He's like, this could send me back to work. Like, and I'm like, he's like, I'm 60s. Like, I'll lose everything. That's part of it. If you're young, you want that to happen. I understand that. I respect it if you're young and you're like, fuck the boomers, I'm going to take all their money. That's what they're doing right now. There are people out there that are older that are like, I'm feeling that squeeze, that have done the right thing. These aren't people that have made bad decisions, bad debt decisions, any of that kind of stuff. Just the system is built to take money away from these people, and they're trying to escape it. No, Winky, you're not there yet, but you are going there, right? I'm going there.
Well, I mean, I honestly, like, I have like 7. What my life's going to be like in 10 years. We've talked about it.
Yep. I'm not going to talk about it.
So I have a certain like time frame that I'm looking at where, I'd kind of rather just take the money out of the market, buy myself a shack to live in, and just hope that the taxes don't ruin me. They will, but
there's a you don't hear those stories. Like, that's the one fucked up part about our system is you never hear about, you only hear about the success stories, like, woo, look at that person, they're doing a great job. You never hear about the person that's like, I've done a great job in my life. I wound up losing everything at 40 years old. I wound up losing everything at 50 years old. No one wants to hear like the 60-year-old that has lost everything. And these are normally people that are in their younger years and younger decades. They're proponents of this. Like, woo, I got a degree. I did 20 years of this company. I worked for Apple for 20, 30 years. I guess Apple's not a good example. Let's say it's a mid-tier company. Or, hey, I was an attorney for this long, and then you get into your 50s and 60s, whatever it is you do, a doctor or whatever, but then you never hear their story where our system is built to take their wealth away from them at some point. For the majority, and this is the majority of people. If you look at the stats, like 92% of people don't make over 150K a year, like 92%, right? So, something like that. So like majority of people don't make that money. Majority of people don't have wealth passed down to. Majority of people think they're even getting their parents' wealth, and they likely don't. Or their parent lives to be 95 years old or 89 years old, and they whittle that down over to the death.
Healthcare eats the rest.
Yeah, man.
Whatever you don't spend, it's like once you get to a certain age, healthcare just destroys you.
Yeah, it's and no one wants to hear that person's story. That's not going to be in the news.
It's not
day
a fun
in, day out.
story, right? It's not a heartwarming adventure.
Yeah, exactly. It's not the hero's tale. You don't want to hear about when the hero is couldn't give their money to their kids and they're spending it on their last diabetes medicine or something.
Yeah, and also, man, it's kind of like what you say sometimes, and we say, like, somebody has to always be taking the trash out. So, like, personally, I basically worked at a startup or a startup mentality, like 80, 100-hour weeks for 20 years, and it didn't work out for me that I just Peter Thiel'd. It just didn't work out.
You didn't win the
Sometimes
lottery.
It doesn't. You just work the shit off. You work your ass off, and like you just don't get to that compounding millions status.
Yeah, even when you do the right thing, you don't actually make it, do you?
You work your ass off, and not quote unquote make it, and then you're like 45 one day, and you're like, holy shit.
This guy I was just talking to a guy. This guy was I forget his name, Justin something or other, and he made a lot of money in this last cycle, and he's full on honest with me. He's like I should have taken all that money out of the market and put it into safety. He's like, and now I'm trying to build it all back again.
Yeah,
when it's hard. And I was like, even if you had pulled that money out, now you're going to still have to chase. So he's kind of like in a double hole. Like,
right.
Now it's like, okay, how do I don't even, like, he's like, he has wealth, but not like what he could have had. And he's like, and I'm like, just think if you'd had that wealth, you'd still now then have to protect it. When when we're playing musical chairs.
Yeah. I mean, but and sometimes I'll hear people, and you say it all the time, like, you got to make sure that your money's growing faster than inflation. But honestly, if it's between losing 11% every year for the rest of your life and gaining 5% in a money market account, I'll take the 5%. Even if you aren't technically above inflation or whatever, gaining money is better than losing money. And a lot of times
I believe that, but I don't. I feel like people say that. They're like, I'll just keep it in the money market. I'll just keep it in the savings account. And then I'm like, a year later, I'm like, 1 year later. And people are like, and I have friends that are like, oh, I want to put some money in the market right now. And I'm like, why? And they're like, it's been a year, man. It's been 2 years. It's been 3 years. I've been waiting. Like that human element of, got to put my money to work. That's how they have money. That's why they have money, right?
Well, like Winky was saying, right? He has multiple buckets or vaults or whatever he called it specifically. You can have a vault where you buy, but look, and I get it. And I know sometimes I'm an asshole in chat and I make fun of people, and not I don't try to, but I understand. I understand why people really want Dogecoin to go to $1,000. I get it. I've been in this system for 26 years or whatever, since I've been 18. And I understand the challenges, and I hope to God that all those 68-cent pump and dumps all go to $3. I get it, but it's supposed to be hard. This thing, I tell you, sometimes people will be like, why is trading every single day so difficult? Well, I mean, think about if you could summon money every, like you just go into the market, you put $1,000 and you get 3K back every day. Like Big Mac would be $800.
Mm-hmm.
Like it's supposed to be hard to make money from basically doing. I mean, it is a lot of work, but when you think about like the actual effort, like if you have a system that works like day to day in and out, like you just do the same thing every day and you're expecting to make thousands or hundreds or millions of dollars. Like, like
Yeah, I think
Kinda.
less trading is always better.
yeah, I mean, it's like, and I know, like you say, a lot of times, like people want the action every day, but that's essentially like the hole that everybody has in their soul. They're trying to fill it with different shit. Like some people it's sex, some people it's gambling, some people it's drugs, some people it's alcohol. Like you gotta get the dopamine somehow, but like trading away your future necessarily isn't the always the best way to get that fixed. There's like way less destructive ways to get your thrills than
Yeah, I think
flipping
on stream we said, or I said, well, when we first started streaming, I was like, people just gambling away there every week. Is that what they're doing? But then I realized,
yeah, like it hasn't been. It's been a little while, but one time I was in the chat. I think it was last year, and a guy's like, "I just bought $900 in spy calls. That was my rent money. Hope this works
Yeah.
out." And I'm like, "Oh, I hope it works out too." Honestly, sure, great. I hope to God it works.
I think I
for
stopped the stream one day. I was like, here's the deal. It's like, I was like, number one, I was like, you need separate accounts. Like, hands down, separate your money. I was like, number two, well, I kind of get the people that are like, I'm trying to build an account. I have no problem with that. Like, I remember there was a time when I was like, I'm just going to take money every week until I hit it. And it's like I'm building an account up. So, like, if you're doing that and you're going back to your job anyways, you get no other bills, have at it. Not financial advice. But then I'm like, I always ask people a bunch of questions. I'll do like a private phone call and be like, are you going in 100% every trade? Ding. Are you sizing up your trades? When you make money, let's say you put in $1,000 and you made 10. Is your next trade 5 or 10,000, 3,000? Are you down to going? Are you did you downsize to $100 or $500? And it's always those mistakes. And then, but then to give some credit to traders, people can only trade when they have time. So that's the other thing. This is the anecdotal evidence, which is not everybody day trades every single day. But some people only have certain times that they can trade, and other people are like, "We're going up today," then they're wrong, right? You're like, "I know we're not going up today," and they're like, "No, we're going up today. It's trend day." You can't argue with those people either. You can't be like, "Hey, don't trade today," because it's always a day to trade for someone out there. It might not be you or I or someone else, but for some people, it's some people it is every day.
Yeah, and you can. I mean, even if you have the most conservative system imaginable, you can find something to do on a weekly basis, probably. But yeah, I mean, if you're honest with yourself and you're waiting for price, like price doesn't hit that often. Like the way that I've been trading since I started in like 2006, I think it was, is I basically just track like 80, 90 companies. And over time, my brain, and I'm quirky. I don't know why. It kind of just remembers what prices makes, and then I'll just see something and it's like, BAC's $24. And I'm like, holy shit, yeah, buy that. I don't even look, like, honestly, a lot of times I don't even look at the charts and stuff. I just don't care, because I'm like, okay, over the last 20 years, BAC has enjoyed being at this level. How much? Well, let's say 1% of the time BAC's at that level over the last 20 years.
Yeah.
Okay, maybe I'll buy a couple shares. It's not, I don't know. It's and like a lot of the systems people push and stuff. It helps as like a just another arrow in the quiver, but like a lot of that.
Dude, I was screaming. Like, we're at 345, and I'm like, how do you not buy this? Like, how?
Oh yeah, I bought everything I could. You
Yeah, I
know,
was like,
and of course
how
I
can you
sold a lot of
rationalize
it
not
early.
buying SPY or SPX at 34.50? Like,
34.50.
you're like, how do you not justify that?
Yeah, I don't know. Like you've shown the 80-year chart on SPX before. Like
I was going on rants on Twitter. I was like 4 or 5 o'clock in the morning, 6 o'clock in the morning. We're like capitulating down that morning, and I'm reading all of these posts on Twitter. It's like just full on collapse, and I'm like, fucking buy it all. Like, buy this. I think I wrote buy the fucking dip, and I'd post. This is the first time I had reposted my original permanently posted like tweet on my profile, and I'm like, buy this fucking dip. Like, this is insanity. This is how you buy this market, is when we're on these lows.
but how often do you hit 345s?
So fucking rare.
Quarterly, twice a year, once every 3 years, like, you know, so like you gotta, like, to my point earlier, you gotta find other things that you take excitement out of if you're just gonna be buying SPY at 345, which I think is a great way to do things. Like, or you could even buy DIA. I know the Dow is like an error in your chat. Anytime I ever mentioned the Dow Jones Industrial Average, people were like, "Get the fuck out of the stream!" Like, I'm like, seriously though, if you would have put
I hate trading it.
I know, but if you had put 10K in it 10 years ago,
Yeah, no, I agree.
$1.5 million probably.
TLT is the same way. I always feel like when I used to trade TLT, and I gave it up because I'm like, I feel like I'm trading with a bunch of old fucking guys. I'm like, I gotta wait 6 fucking months for my shit.
TLT is amazing if you have the patience.
Yes.
Okay. Don't buy it at 105. Don't buy it at 108. Buy it at $99. Buy it at $98. Okay. And it hasn't, you know, there haven't been that many of those swings lately. So I'm sure people are getting antsy. You know how it is. Like,
yeah, dude, they're on CNBC right now. They're like shaking the cage going, pay me. I think it was Gerlach or something was on there, and he was
Gunlock,
yeah, Gunlock was out there.
Yeah, they all want the bond, man, the bonds. Like, and what's the easiest way to make bonds go up? Probably destroy the banking system.
Destroy the S&P 500.
Yeah, I mean, just, you know, knock a couple legs off of the stool and watch it Jenga.
And people are like, it's because of fundamental reasons. I'm like, no, it isn't. It's because he's got $17 billion in fucking TLT right now.
Yeah, like a lot of times, like guys like that, you know, if they were actual, like, we love the market and we're market participants, why isn't Gunlock on Twitch every day? Like, why doesn't Bill Ackman run a stream and have like Kramer buttons he can hit? You know, because they don't actually give two shits. All they want to do is make money because they have money.
Yeah.
Like, and if you try to stop them from making money just for the fact that they're already wealthy, they show up on CNBC.
Yeah. They do begging. They do their own form of begging.
They go out with their hand. They go out with their hat out like Salvation Army collectors, and they're like, help me out.
Like,
and
fuck the pores, but I'm gonna go on CNBC and
yeah, and then people, like average people that are getting fucked day to day for their whole lives, they're like, oh shit, like there's gonna be a big collapse coming, and they don't realize that all people do on there is talk their own book. That's the whole thing.
Yeah.
Like, the quirkier the stock is, like, the more they're talking their book. Like,
it's always their book. It's always the book, a fee. It's always
Who's
there's always some hidden reason for whatever conversation they're having.
I'm trying to remember this guy's name. Leon Cooperman. If you've ever seen an interview on CNBC with Leon Cooperman, I think he used to run like Home Depot or something. I could be totally wrong. Or no, that's Ken Langone. They're both in the same boat, though. They both show up on CNBC and talk about like quirky oil sands companies in Canada. And I swear to God, most of the time they're like pump and dumps. Like, it'll be like 88 cents. He'll come on CNBC. And this guy's like a billionaire, right? Ken Langone has a medical center named after him in New York. Like,
Like, how much of this do you actually own?
right, like, are you that stock? Did you form that company? Like, what is this company? Or like Stag, what is it, STAG?
Yeah, I
Every
remember
once in a
Stag.
while, I'll see somebody like come out and be like, you got to put all your money into Stag. And I'm like, look at that fucking thing. Look at the chart of that fucking thing. Like, I don't know, man. Like, you gotta, nobody, like, that's the thing I always, like you say about Kramer, man. He's gonna be wrong. You know, I think the one that I always remember is the Coinbase to 474.
Yeah.
Like, he literally came out and said on the IPO day that he would buy shares of Coinbase up to 474. It might not have been 474. It's higher than the stock has ever been before. And the whole history of the listed, whatever his target price was, it was not, it never hit it.
It was
never
obscene. But
got
it sold
there.
off fast, right? It was like a
Yeah,
quick rip
it was
up
a
and then
shit
never
show.
came back.
It was a shit show. I mean,
Wasn't it
a
like
lot
a
of
month
people,
or 3 weeks or something. It just ripped face and then it just was like, that was it, gone.
yeah, it was like the IPO day was basically the best time to sell it. It was like 335 or some shit, if I remember correctly, on the IPO day.
I don't. Maybe I'm talking about Coinbase. Maybe I'm thinking. I don't know if I'm thinking Robinhood or if it was Coin. Let me check
I
Coin
think
real quick and see.
Coin is the one that, like, it was so high. Its high was like just absurd. Like, let me see what it was.
I'm looking right now.
I'll even count the high tick. What was it? 393?
429.
Yeah.
It bottomed, but then it ran for a month, and then that was it, right?
Yeah.
And you know what bothered me most about it was what bothered me the most about it is that I was like, these guys are getting fees either ways, right? Like, they should be pretty decent value, or they should be. We were talking about
like,
market making.
okay, so they make money on trading crypto, right? So like, if it's super volatile, they're making money. The problem is that a lot of those companies like Coinbase, Upstart, etc., like, when they were it's like
but when there's volatility, they sell the fuck out of those companies.
all the value of all the IPOs that hit, and that I don't know, in that one time, especially with SPACs. I'm not getting into that shit right now. But all the value of, let's say, Coinbase was extracted from the IPO.
Yeah.
Like, they took they like went in and took the plant.
Yeah, they did.
Like, in the lobby.
They did.
Like,
they still do that too.
There was nowhere for it to go. There was no way it was ever going to go to 429 again.
Didn't all that like bleed off at one point? Didn't that bleed off into a bunch of other SPACs that were like, like delivery companies were like that too? They're like, fuck it, we can get 200.
Yeah, the SPAC thing was just
like they were anticipated. Like, I think some of these delivery companies, it was like, okay, we're gonna open at 18, and then like 6 months later, after a bunch of other IPOs were coming out, or a bunch of other IPOs were like 10 times what they anticipated to open at. Like,
yeah,
then was like, we're gonna open this delivery company at $18, and they're like, fuck it, we're opening at $200. We did a bunch of
they all had 12 shares. That was the float.
Did a bunch more pre-selling.
The float was exactly 12 shares of all those companies. So, like, of course,
there's no lockout for selling. We can sell right when we
right. And also with SPACs, you could literally make financial projections 10 years out. Like, when you do a like 10K, or I can't remember what is it when they go public, company actually IPOs, which I think Mobileye was like the last one that I saw. But like, you can't do that. You can't be like, yeah, our total addressable market's 100%. Every person on earth is going to want to, what would have been the first one? DraftKings. DraftKings was the first SPAC that I ever heard of. And, like, if you read their SPAC, whatever, when it converted, I can't remember the exact terminology, what happens when they like buy the actual company. But like, if you read it, it's like every person in America is going to be doing sports betting by 2023.
Yeah, I remember that.
And we're going to be the only player. And we're going to, like, it was basically like Howard Dean's speech when he's like, we're going to go to Massachusetts and we're going to go to Maryland. And his voice just keeps getting higher and higher as he's talking because the cocaine just ramps up higher and higher. And he's like, yeah. And then
I remember that.
I don't know if y'all remember Howard Dean, but that shit was funny. But
I remember Howard Dean too.
Yeah, but like then everybody was like, this guy's fucking nuts, bro. we gotta back away from this. But like with SPACs, it was like it was par for the course, you know. And like people have already forgotten about Chamath, man. Chamath ran off with like all your money.
Yeah.
He stole everything. He fucking wasn't nailed down, dude. During that period, what was it like? IPO A, B, C, D, E, and F. And what are all those companies now? Like, what are all those SPACs that he ran? I don't even want to look.
We're going to have a quick talk here. So
go for it.
I got to interject for just a moment.
Do it.
Okay, so thanks, brother. So just down here, we have a double bottom forming down here, okay? I do want you to understand that this weekly trigger on the SPY, it's at 401.25. It's down here at 401.25. I do want you to realize, whether you want to hear this or not, that the weekly trigger is a very emotional place for the stock market, and we are coming into it right now. Now I know there's 401.25 and 403.76 like hand grenades and horseshoes. This is, can we roll over here and get down here? Yeah, but this is the neighborhood for a relief rally. I just want you to be aware that somewhere in here, we are in the neighborhood of a relief rally. So, it's getting this is a 1 minute chart. Let's look at a 5 minute chart really quick. If you see a capitulation move down here, you've got one down day, 2 down days. Let me bring this over. You got one down day here. Let me see if I can bring this back so you guys can see this. You got one, like a 3-bar trade. You got a 1 red bar, 2 red bars, 3 red bars. I don't know if this translates into Apple ER today, right? So you might have a squeeze here, either here or here. And your 3rd red bar is kind of down in here. I don't know if Apple does that, where you get your last capitulation down there, and that's the big one to buy. But I just want you to realize that it's getting overdone at the moment. So just be conscious of this. I don't know if this happens today, if it happens tomorrow, but if you guys don't know what a 3-bar trade is on your own, go to Google and just type in 3-bar bull trade, 3-bar bear trade. It's almost there. So you got the 1 down day, 2nd down day, and 3rd down day right here. Whether that happens, panic for Apple into the close. If it happens on bullshit, like their ER goes up, then they sell into Thursday. And this brings up Friday. I'm not expecting, if we have a 3rd down day, if it's today or tomorrow, you better bet your ass that you're going to see a face ripper on Friday into the close. So just remember that, okay? That as we get into Friday, the longer we sit down here, the more that we start coming down like this. We're at S3. We beat S3 back here, and we're beating S3 one more time. So as we get down here, it starts to get to that point where you're like, yeah, I could probably put a call spread on somewhere in here at some point 2 weeks away or something like that, and you're going to catch that bottom and move higher. So just a warning. This is the same thing as when, remember last week? You guys don't like remembering this stuff. Remember last week when we were at 416, 417, I was like, yeah, you could probably put a put spread on. We could hit 420. We could roll over here now, go up here, just make sure whatever you build is built out far enough in time. So this is when we were topping up here, right? Remember we're topping up here? Remember people come in the chat and they go, oh, Cap, we did top yesterday. But just like this one, if you were to flip this chart upside down, you're kind of getting to that point where it's close. It's real close. And this 396, this is the price target down below. Are we at the start of selling? No, we're kind of at the 60% mark of selling. Just be conscious of this into end of day, into tomorrow, and probably some kind of a relief rally, a brief relief rally. And here you saw that back there. Relief rally. Would not be shocked to see one into tomorrow down here. So just be conscious of this happening, okay? And just looking at it right now, I'm like, yeah, kind of a double bottom here. get a low, get a low. You might get a relief rally in here. Middle of the day, it's like 12:20 in the afternoon. Get around like 1:30, 2:30, you see a squeeze higher. Panic selling into the close for Apple ER. Squeeze up higher, then we go back down into tomorrow.
Just a note.
What's that?
Just a note, and I know my voice is messed up because I did that intentionally. If you want to play Apple for their earnings, do it with SPY, for the love of Christ.
Yes.
That is my only note.
I love the choice changer, by the way. Tell them that. I was blown away when they're playing Apple or any of these big tech companies. It's like, dude, play with SPY. Like, you can get out, unfuck yourself in a minute on that trade. Within 4:15, you can typically.
Yeah, I mean, you
And
don't
SPY
want...
will bounce back before Apple will.
You
or
know,
any
because
of these
what'll
other
happen...
companies.
What'll happen is if they, with quotes around it, want the market to go down, like the people like we were talking about, the CNBC guys, they have like 1 million shares of Apple. Like, they'll just sell it. Like, if that's where we're headed, like, they'll just sell it. So you kind of have to be able to sell up until 4:15, like you always say, like, you know, especially. But my other thing is like, okay, so tomorrow is obviously Friday. We got a weekend. So like normally
tomorrow Friday? Yeah, tomorrow's Friday.
Yeah. So like normally in my stupid half-ass trading method, I'm like, if everybody thinks all the banks are gonna fail, why would you hold stock over the weekend?
Mm-hmm.
But Apple's the freaking wild card, man. You could basically do anything tomorrow.
Yeah, I think if we sell off like hard and heavy today or into the open tomorrow, VIX is gonna, we'll have an expiration for like a weekly OPEX on VIX, and I think we're gonna squeeze the fuck out of the market if we don't get it today.
Yeah, I'm kind of like tomorrow's gonna be a shit show, except Apple's earnings.
Yeah. What are your thoughts on Apple earnings?
Oh Jesus. I don't know. And the reason that I say that is because they're the only one that hasn't come out and been like, we put Chat GPT in your iPhone camera. He'll pop up and tell you the exact stance you need to stand in order to get that titty pic just right. You know what I mean? Like, they could do that on their call. Could you imagine if Apple was like, we integrated GPT into the Messages app and now it'll just reply to your wife for you? I mean, I don't know why they would do that in an earnings, but given the I don't even know the right word. Given the prevalence of the term AI in earnings reports,
Prediction or predilection or something? I think
yeah, like given how often it shows up in the conference calls nowadays,
you just rip
I don't
faces
know.
off.
I mean, they haven't. Okay, so like I was remembering this the other day. 2 years ago.
I have to interject one more time. Apple is now sitting on its daily 27 EMA. It's being bought right now. You know, it is set up to do a face ripper straight to the moon.
Yeah, I
mean, if you let's look at a one-day chart on Apple and then look at the chart on SPY right now, it's looking kind of bullish here. Just be warned out there that it could be a relief rally coming at this moment. Go ahead, continue. Sorry.
Yeah, so like, but the only warning I have is like Apple could have a really, really good quarter, and then you get like Dan Niles, the guy that sounds like he's always super high whenever he talks about. Is that Dan Niles or God? Who's that other guy?
Dan Niles is he looks like
one of the guys. Sounds like they're from California, and they're always just like, dude, Tesla.
Like, when Dan comes on CNBC, you know we're at the bottom.
Yeah. But you know, they like roll those guys out every quarter, and they're essentially just telling you whatever like the market masters want them to say to like move it to where, and it works. I mean, you can't, like, I'm not even shit talking. They control the market with what they say, those guys. So like
Apple.
if they're feeling frisky, you know, Apple might go to 180. You know, like if not 150, you know, like it's.
So Apple's on a bear plane right now on its 1 hour. They did sell it on this 1 hour early this morning. So maybe they pin Apple here and wait for the report. I want to warn you out there, if you're listening to me right now, this is a setup to short Apple into this close. It's telling you that on the hourly, the trend is going to confirm the move down into this close on Apple. So just on an hourly time frame, it is bearish. But continue on with what can Apple say.
My only comment is the balls of these people shorting Apple into their earnings.
Yeah. Well, I don't. You know what the thing with me? I do listen into every conference call on Apple. 15-minute chart actually looks pretty good for Apple. The hourly does not. So for me, with Apple, it's like this. Like, so we're getting a little squeeze on SPY right now. The one thing on Apple that I want to say, or would say, would be this: is that Tim Cook is not known for overdoing.
He's not Lisa Su.
No, exactly.
Or who Lisa Su used to be, I guess, before the AMD goblins just forgot all about her now. But yeah, I agree with you. He's not. But also, what I was going to say earlier is 2 years ago, I was sitting in a waiting room somewhere and reading this article about, it was like right when Rivian went public and the Apple car story was, and this is years now. This has to be 18 months ago.
Yep.
And like no news, nothing since then.
None. Well, that's why I think,
maybe they'll never release another product again. I don't, but
well, remember they had the deal with Hyundai to launch the Apple car, it looked like, and then, not Hyundai, but Foxconn. I think it was Foxconn who was, like, it was something to do with Hyundai had a plant or something. Don't quote me on this, but it's vague now. But there was like a deal, a secret deal between Foxconn using a Hyundai plant to build the Apple car, and then Foxconn kind of leaked it, and Tim Cook got pissed off and said the deal's over.
Oh, okay. I didn't even see that one. I thought they were still working on all that. I always assumed that like companies are sitting in their lab trying to like, come up with the next thing, but maybe Apple is just like there
was a deal
Dow
done.
Chemical now, you know what I mean? Maybe they're just like a slow and steady.
Well, that's what I think that they are generally. It's like Tim. I always say Tim. Tim Apple, in my view, does not pump up his guidance. And then the other thing that I see Tim Cook do that that's fascinating is even through inflation, he's like, if you recall all of his guidances through COVID, it's like everyone's like, we're moving on, COVID's over. Tim is like, we realize that everyone's been impacted by COVID. It's a tragedy. We're still in COVID mode here because we feel bad for everybody and all this stuff. But meanwhile, what he doesn't tell you is, but we did jack up prices double and we're making bank.
He's
apologizing as he's making bank, and then of course what's the other part where that was the services wasn't flashy enough for them, but then they did actually print higher due to that down the road future quarters because it wasn't flashy. Switching to services, but I agree with you. They're not in growth mode, are they? They're not launching a must or a needful thing, right?
Yeah, okay, so one thing I just kind of connected in my brain, like accidentally, was Qualcomm's earnings, and they basically said nobody's buying smartphones right now.
Mm-hmm. But didn't they just
say no one's
buying
Qualcomm's chips
computers?
aren't in Apple products because Apple's vertically integrated now, but so maybe they aren't selling as many iPhones.
AMD just said that everybody's buying phones.
Huh?
AMD in their guidance said, no, like kids aren't buying computers anymore. Kids are buying PDAs and fucking tablets
PDAs.
And phone and PDAs.
Zunes. The kids are out there buying Zunes because
that was a rib. That was intentional. Like they're buying like tablets and like these kids aren't learning how to build a computer anymore, man. Unless you're a gamer or the PC. Fucking kids are like, what's a computer? I don't even know what that is. My own kids are like that. They're like, everything's on the phone. I mean, they use computers for school, but their interest doesn't lie in building computers. That's not where their interest lies. None of their friends. I think they'll be fine on that, personally. I don't know that I believe that people aren't buying iPhones, but I do think that they're not in growth. I mean, outside of services, what are they doing? I mean, they did make some big wins on. They actually beat a lot of the right to repair stuff. And my other thing with Apple is until they release a car or something, some new product, which is not normally in a guidance. So here's my take on Apple. They've been traded up into their ER. They hit $172 yesterday at 9:30 in the morning. To me, that looks like, hey, everybody's paying attention to the to rate decision. We're going to print Apple up, take the money, and exit. There's no reason to exit Apple right now, in my view. The second part is Tim Cook tends to not overdo the guidance. His guidance. And I've traded Apple for years. Whenever the price went crazy, it was typically launching an announcement that we didn't know. Not just a new product, but like, hey, we're splitting the stock, or I don't know, we've got something new that we're introducing. Other than that, if they trade up into that ER, I don't see too many instances where it goes much higher. And they're not pumpers, and I agree with you on that. If they introduce something like, hey, we did AI, not we're talking about it, but we did it and you didn't know it, I give you that, Winky. That would send the fucking stock to the moon. So I don't know what to say. I think even if it does go up, they probably sell into it, right? It's hard for Apple to run for like 2 or 3 weeks. Something material, right? I don't know. What do you think? Are you still there? I think I might have lost you. Hold on. Let's see if we can get Winky. I think I lost Winky. Yeah, I lost him. Let me send him another link right now. Winky, if I lost you, brother, I'm going to generate a new link and send it to you, okay? Hold on here. I'm going to send you a fresh link, brother. It's tough with, so I just, Winky, if you're listening in right now, let me tweet him. It's hard for me to, so I think I just sent him a new one. Let's see if I sent him a new one or not. Yeah, I did. I sent him a new one. So wait for Winky to get back in. It's hard for me to justify, even if, I mean, what do you guys think inside of, what do you guys thought? What are your thoughts on Apple earnings? I don't know that, let's see if I can bring some of this up. You think Apple rallies? Sell the news? Hey, Winky, I sent you a new link, brother, to jump back on stream. Or do you want to come back maybe at 3:45? We could do that. We could do it at 3:45 or 4. We could just do it again tomorrow. That was enough for today if you want. Thanks for being on, bro. Yeah, I'm on that. I'm on that. On sell the news on Apple. I am. If I had seen that yesterday at 9:30 in the morning, if I had seen price get to that price, I would have been like, I probably would have stopped streaming the FOMC rate decision yesterday and just been like, fuck it, let's buy some puts and let's just ride Apple down all day long. Because I didn't see that until after the close, I was talking about it with your wife's boyfriend, and I'm like, dude, if I had seen that, everyone's paying attention to the rate decision, and it was like exit liquidity on Apple yesterday. All right, I'm going to try to send it somewhere else. Proton's acting up right now, so I'm going to send a link to Winky right now. Again, hold on here. Hold on a minute here. Hold on, so I have to send a link to a biggreenpenis@gmail.com. Nice email address, Winky. Biggreenpenis@gmail.com. You're dirty dog, you. And I have more to talk to Winky about. I got a whole litany of crap. Like, you guys haven't been able to ask Winky a question where he answers you not in chat. Like, I want you guys to be able to ask Winky. We have Winky in chat every day, right? And I know you guys want him to expand upon questions that he has or you have for him. I get to talk, like, Winky and I talk every day. And every day, multiple times. Matter of fact, we text each other on and off most hours of the day. But you guys don't get that chance to talk to him, right? You guys hear me blabbing all day long, but you don't get to hear him. Wait a minute. It's not Big Green Penis. It's one. You sure you got that right there, brother? What you just sent me? I just got a no-go on that. It says it's not recognized. Oh, that's why. I didn't put big green. Dude. Big Green Penis @gmail.com. There we go. And we get shit. We could talk for 2 days. I think we could spend probably 2 days because it's been, what, 3 years or something? And 2.5 years. So I just sent it to you, Winky. So we'll see if we want Winky to rejoin us. I think, like, let's say Apple rips. If Apple rips into the close, that's just another opportunity to short. And I'm looking to buy 400 or 396. Like, I'm looking for that rotation trade. We're so close to it right here. So close to that rotation trade. I'm not in camp. We go below 396. I'm sorry. I don't know if you guys understand how important these levels are down here. But they're huge. Like, these are huge. You need some, like, and that was my only last thing that I had to say on this topic was, how do you get below 396? You need some, like, major sell the news on Apple. So here would be the counter argument to the bear case. That would be, we're weak into the close. Apple has a good report, and it's up and sideways on Apple. It's not quite sell the news. I know that a lot of, and this is another thing. May is another new cycle on a monthly time frame for tech. So if you got some weakness on Apple, let's say let's say you got weakness on Apple down to like 154, 159 or something. You could easily see it, or even just time. You could see Apple roll over and just trade sideways and down slowly. And then the next couple of weeks, I mean, you could see SPY trade sideways for a couple of weeks, and then Apple catches right back up to it again. I'm not on crash. I'm not like stock market crash right now. I've got some fears of it, but the one concern I have is probably Apple. If I had like one if I had if like all these bears are not bears, but collapse people are like, it's because of this and it's because of that, and I'm like, I'll be honest, it could just be good old fashioned selling, profit taking. Like I understand this as good old fashioned profit taking. I understand this as good old fashioned profit taking. This is Apple, by the way, on a 1 year chart. If you were a bear and you're like looking at me sober, like straight sober, and you're like, look, man, we're just taking profit. I'd be like, yeah, I get that. Like, I can wrap my head around that. If you're gonna try to blame it on, like where the chart is right here, if you're gonna blame a rollover because of some doom news, I'm gonna be like, fuck you, man. It was just profit taking. Like you can see it right here, man. It's pretty fucking simple, right? But I can also see the argument for the breakout here. And I think that Jerome knows that. And this is kind of where we are in the market. Does Apple break above? Even if we have natural selling here, does Apple break above and then just trade sideways and up with the rest of the market the rest of the year? We know that we have a pause here. We know there's a pause. We know it. Does Apple roll over here, down here, and this one catches up? We get 160, and then it's off and running again. No one ever said it's going to be easy for Apple to get above this negative channel. It's not going to be easy. Not going to be easy to get up over this channel for Apple. I understand that. So how deep does it go? Is this just like the month of May and June here? Like you got May, right? You've got the debts, or you got the debt fair and all that bullshit down here. Then it's off and running after that debacle is figured out, and it just keeps going higher. So let's just look at that right there. You've got... No, you don't see him back right now. Is he back? Hold on, let me see if he's back. Let me see if he's back right here. Nope, I don't see Winky back. So, this is May, right? May 5th. Well, my point here behind is when you're trying to break out of a negative channel, it's not normally like that simple where you just run and go. Cup and handle, baby. The dragon tail, baby. But the key point I'm trying to make, and actually we're kind of bullish here still. This is still bullish. We still have not traded below 164. So that's a feather in the cap for bulls, believe it or not. Now, my point though is you got May 5th. You know, you've got known volatility in coming up in June. Is he back on board again? It's being peculiar. Let me look, man. Hold on, brother. Let me look. Yeah, it's not saying that you're on. Let me generate a new link and send it to you again, man. Generate a new link. Copy. Hold on. I'm going to send you another link. It might have, I think they're only good for... There's another one. I just sent you another link. There's a new one. Try that one. So this is like the volatility with the debt crisis, right? Even if it does, even if we get that vol into that debt ceiling stuff, like that's still bullish here. See what I'm saying? Do we squeeze up then roll over? Like, how bad is the damage on Apple? I don't think you're getting what you're asking for if you're a bear. My bearishness extends to 160 to 153 at worst on Apple. I'm not in like crash Apple. I'm not in that camp. And to that point, just on a daily chart, it has been bought on this white line, man, on the day, going back and back and back and back and back. If you want to get really bearish on Apple, like super bear, you've got two legs. You got this one right here, and you got the big boy down there. So you need that daily cross. So I just want to show you this here. I'm going to show it to you right now. You need today to see two things. You need to see price. Let me see if you're on again, man. Yeah, I don't see you on, brother. Like, you need to see, just pretend that's a red line. You need to see price like break below this one, break below, reject. That's your first leg down. Break through, consolidate, and then that's your next leg down right there. This trade isn't viable at this point. My point here is that the trigger to sell Apple yesterday happened already, right? They got it. They made their money. They're going home. And now the second leg of this trade is below 164.25. It's below this number. It's below 164.25, and the target below right now is 153.72, maybe slightly higher. 156 is the next leg, and then your next leg down is below 153 or so, somewhere in there. But it's below 156. Somewhere in there. So the first leg of Apple going down has already happened. Mission accomplished. Until you break 164.25, there's no trade for Apple going down. You can't justify that trade until price gets underneath 164. Then hit the sell button. 164 with a confirmation. Take it to 156. 164 to 156. Don't get caught in that, man. You can say whatever you want, like sell Apple, all that kind of shit, but you can say it to your blue in the face, doesn't make it so. So Apple at this point has made its first leg lower. It's done going down. It's done. It's done its thing. It's made its first leg down. You have to be below 164. So right in here, you need to be below this box right here for your next leg down. If you're an Apple bull, if you see anything like this, any price action, get underneath, confirm it's going down, slam the sell button right there, because your next stop is 154. Does that make sense? So the trade is over, in my view, on Apple, the bear trade, until we get below 164. Trade is dead. Then you get another 10 points below 164. Let's see, I'll bring something up here. That's my take on Apple, is that the trade is dead. On Apple, if you see Apple break below the 164, that would mean that you're gonna get the break below this this monthly trigger too. We'll start sending it down below on SPY if we'll start sending it below, and you can see the flattening right now taking place on the 1 minute, on the 27 EMA and the 5 minute. We're starting to flatten right now. Look for some more squeezing happening here. It says it's connected. Let me see. Collab cam. Hold on, man. Let me, it's not saying that it's connected on my end. Can I, it's so wonky, man. I don't know why it's not working on my end. Fucking Streamlabs sucks. Can you, it's not saying it's connected on my end, Wink. I don't know why it's not coming through, man. It shows me yellow bars on my end. This sucks, man. I got a bunch of stuff to ask you. Let me see if I can I do that and then do this? Maybe that'll give me the what I'm looking for. Can I reset it? stop sharing and then share the mainstream maybe. See if that kicks it on. I'm having problems on my end, Wink. So here's my, so I'm trying to get Winky on right now. I'm having trouble getting Winky on. What I want to tell you is this, is for now, we are likely, yeah, it's saying it's connected on your end. On my end, I'm having problems on my end, man. And I don't know why that is. Maybe because you were already connected earlier or something. Let's see if I can. That's kind of crazy. And you're on the, I just sent you a new link. It ends with capital W, lowercase f. Is that what you have on that link? Oh, no, wait a minute. Hold on a second, Winky. No, it should be capital J, lowercase s. Capital J, lowercase s in the email, the last email I sent you. The link should end in capital J, lowercase s. Now, so here's my take. Here's my take. I personally want to see 396, my price target. I want to see that. I would really like to target this down below here. If we can get it done in 3 days, we can get down here, I'd be a happy buyer down here. Whenever I say this, we never get that low. So however we get there, if it's not Apple and something else gets us there, if it's like Apple panic selling at 3 o'clock or something, people exiting at 3:30 or something, 3 o'clock this afternoon, we can get there, maybe we squeeze up, we roll over into the bell. If it's the report that gets us down here, whatever it is, however we can get down here, I hope it's today. I hope it's now. I hope it's at 3:30. I hope it's at 4:15. I don't care if it's now, if it's the open tomorrow. I want that price target. I always feel better when it's down here. It gives me more confidence with you know, if I'm going to put like 10, 20, 30 grand on the market, I want it to be down here. That's what I'm begging and hoping for. Do we get down there? I can't guarantee it. Because Apple right now is saying it's done going down, that it's going to defend 164. All right, yeah, we'll do part 2 tomorrow with Winky at 11 a.m. We'll do so tomorrow's what we'll do. Tomorrow's Winky interview, we'll do your questions. Why don't you think about what you want to ask Winky tomorrow? And we're going to find out some cool stuff about Winky tomorrow as well. So we'll do like a 2-part interview where you guys get to ask him a question where he can expand upon his thought processes. We'll ask him about how he got started in the market, what's his trading style, like how he makes money in the market, how he stays active in the market. We'll revisit the frustration that he has with the market right now, and how to combat that, I guess, and how to stay in the market over time. Because you can hear what we talk about this privately behind our own conversations with I'm out of here. We have these conversations where it's like, yeah, maybe just close up shop for a year or two, and you come back to the market. You just let all this shake out for a couple of years. Yeah. So Bri Baldo just asked, how is the market absorbing all of these bank failures? I just showed you like a 10 to 15 year cycle. I just drew on it. This is a natural part of the cycle, the market cycles. It's not like magic or anything like that. There's a part of cycles. It's a natural part of. It's the one that I showed. It's this one that I showed you right here earlier. It matches up perfectly. Here, where are you at, Bribaldo? I'm going to send you a link to it so you can read it. Here you go, brother. I'm going to post a link to it so you can read it on your own. Middle of the day pump right now. You're going to get triggers there. You're gonna get, you know what's really cool? Is that I'm working on the triggers and the velocity and stuff right now. And I'm rolling them into, so the tool will have the bearish and bullish velocity tied into the triggers on each individual ticker, but then I'm also tying in a tool with it that rolls in the 27 and 113 EMAs on an hour, a day, a 15-minute, a 5-minute, and a 1-minute. In and some math that says, hey, you're bearish on the daily, you're bearish on the hourly, you're bearish on the 15, you're bearish on the 5, you're bearish on the 1, or you're bullish on the 1, the 5, and the hour, and then you're bearish on the day and the week or something. So I'm gonna tie in all. Or I am right now in the background. Last week, I was trying to tie in all that stuff to make a combined tool. And we've got actually Winky working on it too now, or I'm trying to get my attorneys to get him an NDA for him to help work on it too. So it's gonna be like this. It's like a multi-tool. It's got like both tied in. It's kind of neat. It's gonna be badass. So you're gonna get both of those into one tool. So you get triggers, velocity, and bull bear playing cross alerts, all built into the same mathematical equation with fractals. Squeezing higher now to 405.64. Probably shouldn't say that stuff, but whatever, fuck it. If you're hanging out with me every day, you can hear it. SPY, man, I'll tell you what, that weekly is just coming up from underneath right now in SPY. Don't fuck with that weekly, dude. That weekly will fuck you up. Rejection right now on the VIX weekly. The VIX rolling over right now. Expect VIX to come back down and tag 1885. I'm going to show you the VIX right now. Here goes the VIX being rejected. It's a 30-minute chart on the VIX. This is your middle of the day squeeze on SPY. Should bounce again later in the day, right? So somewhere in here you got SPY bullish, and then hopefully you get SPY weak again. This is what the bears want over here. Right now, though, VIX weak. Relief rally in sight right now, trading 405.77. Yeah, I want you guys to
We have posted the live video to Bank of Canada's Governor Macklem on the feed for all those interested.
SPY squeezing 405.82, 405.90 right now. Well, it would be, you know, if Apple squeezed up and over that negative channel, oh, man. That's going to piss some collapse bears off, no doubt. I mean, that downward channel, that downward dog, has been going on since December 31st, 2021. 2021, December. All eyes on Apple. Can Apple break us out from jail? Apple's been in jail since December 31st, 2021. Tim Cook, he's had the GIMP suit on since December 31st, 2021. I'll tell you what, man. I'll say one thing. Even if the initial reaction is to sell that negative channel, like just for the principle of it, one of these days, you know, if you're a bear out there, you know, like at some point you get run over. I guarantee it. 100% of the time, you get run over eventually. Permanently. We never go back there. Ever. You look back every 15, 20, 30, 40 years, we never, ever revisit those lows. So, you've been given, if you're a bear, you've been given since December 31st of 2021. Good old fashioned market run. As time passes, every 1 to 3 years, we get a run. And we're getting a little long in the tooth. Like we're not on the front side of downside, we're on the back side of it. We're not on the back of the front side of it. We ain't just getting started. We were getting started in December of 2020. One of these times when we're up here, like where we are right now, I don't know if it's this time. You know, this time is different, as J-Pow said yesterday. But one of these times, us being right where we are right now, it's gonna get fucking steamrolled. And when that happens, whenever that happens, if it's today, if it's next week, next month, 3 months from now, if it's 2 years from now, whenever that day happens, it's gonna be hilarious. I'm gonna laugh my ass off. Because it always happens every time. When it happened during COVID, it was probably one of the funniest ones I've seen. You know, you're talking about taking $1 million away from sell side, like a retailer. I think it was horrible. Like, we came back and checked. I don't know if any of you guys were trading then, but like our first rip up, our first real true bottom, we went one bottom, then we ripped a bunch of times, but one big rip, and then it really blasted down. But I remember that big bounce we got. It rolled one more time, like one big giant. Hey, let's just go back and check. And fucking, it was like ultra bear. Like we're crashing even deeper, and we didn't. It just ripped faces again. It was insane. So one of these times, I don't know when it is, I don't know when it happens, but when it does happen, it's always enjoyable. Yeah, I'm not a I'm in the camp who's asking that? Superman Sphere is saying, yeah, but those stocks are only 20, 30 years old. What happened to the darlings of the 80s, 60s, 80s, and 2000s? I'll be honest with you. If you're asking that question, right? If you're in this market for 10, 20, 30, 40 years, you will have to have graduated to owning the S&P 500. We go through cycles. Well, not all of them. Disney. I had Disney stock when I was, I had Disney stock 20 years ago. 30 years ago, I had Disney stock, actually. So some of those stocks are worth a fuck ton of money right now, even with the price. Apple, one of those tickers. Like, you're talking about 20, 30 stock splits, 20 to 30 stock splits. So when someone's out there and they're like, yeah, but this stock's only $100 right now, you're like, yeah, but you didn't go through 20 stock splits. You know, so you have to consider that. There's been splits along the way. There's been dividends paid along the way. And there's also selling calls and selling puts along the way that just generate fat cash, like super fat cash. Winky out there gifting tier 1 subscriptions on Twitch. Thanks, Winky. Winky just dropped a hammer out there on Twitch. Brandon Fisk followed. Vincent Lowe subscribed. JT Barrett followed. KKMEP2803 followed. Winky just dropped Winky's like gifting subs to everybody right now. He just gifted subs to Colorado Kim, Larry F420, Connor Wilson 12, Eric 5500 HHH 1982, Superman Body, Swemo, Terrafart, Ibuprofen, Lord Titty, ZX, dude, you fuckers on Twitch have some of the most kick-ass names. Wangutang, It's Fitzy, Back to Mush, Popta Haas, Shooty Thompson, Ryan Clad on Twitch, because yes, so. I destroyed that one. And Ganks 1337. Winky's just hammering subs to people right now. Squeeze and I right now trading 406.18. Relief rally in sight for the S&P 500. We saw the VIX rolling over here. Just be conscious of that we are getting a relief rally on the SPY. Market wide right now. Let me run that stock scanner in the background. Oh, I got a new one. Ready? Let me look at it in the background and see what it's doing. I got a new one, folks. Ooh. You guys ready? This is a good one. FIP. F-I-P. FIP. Now, this one I really like. FIP. Do your due diligence. I am always looking for companies that, you guys ready? If you're a young trader, young investor, listen closely. I post tickers. I have a stupid high win rate on these tickers. Stupid. Like stupid. Buy and hold. Some of my parameters are that they've IPO'd in the past 3 years. That they're being bought by banks, institutions, and hedge funds that have very smart people that investigate these companies. That they're selling something real. Not like, hey, we're promised they'll have a Tesla truck in 10 years and not provide it, or it'll take 20 years to deliver it.
By signing up at tothetick.com.
That they have real sales growth every quarter. That they have kick-ass guidance. That they have real money coming in the front door. That they're profitable right now, and that they're undervalued, and that they're being bought up. So whenever I tell you guys these companies, go back and do due diligence on these companies. FIP. F-I-P. Keep an eye on them. FIP, baby. FTAI Infrastructure, Inc. They're an industrial conglomerate. FIP. I know, don't piss off. I don't want to piss off Tesla fanboys. I love Tesla. I want you all to know that I do love Tesla. I'm a stinky Tesla bull right now. I want my shit, man. I want my truck. And I don't like the I'm not a fan, dude. I gotta say something. I'm not a fan of the production model. I'm not down with the production model pictures that I saw. I saw those pictures. I don't talk a lot about Tesla on this show. I'm a big Tesla bull, and I don't make a lot of comments about that stuff, and I was not happy with the truck as it's being presented right now. Oh, baby. Binky G tipping through Super Chat, baby. Hopefully you guys are making money in the squeeze right now. Please like and subscribe this channel. Thanks for the support, Binky. Appreciate it, my brother. Yeah, did you guys see the pictures of the new truck? What the production model is going to look like? I'm not happy with it. I don't mind the new Tesla truck. I want two things. I want like a old school Mazda, or remember the old school like the T1000s from Toyota? I want like a small truck. It's like small, just a small like little pick me up. Those trucks are super cool, man. I would love something like that. And then I do like I guess I want three trucks. I want I'm so greedy. I'm like, I want the Toyota T1000. I want the super cool Cybertruck. And then I want the F-150. I do. I want like a classic looking truck. I want like the whole lineup. So like if you go and you're like, I'm gonna go get a Tesla, or I don't want to get a Tesla truck because I don't want to look like a cyber dork. I'm a man's man. I could be like, okay, well there you've got your man's man truck too. Like I want the full lineup. I want the Subaru. Like I want a Tesla Subaru. I want a Tesla 3 versions of a truck. I want like 2 versions or 3 versions of a Jeep or an SUV. Like I want all that shit. That's what I want. I think that should be badass. Something for everybody. Shit, I'd probably own them all. I'll be honest. I'd probably own them all. That would be super cool. Because I'll be honest with you. Conceptually, I like the Lightning. I got nothing bad to say about it. It looks great. I can't knock it. Like I can't knock it. And like all the truck producers, they all have that version of that truck, right? Chevy's got a version of it. Ford's got a version of it. So why not have one? I don't want any reason for somebody to not buy one. And especially if they're better on price. No brainer. No brainer if it was like affordable. You know, like some guys like I just started a painting company and I can't afford like $150,000 truck. I saw like F-150s, not even F-250s for like $50,000, $60,000. Like, if you had like a $30,000 pick me up for like a construction guy, like how you're working around town or something, like you can only get 250 miles on it. Most of these guys don't drive 250 miles each way. They'll go down. These guys, like, they go do a painting job and they stop over at the corner store and get a 24 pack of Bud Light and they go home and they drink it. Yeah, the prototype was badass. The prototype was bad. Dude, I love the prototype. But in comparison to what they're trying to launch to people, I'm like, and I've got an order in, so I'm like, yeah, I don't know if I want that. Yeah, dude, an EV Camino, dude, the Camino. You know what else? Like I was upset with, and Tesla's not the only company guilty of this. Like I don't like the. I used to have a Jeep. I used to own a classic Jeep Grand Wagoneer, and in 1986, fully loaded Jeep Grand Wagoneer. I'm talking like leather, electric seats, heated mirrors, electric mirrors, electric back window. I had the wood door, the wood paneling down the side and the back of it. This thing had 4-wheel drive on the fly. It had lockers. on it as well. It was like way ahead of its time. And the Ford Bronco that they just released, I'm like, that's dog shit. I'm not a fan of the new Bronco. Like it captured some of it, but not all of it. And even now, like when I think back to that truck,
Surely expecting the results from the Fed Reverse Repo operation.
there are people out there that'll take these old trucks and they'll take old Mustangs and stuff, and they rebuild all the inside of it, but leave the OG stuff. Like they'll rebuild the brakes, the suspension, the engine. It's all new, but it just has the look and feel of that old vehicle. If you did something like that with like a Bronco or a Jeep Grand Wagoneer or like something like that, would be so badass. So badass. Yeah, production regs killed it. Yep. So bad. Like I bet you couldn't even get the like old school Jeep Grand Wagoneer. Dude, I had the baller. It was red. It had the racks on top. Everything was chromed out. My wife now, when I owned it when I first met her, she rolled it into a ditch once. That thing came right back out.
$2 trillion at the Fed Reverse Repo operation.
Came right out like 20 degree, down in a ditch, didn't need it towed. Like just badass. Yeah, iconic truck restorations are awesome, right? It costs a lot of money to do that, but some people do it. A lot of car aficionados do it. It's basically a modern car with the shell of an old car. Yeah, that's badass too. Nino's saying there's a guy with an old Bronco who converted it to electric. Super cool stealth Bronco. That's badass too. Like the old Broncos are badass. What's the wide one? The one that had like the you could take the shell off the back, and it was open. Like you take like the back shell off. Is that a Bronco? That might be a Bronco too. The wide one. Was there like a model of the Bronco that was like super wide? Like, I like the Bronco. Oh, the Scout. I'm thinking about the Scout and the Bronco. The wide Bronco is what I'm thinking about. Whether we take the back shell off and it's open air, and then I like the old Scouts. I'd love to see a new Scout built, like an electric Scout. Be badass. Yeah, the Blazer did that too, didn't it?
Strengthened spot 6% per US dollar to the US dollar, putting it on a course for the biggest gain in 3 weeks.
Squeeze and I are now trading 406.50. Watching the VIX in the background. VIX has more down to go, believe it or not. We could start squeezing heavy and hard into this hourly trigger. Some kind of a target up in here. Time is not on a bull's side, though. They got a lot of work to do. Trading 406.69. It's 118 relief rally in the middle of the afternoon, just like when we have weakness on a trend day up. Have about an hour left right now. It's 1:18 in the afternoon, squeezing up into the 1:30, the full hour, and hopefully we can get keep trading higher into the 2:30 hour before we get that Apple weakness into the bell. Yeah, my cousin, when I was a kid, had a 1971 Dodge Charger with like the huge back on it. And it took like really wide slicks and stuff, and like big wide tires on it. It's a badass rig. That's right, I put a lipper in. Dualies, baby. Moog saying Cybertruck is stainless, is going to show off every scratch and ding. I think people I'm talking to are saying that they're going to wrap them. No, they're going to wrap it when they get them. Everyone's going to put a wrap on them. I like Mazdas. I owned a Mazda at one time years ago when I was a kid. I owned a I didn't own a Mazda. No, I did. I owned a Mazda Miata at one time. for a couple of years. I had fun with that car. I mean, of course, you're like, I'm not really like one of those alpha guys that has to have like a certain look. Like, I don't have to have a Mustang. I'm not that guy. I blasted the Miata, but what I was thinking of was the Sonata. I owned a Sonata for some time. I love that car. Cheap luxury. A lot of people have given them grief over the years, but I enjoyed it. I like Asian luxury cars, love them. Yeah, I think that's from what I've heard in discussions is everyone's going to do wraps on them. Make it a Warthog. Mike, my one thing, so when I first put my order in, I almost didn't because some of you may or may not know this. So when I first considered buying a Cybertruck, my only concern
was Macklin, when asked about the latest Fed moves, says he's not terribly worried about the pressure on the Canadian dollar.
My only concern, my true concern on it was its wheelbase width. I didn't like, or I have done a lot of off-roading.
TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
I've done a lot of off-roading out west, not the West Coast, but out west, and they call it, they say like you get Utah's pinstripes. So if you're like a 4Runner, they're kind of slim, and that serves two good functions.
Of just over 50 basis points with the Fred. By historical standards, that's not large.
Two things. First one would be a lot of these trails are very thin, or they're not wide at all. And when you're heading around corners and stuff, you end up scratching up the side of your truck, your rig, with rocks that are jutting out and branches that are jutting out. The second issue is on some of these tracks, you could be in a really tight spot, and you've got directionally, especially on steep inclines and declines, you're trying to watch to make sure someone's not coming down or up while you're going up or down. And if two vehicles are too wide, it can be a real problem, like danger. Like you try to slow down and you just start sliding down, or you lose your traction going up and you start sliding back. It'd be very dangerous. I'll give a case in point. I was like, man, you try to take, there's certain parts of the White Rim Trail that I wouldn't trust. I would not trust the Cybertruck on. Squeezing at 407.09 right now. 407.13 with a price target above that little white line we got up there. VIX selling off right now. Look for the VIX to settle down around $18.90. Yeah, I don't mind the look of scratched stainless steel either. So when I used to do a lot of backcountry stuff, hiking, biking, take my truck everywhere, took 4-wheel drive vehicles everywhere. I'd go off grid for like 2-3 weeks at a time, and 4 weeks sometimes. I'd go in the backcountry and not come out. And that's like a badge of honor, right? You get a 4Runner with scratches up the side of it, you know that guy takes it off road. And I'm not talking about like to the beach or the dunes or like your local Midwest place. Like you go out west, you go to like Utah, you go to like New Mexico, Arizona, Colorado, and you start going off-roading there. It's some badass shit. Like, it is badass. You go up into Wyoming, do some of that shit, badass. Texas, badass. Like west, southwest Texas, I think. Like Big Bend National Park, places like that. It's patina, baby.
It's WTI, crude oil bouncing off lows, up 1.5% to
Badass.
62 cents a barrel.
Vastfinist is saying that AMD is getting funding from Microsoft for AI, excuse me. NVIDIA dropping on news of AMD MSFT partnership right now. FIP ripping right now. AMD, baby! AMD with the big green bars! Woohoo! AMD trading $87. Woohoo, doggy! Only 0.6 days to cover on AMD. Oh, yeah, baby. Oh, yeah. Oh, yeah, baby. Same setup on the shorts on March 10th on AMD. You make the news whatever you want the news to be. It was the news, Cap. Oh boy, oh boy, oh boy. AMD shorts trapped, baby. AMD trading like a what does Winky call it? Yeah, goblin stock right now. I'm using that one. That one's staying on stream from now on. AMD trading like a goblin stock. AMD just destroyed. Oh yeah. Woo, dog. MSFT ripping faces off right now, too. Goblin mode. That's it. If you're in chat, if you're in chat and you're talking about goblin mode, that's now a permanent. That's like the Jason Hendricks line. That shit's permanent now. AMD. AMD trading $87. Whoa. NVIDIA. What happened, bruh? What happened, NVIDIA? NVIDIA trading 272. Losing its pants. Congrats, dude. Nordic Trade, congrats, dude. Short NVIDIA. Good job, brother. Dude, AMD still squeezing right now. Blasting off still right now. Closing the gap above. Returning to the scene of the crime. Can it get to 89.69? Hilarious. Unreal right now. Woohoo! Trading 87.78 right now. Whoa, dog. AMD. AMD. AMD daily trigger above at 89.20, 89.12 on the daily trigger on AMD. 89.12. AMD didn't even have to wait a couple weeks. Didn't even have to wait a couple weeks. 2 days. 2 days. Hell yes. 2 days it took. Can I buy AMD calls now? Love it. Love it, love it, love it. Can I buy AMD now? I need to save that I need to save that chat. Lord Pente, I love you. AMD, they did come from behind with AI. They did come from behind with AI. I gotta post that tweet on the chart. Where's that tweet at? Interested in a short covering rally on AMD over the next couple weeks. When did I post that? May 3rd, 7:07 a.m. May 3rd, 7:07 a.m. Let's see. May 3rd, 7 a.m. Oh, wait a minute. Hold on. Let's see if we can hold on here. Wait a minute here. We'll save that one there. It's a good one. Hold on a second here. Revenge tweet. Revenge tweet. Hold on here. Let's see if we can do this here. Let's what do we do there? See if we can let's bring up NVIDIA or AMD. AMD. Okay. Oh. What was that there? 89.99 for a top tick on AMD. Where 7 a.m. What do we got there? Let's do a little snapshot here. 7 a.m. What time is it? 7:07. 7:07 right there. Right here. Right there. And right there. So this was my mainstream right here. What is that one right there?
Bank of Canada's Governor Macklem says we don't want to lose.
Right there. Right there, right? See where my cursor is right there? Right there. See right there? Right there. That's when I posted that tweet right there. So let's see what
economy is rebalancing, but still in excess demand.
What does that say right there? What is that? Oh, wait a minute. What is that one? 1 second. What does that one say right there? Well, that's a good one right there.
This stream is sponsored by To The Tick. Get free daily Fibonacci and market profile levels by signing up at To The Tick.
Not gonna happen. Not gonna happen. Not gonna happen. And I'm like, at a time like that, could take couple weeks. Probably not done either. This could run for this could take 5 sessions. Like, this ain't over. Even if it pulls back, it ain't done. It ain't done going up. So can you guys look at 2 week out calls at $83 calls for 2 weeks out? What they would have printed right now at this moment at 89. I bet you it prints fucking 5,000% or something stupid. Ooh, yeah. Oh yeah. Oh, that was a good one. Oh, now trading 90.16 right now on AMD. Ooh. Ooh. Humana. And Winky, what did Winky say earlier? Winky was like, yeah, if Apple says something like we've integrated AI and without you guys knowing it, Winky just gave you your answer. For Apple going to the moon, some similar. Oh, John Haggerty, baby. John, did you buy those 2 week out calls on AMD? Yes. Shit posting on Twitter. Get a shit post on Twitter. Send that one. Send that one. Send that one. Send that one. Shit posted on Twitter. AMD just broke above its daily trigger. AMD has now completely reversed its daily and hourly velocity. AMD ripping faces off right now. I bet John did. Winky's like fraud. Can somebody like cut and paste that tweet and put it on a chart with AMD? I don't know. You know who used to be able to do that really well was Quinn. Quinn used to be able to like take a tweet and then post it to a chart. Oh, there we go. Look at that one. I'm going to slide that one up right there. Ooh, look at that. Those sellers trying to come in right now. Seller rage on the SPY right there. Seller rage. High over here, high over here. We got a bull cross coming right now. You have a bullish cross coming on the 5-minute right here. I want you to see it. It's right there. And here it is in the back end right there. Whoop, 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 whoop. If price can stay above 406.51, there it is right there. Oh boy, to be short AMD today. Woof. To be short AMD today. That's got to suck. You're getting a phone call. You're definitely, if you're a short, if you're actually short AMD, good luck.
Bank of Canada's Governor Macklem says I'm more worried about the outside risks to inflation.
I was looking at that short interest on AMD and I'm like, man, this looks just like March 10th. I'm like, this shit's going to rip faces. It was the same short interest, same days to cover, same everything. Exactly the same. I was like, yeah, a couple days, 2-3 days. Could run for like 2 or 3 weeks. I'm like, yeah, that's going to happen. Yeah, it looks like MSFT got some action too on that trade, right? Yeah, Winky. Dude, the day before, or the day of earnings, I was like, the only fucking fly in the ointment, dude, is the shorts. They're shorting this fucking thing. And I was looking at March 10th had the exact same setup, and it just went to the depths of hell. And like 2-3 days later, it just started fucking ripping faces off. Finger came off AMD, and it was like, woof. And now we know we've got news, but it's always fucking news. There's always some bullshit news that comes out, and they're like, that's why it squeezed. I'm like, yeah. You probably knew that news was breaking. All insider shit. Yeah, I don't buy it for a minute. I don't. I don't buy it for a minute. I know that they know. They knew before. Can AMD have more upside? Fuck yeah, I can, but it's going to pull back at some point.
See less chance of a.
You're going to want to grab it down below at
spiral compared with last summer.
84.43 right now. Be a nice place to buy it. 87.63. The initial reaction will pull all the way back. They'll clean it all up, and then you'd have a continuation down the road. Gorgeous AMD. Absolutely stunning right there. Look back on March 10th, March 13th, and you can see how it violently moved the same way. Damn, that was beautiful. That was stunning. AMD, baby. Woo, dog. AMD. AMD, baby. Someone's getting a phone call and an email. Excuse me, sir. You're going to need to deposit a bunch of money in your account today. We're going to close your position on and take everything that you have. Someone's at work right now. They're just like, what the fuck just happened on AMD? Oof. Look at that beautiful bull flag on AMD. Giant bull flag. Just rip faces off right there. Ripping faces off.
Bank of Canada's Governor Macklem says we are really not thinking about interest rate cuts.
All right, it's 1:41 in the afternoon. I'm going to take a quick break right here. I'm going to put on some, you going to put on CNBC or no? 15 minutes, just me gone for like 15 minutes. You're looking for, it's a 5-minute chart that I have up right here on the SPY. You do not want to see, so you're going to have, this is a liquidation break here. This is sell side not wanting the move higher. So sellers want to get underneath this 405.89 and roll this back over. Bulls want to see price consolidate and squeeze higher. Enough time for this 1 minute to catch up over here. So just next 15 minutes, I'm going to go potty real quick and grab some more coffee and stuff, so I'm ready to go for the back half of the day and for Apple earnings. So we want to see price stay up here for a price target above 408.22, 408.62, 408.95. Time is not on Bull's side. We know that. As we get closer to the 230, 330, you're going to get selling in Apple likely. Likely we'll get some selling on Apple into the end of the day here. That should impact the SPY at some point, so time is not on Bull's side. They've got about an hour left. It's 1:42. They have basically till 2:30 to start wrapping it up. Yeah, I don't think it's bullish. I think it's a short squeeze, man. I'm on short squeeze on AMD. That's all it is, in my view. The news can be whatever it is. I don't care. I've got no I don't care. I care about news, but you know how news drops and how things happen. I'm just like, man, I know this shit's happening on this fucking ticker. I was like, it was my only fly in the ointment. When they sold earnings, I was like, yeah, this is bullshit. I'm like, this is definitely bullshit. Someone was short this fucking ticker. Bullshit scam. They had like 0.6 days to cover too. That's all they had, like 0.6 days to cover, and I was like, it was the same setup. I'll try to bring it up and show you what I saw. Yeah, I don't think it's done either. I think it's gonna be. I think you look back on March 10th, it's gonna be that same kind of run. I mean, I think it's gonna do like this nonsense like this all the way. But that's why I was like, buy like two. I was like buy like a month or 2 month out call so that it'll probably take a couple weeks for it to play out. Probably take like 2 weeks for it to play out in total. Fed swap show 1 in 3 chance of June cut odds. Cut by July, fully priced in. No, just heads up on that one. Give me like 15-minute break. I'll be right back with you guys.
If you've ever spilled grass seed on your lawn and accidentally created the world's largest bird feeder, then you know that lawn care isn't easy. If it were, everyone would do it, as well as TruGreen does it. Our science-driven expertise ensures your custom, nutrient-rich treatment works to deliver a green...
This is an ad right now, but this is CNBC in real time.
today and save 50% off your first application. It's time to trust your experts at TruGreen. TruGreen. Live life outside.
72 holes of northern Michigan golf, just a short drive or long 4-iron away. Garland Lodge and Golf Resort in Lewiston offers 4 championship courses on over 3,000 acres of unspoiled northern Michigan wilderness. Plus comfortable lodging, flavorful restaurants, and an outdoor tiki bar, all in one remarkable setting. Packages start at just $130 per person per night. Visit garlandusa.com for details.
New customers, download the DraftKings Casino app and use code DRAW. For a limited time, get a deposit match up to $2,000 in casino bonus funds with DraftKings Casino. If you or somebody you know has a gambling problem and wants help, call the Michigan Department of Health and Human Services Gambling Disorder Helpline at 800-270-7117. 21 and over, Michigan only, 1 per opted-in customer, minimum $5 deposit, max match $2,000. Deposit and bonus amount required 15 times playthrough within 30 days. See terms at casino.draftkings.com/players choice. Restrictions apply.
Welcome back, everybody. Could small business confidence actually be brightening? The latest CNBC Survey Monkey read on small business is out, and Kate Rogers is here with the full results. Hi, Kate.
Hey, Kelly, we surveyed 2,000 small business owners in late April. Here's what we found. First off, owners who have confidence in the banking system versus those who don't came in at a nearly even split at 49% and 50% respectively. A majority of small business owners say that they are confident their business capital is secure, but less, about 53%, say it's easy for them to actually access the capital needed for operations. And 2/3 of respondents said that they were banking mostly at community and regional banks, with the remaining 40% at larger institutions. Now, generally, as you mentioned, small business owners are feeling somewhat more confident, with the Business Confidence Index showing an overall score of 46 out of 100. But the broader outlook on the economy, not so hot. Just 21% say that the economy is good or great right now. Part of the big issue here is inflation. It's been a stubborn top concern for owners for more than a year at this point. But as you and I have been discussing, I think that banking picture is going to be really important as we move ahead.
Absolutely. And that's why I was surprised to hear that their confidence might be brightening at all in the near term. But maybe it's just a sense of, okay, doomsday, but not now, or something like that.
It's such a mixed bag. So we did see this quarter that more owners were feeling that they were going to increase their headcount over the next year and that their revenues would also increase over the next year. But broad outlooks on the economy are not great. So they're feeling somewhat better. But again, this banking issue, we have to see how that continues to play out. This is our own CNBC data. We also have the NFIB Optimism Index out again next week for the month of April. So that will give us a good look there as well. But I think that's going to be a really key concern moving ahead.
For sure. Kate, thank you. Kate Rogers reporting today. Still ahead, this name up about 17% year to date, and Morgan Stanley's Ron Camden calls it the best growth story in the REIT space, predicting 10% earnings growth over the next few years. What's got him so bullish despite the commercial real estate concerns next? And throughout May, CNBC is celebrating Asian American and Pacific Islander heritage with stories of some of their influential business leaders. Here is Glow Recipe co-founder and co-CEO Christine Chang.
It's been incredibly rewarding to build Glow Recipe together with Sarah, my co-founder. We know that female co-founder duos are unique in the industry, and it's been an honor for us to leverage our heritage and be able to storytell around how skincare should be this beautiful, joyful, sensorial self-care experience. My advice for other AAPI founders would be to take up space. Don't minimize your achievements. Don't be afraid to ask for more, ask often, and advocate for your achievements. You deserve to shine.
If you've ever spilled grass seed on your lawn and accidentally created the world's largest bird feeder, then you know that lawn care isn't easy. If it were, everyone would do it, as well as TruGreen does it. Our science-driven expertise ensures your custom, nutrient-rich treatment works to deliver a greener, healthier lawn. And it's all backed by the TruGreen guarantee. Go to TruGreen.com today and save 50% off your first application. It's time to trust your experts at TruGreen. TruGreen. Live life outside.
New customers, download the DraftKings Casino app and use code DRAW. For a limited time, get a deposit match up to $2,000 in casino bonus funds with DraftKings Casino. If you or somebody you know has a gambling problem and wants help, call the Michigan Department of Health and Human Services Gambling Disorder Helpline at 800-270-7117. 21 and over, Michigan only, one per opted-in customer, minimum $5 deposit, max match $2,000. Deposit and bonus amount required 15 times playthrough within 30 days. See terms at casino.draftkings.com/players choice. Restrictions apply.
Hey, are you tired of having employees who are more interested in making TikToks than doing their job you hired them for? Well, Forge Industrial Staffing is here to help. Our expert team will find you a hardworking, dependable staff who won't flinch at the sight of a little sweat or dirt. So, if you're looking for workers who won't leave you hanging, contact Forge staff today. Forge Industrial Staffing, because you deserve nothing but the best. Empower your business with Forge Industrial Staffing. Visit forgestaff.com or call your local office today.
Ashley's new lower prices are here. Look for price reductions on hundreds of items throughout the store and online. We found a way to bring you your favorite looks at lower prices without compromising quality. And now we're passing those savings on to you. And for a limited time, find unbelievable savings on some of our best-selling collections. Plus, with 72 months, no interest, it's easy to spruce up your home, no matter your budget. Visit your local Ashley store or ashley.com to shop and save today.
Electrical lines can go down because of weather, accidents, or falling tree limbs. And anytime one goes down, it's dangerous. So DTE asks that if you see a downed line, please stay at least 20 feet away from it or anything it touches. Then report it by first calling 911 and then DTE at 800-477-4747. Remember, if you ever see a downed line, please stay away and stay safe. A safety message from DTE.
Welcome back to The Exchange. The regional banking turmoil touching off commercial real estate concerns. The sector already dealing with COVID-related vacancy problems and big box store bankruptcies. Those factors showing up in earnings this week. Manhattan-focused Vornado reporting weaker than expected revenues. Mall operator Simon Property Group missed on its funds from operations. VNO pairing losses today after trading new 52-week lows, while SPG is down about 6%. It's not all bad news, though. Shares of Extra Space Storage, because we are a storage nation, are up 8% after reaffirming full-year guidance despite a miss. And senior housing REIT Welltower is only down fractionally. And that was our mystery chart. Welltower seeing earnings and margin tailwinds on its earnings call yesterday. And it's the name my next guest says is the best growth story in REITs right now. Let's bring back Ron Camden, Morgan Stanley's REIT analyst. It's great to see you again, Ron. Welcome.
Great to be on.
So let me just start. I mean, I know it's not, the most dazzling thing to talk about, but when we talk about senior living and that REIT area, it was actually an area of concern that Huntington Bank flagged for us a couple of weeks ago. For them, it was more specific to long-term care, where they just said reimbursement rates hadn't kept up with inflation. So I am curious about, if there's any places other than self-storage to be in the REIT space right now.
Yeah, for sure. So if you think about the backdrop in the senior housing space, during the pandemic, they lost a tremendous amount of occupancy. So industry occupancy was 90% before the pandemic, and it went all the way down to 75%.
Wow.
So what we think is really interesting about this space and the REIT is there's a massive opportunity as occupancy gained to see pretty outsized organic growth out of the sector. So if you look at the National Housing and Care data in 1Q23, you actually saw occupancy gains industry-wide of about 250 basis points, and you saw rent growth coming through sort of in the mid-single-digit space. So when you take a step back and you think about the senior housing recovery, there's really limited ways to play it in the REIT space, and Welltower is one of the few ways to do that. And we are looking for organic growth to drive over 10% earnings growth, which should be twice the rest of the REIT group.
Yeah, I mean, it's kind of the REIT play on healthcare, and everyone knows that, if you feel defensive and bearish, you pile into healthcare, and this has some of those characteristics. Let's go back to some of the main points of concern, which are obviously commercial real estate and to some extent retail and shopping center. What inning are we in terms of pricing that in? Because I thought you made an interesting point here that REITs have more negative news priced into them than the S&P 500. That seems like not an efficient market.
Yeah. So when you think about the commercial real estate market, it's a big and diversified market. We size it at about $11 trillion. And the connection to the banks is that it's a levered asset class. So you have about $4.5 trillion of debt outstanding. if you look at the lenders, about 40% are the banks. And if I double click that 40%, you're going to see that 70% of the 40 are the small banks. So there's no question that the fact that the banks are tightening lending conditions is going to have a negative impact on the commercial real estate market. So I think the reason that the REITs have priced in so much is because the REITs also have leverage. So the market's anticipating potential downside in property values, and that gets magnified in the equity values that you're talking about. I think you are getting closer to the end, but you're not quite there yet, because even though some of the sectors like office have priced in a lot, there's other parts of the real estate market that still have really elevated leverage, that still have maturities coming due, that have not been fully baked in yet. So at this point, we still think there's potentially more downside before it's all clear.
Yeah, and I guess the question just becomes, what I don't want to use a word like contagion, but when we start seeing the banks move as quickly as we are, what does that mean for trading the REITs? What happened in 2008?
Yeah, it's a really good question. The way you want to think about the REITs is, look, there's 16 different subsectors.
The top Biden national security officials plan the Saudi Arabia visits, so Sullivan and Blinken to visit the kingdom, says people familiar with the matter.
Housing was one of the ones that you mentioned on. Industrial logistics is one that we find really interesting. But you do want to be really, really careful about the parts of the market that do have really high leverage. We talked about office initially, but if you look at some of the lodging names, if you look at some of the retail names, you want to steer clear of those because, again, as property values come down, if you have leverage, that's even more downside for the equities.
What's wrong with the lodging names?
So if you think about Pebblebrook,
So White House Budget Director Young says nothing is off the table in terms of potential length of the debt ceiling extension,
which is about 1 to 2 turns above where the rest of the REIT market is. And in an environment where you have maturities coming due and you're trying to refinance those assets, you could have some potential downside to both the interest costs and obviously the earnings of those companies.
That's fascinating. So then finally, do you ride it out in kind of multifamily and real estate, or is that an area where the pressure will be coming down the road?
It's a really good question. On the multifamily side, we think you got to be selective because if you think about multifamily, there's a lot of supply coming in the Sun Belt. There is a repricing that's happening in the commercial real estate market, and multifamily had some of the highest valuation or the lowest cap rates, right? So as rates sort of have moved, you could see more sort of repricing happen. So we're being a little bit more selective on the multifamily side, only looking at names like UDR that are pretty well diversified, pretty good operators, and again, don't face as much of a headwind on the supply front. So you got to be selective.
Yeah, and we appreciate your knowledge. If there was REITs Jeopardy, I would bet on you going all the way. There's so many different pockets here to cover, and at a time when people are just kind of treating everything like it's the same, your experience is really appreciated. Thanks for your time today.
Thanks for having me.
Ron Camden joining us from Morgan Stanley. That does it for the exchange today, everybody. For more of my thoughts on the market, the economy, and more, you can sign up for in one easy step at cnbc.com/newsletters or scan that QR code on your screen. And coming up next on Power Lunch, we'll look at Macy's big bet against the mall. Dom is on the Tyler Cam getting ready. I'll join him on the other side of this break.
BetMGM's online casino is where the action is. Dive into the action with a 100% deposit match up to $1,000 plus $25 on the house when you sign up with bonus code MICasino. Gambling problem? Call 1-800-270-7117 for confidential help. Must be 21 years of age or older, Michigan only. Please gamble responsibly. Visit BetMGM.com for terms and conditions. All promotions are subject to qualification and eligibility requirements. Rewards issued as non-withdrawable site credit bonus bets unless otherwise provided in the applicable terms. Rewards subject to expiry.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
Oh, I do love her. Earn 5 times miles on flights and 10 times miles on hotels through Capital One Travel.
Enjoy your stay in Suite 13.
Whoa, 13? That's Taylor's lucky number. The Venture X card from Capital One. What's in your wallet?
Terms apply. See CapitalOne.com for details.
With Well Business, you get 24/7 US-based support, 99.9% network reliability, and up to 1 gig speeds.
May is Small Business Month. To celebrate, we're offering up to 30 megabytes of business internet for just $30 a month, plus free installation, price lock guarantee, and a 60-day satisfaction guarantee.
Partner with Well Business. Visit switchtowellbusiness.com. 99.9% network reliability based on average HFC availability. October through December 2022. Offer for new customers, 2-year agreement subject to change. Price does not include taxes, fees, and equipment charges. Restrictions apply.
DQ presents The Sound of Summer Calling.
Hey, it's me, Summer. I know you're busy with Beach Days Little League games and all the other fun in the sun, but you gotta get to DQ ASAP Pronto right now. The new Summer Blizzard menu is here, and it brought 5 iconic summer flavors, like new peanut butter puppy chow and s'mores. Oh yeah, it's back. Oh, that's my other line. Everyone is pumped about this new DQ Summer Blizzard menu. I gotta go. See you at DQ.
Get it in the app. DQ. Happy tastes good.
To every woman with a will and a workbench. Every mom with a miter saw she's not afraid to use. Every daughter with a drill and the drive. To the women who get their nail guns together. The ones who are welding the gap. The same ones who DIY like no one's watching. At the Home Depot, we see the potential in you because you see the potential in everything. The Home Depot, how doers get more done.
Welcome to Power Lunch. I'm Dominic Chu alongside Kelly Evans, filling in for Tyler Matheson today. We are watching everything going on in the regional bank crisis today. PacWest, Western Alliance, as you can see, they're just getting absolutely crushed. PacWest says it's weighing a possible sale, or at least sale of assets. Western Alliance says it is not. Absolutely not, Kel.
Both of those stocks down big, as you can see. And Apple down fractionally. Its earnings are after the bell. We'll get you ready for that big report. As we take a look at the broader markets, which despite the turmoil Dom mentioned, have moved off of the lows. What was the low point here today,
We were
Dom?
down 40-plus points in the S&P. We're down 20 right now. So we've halved the losses at the lows of the session. So let's get right into the latest leg of this banking crisis. Joining us now is Leslie Picker. Leslie, I think what's the state of play is the best question, because at this point, there are so many statements, which is, I guess, good that these banks are getting out on the record and saying something.
Yeah, it's definitely welcome for reporters like us, Dom, but there is a lot to unpack in the regional banking space today. The news just keeps coming. We'll start with Western Alliance, off its lows, but still steeply lower after putting out a statement saying it's not for sale. It hasn't hired advisors, and an FT report suggesting otherwise is false. PacWest has a separate statement out this morning reiterating our reporting from last night that it has hired advisors to explore strategic options, including a sale. I'm told those advisors are Piper Sandler and Stephens, and that they've had conversations with potential partners largely on the investor side rather than a strategic acquirer, but all options are currently on the table. The situation, of course, is fluid there and quickly changing as its stock price plummets as well, down about 44% right now. First Horizon also sharply lower today after the bank announced this morning that their $13 billion merger agreement with TD Bank was terminated over a lack of regulatory timeline for approval. In speaking with sources close to this one, it's my understanding that TD has not communicated to First Horizons the nature of the regulatory holdup, but reports in March suggested that investors had been pressuring TD to abandon the tie-up amid the bank crisis that highlighted vulnerabilities in the industry. So the regulatory issues there could be potentially a welcome coincidence for them. As one analyst, though, summed up this week's regional bank trading activity, the stock is not the bank. In other words, deposits appear to be largely stable, as are loan-to-deposit ratios, which is a measure of liquidity. Bank C-suites and prime brokers believe short sellers are behind the recent bout of volatility. But I think, we'll see once the dust settles exactly how this all transpired and what's left, guys.
Leslie, stay with us. What is the next step in this crisis? Many are claiming the Fed is in way over its head, unable to remedy the situation alone. As a matter of fact, former FDIC Chair Sheila Bair telling us last hour that regional banks should have a temporary unlimited guarantee for transaction accounts, and she's calling on Congress to take action. Let's bring in Aaron Klein, Economic Studies Fellow at the Brookings Institution. Also, Hugh Sun is banking reporter for CNBC.com. Aaron, I'll turn to you first. Amid myriad other things, you think they should definitely take bank supervision away from the Fed?
Yeah, look, any organization can only have one number one priority. The ancient Greeks used to call it their telos.
And for the Federal Reserve, that's monetary policy. And that is as it always will be. Bank regulation is going to fight to be second fiddle at the Fed. And the Fed's own report on SVB found that its culture of consensus created problems that left regulators unable or unwilling to challenge bank CEOs when they were taking on this massive interest rate risk. Look, how many more regulatory failures under the Fed's watch should we have before we question whether or not the Fed is right for this job?
Now, Hugh, this has opened up a lot of concern about what the health of the overall regional banking sector is. We know that there are those who believe that the regional banking crisis now is not about deposits. It is very much about the market and short sellers. Is there any way that the banks can win in this kind of a situation, even if they put up their strong numbers, stable deposit bases? Are short sellers just able to assail them no matter what the fundamentals are?
Hey, Dom, great to be with you. So the market has divorced itself from the fundamentals. And how do we know that? SVB,
According to a source, U.S. federal and state officials are assessing possible market manipulation regarding banking shares.
Their deposit base had fled in a very short amount of time. Now, you take a look at PacWest. In the 1Q, they lost about 17% of their deposit base, and they gained some of that in the intervening weeks. So their deposit base, is relatively stable compared to those other situations. What does that tell you? It tells you that if this situation right now that we're going through with PacWest and a few other banks has nothing to do with fundamentals, what's going to make it stop? And, from my conversations with analysts and investors, the two things they point out, the way to, put the fire out in regional banks is to do one of two things. One, FDIC insurance blanket, either expand it vastly or have a much higher limit than today, or two, a ban on short selling. And there doesn't seem to be that much indication that either is imminent. And so we're in a situation where we're going to see this happen. The play for short sellers is very clear. Push a bank to the brink, profit from that, and find another, rinse and repeat, Dom.
Well, and to that point, Aaron, let me turn to you as well. On that policy question, there's kind of two things in the air right now. There's the idea of raising deposit insurance, maybe for just transaction accounts, maybe not. And the question of whether banning short selling is going to be the next move here.
So raising the deposit insurance cap is the wrong move. Look, 98% of ordinary Americans have every dollar in their bank account insured. Raising the number from 250 to 500 or a million isn't going to really stop this issue of the uninsured, which are often very large companies. Look, SVB didn't bank people. It's called a regional bank. It had 4 branches. Most of these have about 1,000. It banked giant tech firms, Roku, Circle, etc. That's not going to be solved. Now, a blanket lien on all transaction accounts of any size, that's a pretty big thing. That requires an act of Congress. Congress could consider that. But just raising the deposit insurance limit, I think, is the wrong move. Ultimately, that's paid back in higher fees by you and I and ordinary Americans in bank accounts.
Just to jump in here for a second, it is what Sheila Bair called for last hour. And I'm curious, we understand there'd be a cost associated with it, but the argument is that if you don't do that, then you're going to continue to kind of worsen the fortunes of small and regional banks across America and leave only the biggest who are perceived as being safe.
So I'm not entirely sure I agree with that outcome. Look, America has over 4,000 banks, and we've talked about the failure of 4 or 5 of them. Banks that were poorly managed, banks that took on interest rate risk, went well over their skis, like First Republic and Silicon Valley Bank. And so, a temporary guarantee of that, to the extent that these are divorced from fundamentals, I'm beginning to try to wonder why this act of Congress in temporary guarantee would solve this problem if it is just a question divorced from fundamentals. But look, I mean, Congress ought to consider it. We rewrote the law in 2010 to say that Congress gets a vote in this. So, let's see where the votes are.
So, Leslie, you came back from a leave and to a banking crisis, to a beat in banks that has now seen some of the biggest turmoil since the great financial crisis. You've been working the phones a lot. I know you, because this is what you do, covering these banks. What's the general sense about which way the winds are blowing right now? Is there a feeling like these CEOs at Western United States regional banks are able to kind of fight off the barbarians at the gate? Or are the hedge funds and short sellers on that kind of verge of being able to really get some momentum behind them.
Yeah, well, thank you, Dom, also for covering while I was out. In talking with the CEOs at regional banks right now, they pretty much unanimously pinpoint short sellers is contributing at least to the pressure that their shares are under, given kind of the events that transpired this week with regard to First Republic, JP Morgan, where equity holders were wiped out. Short sellers made a lot of money on that trade. And so therefore, they've seen this as a profitable trade to get into, and they're piling into other areas as well. We've seen short interest tick up. We've got some massive put options expiring tomorrow in PacWest, which could also contribute to some of the volatility there. So that's the CEO camp. On the investor side of things, a lot of the investors, I don't want to say all of them, but a lot of investors I talk to do really see a bear case here in a world where there is a credit crunch, in a world where there's too many regional banks, there could be some consolidation, there could be additional failures. It's hard to say which one ultimately pans out, but there is a clear bifurcation based on who you talk to right now, in kind of that expert community.
We'll leave it there.
Can I just jump in?
A quick last word, Aaron, like 20 seconds. Go ahead. Yeah, sure.
First Republic was a zombie bank and a dead man walking for weeks. Its deposit base was shockingly sticky that you thought about billions of uninsured deposits sticking around. And short sellers saw the zombie and attacked. That's how markets work. That's capitalism.
Right, but Aaron,
capitalism involves people losing money.
Which of the banks now? So are we then to presume that the share price declines all reflect an accurate assessment of the viability of all of these small and regional banks?
No, not at all. No more than the fact that Silicon Valley Bank was trading at $200 a share a week before it failed. Equity markets are not, knowing all things. They trade on on momentum and other things like that. My point is, the short sellers saw a zombie bank in First Republic whose problems had been known for weeks, and they attacked it. And that's what happens when you allow zombie banks to live. These other ones aren't necessarily zombie banks, but First Republic was.
If you're right about that, then the buyers better come in force here. Otherwise, it's a similar story to the one we've already been watching. Thank you, everybody, today. Aaron Klein, Hugh Sun, Leslie Picker. I'm trying to figure out which floors.
At 30 Rock, yes.
I think Leslie's a little higher, maybe a couple floors. Yeah. Thank you all. We really appreciate it. We just want to draw your attention to a shot right outside the White House right now where Vice President Harris just wrapped up a meeting on artificial intelligence. A bunch of high-profile CEOs, including AI CEO Sam Altman, Alphabet Sundar Pichai, Microsoft Satya Nadella. You can see him exiting. President Biden did make a brief appearance at the meeting. Sam Altman will be on Squawk Box tomorrow morning at 8 a.m. Eastern. You definitely won't want to miss it.
According to the White House, Biden will lay out consequences of default to congressional leaders next week.
One of them. We see history repeating itself. We've got signs of struggle here.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothethick.com.
Chris Marinac is Director of Research at Janney Montgomery Scott. Janney is one of those firms that kind of looks at these things, Chris, from a more holistic and detailed point of view. Kelly had a great question in this past segment about whether or not there are banks out there whose prospects are being foretold by their stock price, because it looks terrible for every single regional bank out there.
Well, I disagree with that narrative, and I disagree with a lot of the narratives that have come out, particularly the past 24 hours. I really think the banks are far better in terms of making money this quarter, tangible book value growing in the second quarter, and banks having higher liquidity today than they did in early March. So the idea that the stocks are foretelling something, I think, is incorrect. We have banks being used as weapons of destruction right now, and it's sad, it's disgusting, but it's where we are. And the information flow from the banks has been wide open. I think the information that PacWest and Western Alliance issued overnight was very helpful, and it's honest. And it's where these companies are. They're stable. Their deposits aren't running. Yet the short sale marketplace and negativity is driving the idea that there are going to be outflows happening. That hasn't happened. We did see outflows at First Republic. That was a very real point of wealth management clients buying treasuries and leaving the bank. That disintermediation actually happened, and it took the company down. It's a much different story at PacWest and Western Alliance. Those companies are far more stable in deposits than folks understand, and their capital levels are strong enough not only for them to survive, but to continue to work forward on their strategic plan. And PacWest had a game plan in place long before Silicon Valley was ever known to be a failing bank.
So Chris, I want to extend this conversation only because I was the one at CNBC staffed with covering Western Alliance Bank and PacWest and First Republic on earnings. I remember First Republic aside, let's focus on PacWest and Western Alliance. I was the one who kind of went into the earnings reports, and I talked to people in the wake of them, and they all thought that the worst was over for PacWest and Western Alliance, and then we just saw
the White
last
House's
48
press
hours
secretary
happen.
Jean
How
Pierre
exactly
says
then
the
do you
U.S. is to
describe
closely
this,
monitor
and is there
market
a fear
developments
now
in banks.
that what we didn't think would happen at First Republic happened to First Republic? Could that also happen to a Western Alliance or a PacWest?
Well, sure, there's a fear, and I would say never say never. Anything is possible. I put it at less than 10% only because these companies have raised a lot of liquidity to handle uninsured depositors, to handle the surprises that are around the corner, and this clearly is a surprise. I think that depositors are a lot calmer than folks understand, and that's true for the entire industry, let alone Western Alliance and PacWest.
Chris, as we leave it here, people are trying to figure out, to the point we were just making, what's going to kind of contain this. Do you think raising the deposit cap, for instance, on transactional accounts, like Sheila Bair mentioned, would that even stop the problems at this point?
Well, the TAG program was put into place in November 2008. That worked out quite well. I think dusting it off and bringing it back would make sense. It certainly would give confidence on those transaction accounts. It did back then. I think the short sale ban that the SEC did in September 2008 should also be dusted off. That was helpful. It's unfortunate that we're here, but we are, and we really should consider changing gears because it's really unfortunate to have the industry that provides credit and liquidity to businesses and households be damaged in this way.
I'll just say, there are those out there, Chris, who say a short ban will cause a near-term short squeeze or kind of a day or two of reprieve, but will do nothing in the long term. Is that right?
I disagree because the fundamentals are way better. Banks have less leverage today. We're lending on 55, 60 cents on the dollar, where we were lending all day at 100 to 110 cents on the dollar in 2008. So the loss content is dramatically different today. There are losses in the banking industry. We have problems. Every bank needs to deal with them. But the earnings and cash flow that banks have can cover 500, 600 points of losses, which is plenty the next 2 years. So I think the banks can handle their own issues. And honestly, I think the marketplace just has not been reading the wide disclosures and the deep details that banks are giving, which is way better today than it was 15 years ago.
Chris, thanks for joining us today. Appreciate all your time.
Thank you as well.
Chris Marinac with Janney Montgomery Scott. Still to come on Power Lunch, we'll talk more about the crisis in regional banks with JP Morgan buying First Republic. Did it open Pandora's box? If Diamond can get a deposit waiver, can any big bank? As the whole situation puts small banks at risk of disappearing altogether. We'll speak to former Wells Fargo CEO Dick Kovacevic.
Plus, outside of the banks, Apple, arguably the most important stock in the market, is on deck for earnings later on tonight. So far, tech earnings have been fairly positive this season, even amid the darkening macro outlook. We'll discuss what to expect with Apple earnings after the bell.
And first, the White House announcing executive actions to balance growing threats from artificial intelligence. We just saw those key AI tech CEOs leaving their meeting with Vice President Harris. Details coming up in Tech Check Power Lunch.
My ride smells just right, just right, just right, just right. Y'all gotta try that Febreze car. Just right, just right, just right, yeah. La 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 la. With up to 40 days of consistency on low Febreze car clips right on your vent. You know my car's my happy place. Keep that smile on my face when it smells just right, just right, just right. Yeah. Breathe happy Febreze. La 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 la.
BetMGM's online casino is where the action is. Dive into the action with a 100% deposit match up to $1,000 plus $25 on the house when you sign up with bonus code MICasino. Gambling problem? Call 1-800-270-7117 for confidential help. Must be 21 years of age or older, Michigan only. Please gamble responsibly. Visit BetMGM.com for terms and conditions. All promotions are subject to qualification and eligibility requirements. Rewards issued as non-withdrawable site credit bonus bets unless otherwise provided in the applicable terms. Rewards subject to expiry.
Wireless headphones. That'll be $200.
I'll use my Capital One Quicksilver card.
Now that's a hit. You used the Capital One Quicksilver card, which makes you the hero of every purchase. With Quicksilver, you earn unlimited 1.5% cash back on every purchase everywhere.
I wanted running music, but unlimited 1.5% cash back is pretty heroic.
Good instincts. Every hero needs a theme song. The Capital One Quicksilver card. What's in your wallet?
Terms apply. See CapitalOne.com for details.
With Well Business, you get 24/7 U.S.-based support, 99.9% network reliability, and up to 1 gig speeds.
May is Small Business Month. To celebrate, we're offering up to 30 megabytes of business internet for just $30 a month, plus free installation, price lock guarantee, and a 60-day satisfaction guarantee.
Partner with Well Business. Visit switch2wellbusiness.com. 99.9% network reliability based on average HFC availability. October through December 2022. Offer for new customers, 2-year agreement subject to change. Price does not include taxes, fees, and equipment charges. Restrictions apply.
You want to lose weight and get fit, but after a couple weeks you fail. Well, it's not your fault because it's super f***ing hard. Every try hasn't worked long term because it wasn't designed to fit into your life long term. I'm Carl, and I want you to try my all-in-one health and fitness platform, Body, free for 14 days, where it's about enjoying life while you get healthy and lose weight. If you've struggled, I get it, but now it's your turn to succeed. Go to body.com now. That's BODI.com to try it free for 14 days.
Welcome back, everybody. The CEOs of
Bank
Alphabet,
of Canada's
Microsoft,
Macklem
and
says
more
price
meeting
setting
with,
behavior is
Vice President
starting
Harris
to
at the White House today
normalize.
to discuss AI, but the president dropped in. I want to know all about this drop-in. Deirdre Bosa has more. Like, is it the nature of his drop-in? Does he say something in passing? Why do they even have this summit, Deirdre?
Kelly, I wish I knew to be a fly on the wall of that meeting, right? I mean, throughout the morning, we saw those arrivals from some of the biggest names in tech. You named two of them. There was CEO, Alphabet CEO, Sundar Pichai, Microsoft, Satya Nadella. And remember, those companies, they are essentially facing off against each other for the AI zeitgeist lead. There was also Sam Altman, founder of OpenAI, and ChatGPT, the guy that kicked off all this frenzy. Now, Vice President Kamala Harris, she hosted them in the Roosevelt Room. And yes, we did hear that the president dropped by as well. Why? Well, the stakes are so high here. If generative AI is the biggest platform shift since mobile, since cloud, or as Senator Pichai puts it, more important than fire or electricity, Washington had better get on it. Time and time again, guys, we have seen technology develop faster than government policy. So now the White House is trying to take early action and address the alarms that are already being sounded by holding this meeting. And ahead of it, remember, too, the White House announced a number of actions around AI, including research hubs and new guidance. The VP put a statement out after the meeting this morning, in part reading, the private sector has an ethical, moral, and legal responsibility to ensure the safety and security of their products. And, you know, guys, the private sector probably pointing the finger right back at the government, saying that they have this responsibility as well. They're all trying to figure it out as it moves so very quickly, something I think I say every single day on this program.
Well, and Lena Khan had that op-ed, maybe New York Times, where was it, the last couple of days? So if you had to guess, Deirdre, as we read through her comments, there's this meeting at the White House. This is all pointing in the direction of some kind of platform legislation that seems to be coming. I think in this case, they realize they kind of have to get ahead of it because it's already, growing so quickly.
They got to get ahead of it because of so many missed opportunities in the past on areas like social media. I'm skeptical, and I think many are skeptical. Maybe that's warranted because the technology just develops so quickly, and public policy takes so much longer to develop. But maybe encouragement, perhaps, that this meeting happened today. You could point to the fact that players like Apple, Amazon, NVIDIA, they weren't there. They're going to be part of this platform shift, no doubt. But at least the government is doing something. At least they're putting money into it and looking for these guidelines and asking for feedback from the public as well and from the companies. So perhaps this is a much better chance than we've seen in the past. And, some of the CEOs and biggest players in the space will say, hey, look, at least the alarm is being sounded now. Yeah. So that is a positive development.
I wonder if there's any awkwardness where you have kind of, the Google guy saying that he's the problem, and they're the problem, like they started it, or they shouldn't have let this out of the bag.
You know what's crazy about that? I mean, this is the perfect way to bring it up, Kelly, because the biggest balance sheet of all of them, and Deirdre mentioned, is not there. And that's Apple. They got reports out. They report after the bell today. Deirdre, I wonder, is there a scuttlebutt out there in the Valley, in the Bay Area, about Apple and its AI ambitions, what it could look like, what it could manifest itself at, and, in the coming months and quarters and years?
I don't think that anyone doubts that Apple is going to be a player here. You had Tim Cook a few years ago referring to its secret car project, saying it's the mother of all AI projects. It's even developing its own artificial intelligence chip. Why it wasn't there today? I mean, they focused on the generative AI platforms, the 4 players that actually have products being used today, like Bard and ChatGPT, Microsoft's Bing. So maybe there's a good reason that some of the other guys weren't there, but certainly you're going to want to watch tonight what Apple, what Tim Cook has to say about their efforts. I think it was only mentioned 5 times on the last earnings call, but you can bet it's going to be mentioned a lot more tonight.
I think it was mentioned dozens of times between Microsoft and Alphabet during their earnings calls.
Dozens and dozens.
Deirdre Bosa with Tech Check. Thank you very much. We'll see you soon. All right, well, coming up,
Bank of Canada's Macklem says mounting bank stress increases the risk of over-tightening.
25% right now, missing on both top and bottom lines for its earnings report. Is this a bad omen for the streaming industry overall? Plus, Macy's shares also lower today. The company is working on a big move away from its historic norms. Think locations, opening stores outside of the mall.
BetMGM's online casino is where the action is. Dive into the action with a 100% deposit match up to $1,000 plus $25 on the house when you sign up with bonus code MICasino. Gambling problem? Call 1-800-270-7117 for confidential help. Must be 21 years of age or older, Michigan only. Please gamble responsibly. Visit BetMGM.com.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at TickStrike.com.
The Venture X card from Capital One gives you premium travel benefits, perfect for seeing Taylor Swift The Eras Tour. Presented by Capital One. Ooh, I do love her. Earn 5 times miles on flights and 10 times miles on hotels through Capital One Travel.
Enjoy your stay in Suite 13.
Whoa, 13? That's Taylor's lucky number. The Venture X card from Capital One. What's in your wallet?
Terms apply. See CapitalOne.com for details.
With Well Business, you get 24/7 US-based support, 99.9% network reliability, and up to 1 gig speeds.
Bank of Canada's Macklem says wage growth needs to moderate to curb inflation.
Business internet for just $30 a month, plus free installation, price lock guarantee, and a 60-day satisfaction guarantee.
Partner with Well Business. Visit switchtowellbusiness.com. 99.9% network reliability based on average HFC availability. October through December 2022. Offer for new customers. 2-year agreement subject to change. Price does not include taxes, fees, and equipment charges. Restrictions apply.
With no fees or minimums and no overdraft fees, banking with Capital One is the easiest decision in the history of decisions. Even easier than choosing Slash to be in your band.
Next up for lead guitar. You're in.
Cool. Yep, even easier than that. With no fees or minimums and no overdraft fees, is it even a decision? That's banking reimagined. What's in your wallet?
Terms apply. See CapitalOne.com/bank for details. Capital One NA member FDIC.
Whether she's a pet mom, a plant mom, or the mom who raised you, celebrate Mother's Day this year with the gift she'll use all the time. Get up to $400 off Peloton tread, row, guide, or bike packages, and choose from accessories like our heart rate band, row mat, cycling shoes, and more. This is the perfect gift for mom to explore what gets her moving. Whether she has 5 or 20 minutes, she can choose from classes like techno rides, country walks, or an 80s row. All access.
I'll be back with you guys in just a few moments. I apologize for not being back on stream. I got one more thing I'm doing in the background for on the business side of things. Just give me a minute.
Bank of Canada Governor Macklem says housing market probably still has some weakening to go.
All right, here you go. I'm back. All right, so you've got that weakness and a bear cross on the S&P 500 at 2:30 in the afternoon. The bears taking back over again. We talked about time not being on the bulls' side into 2:30. Now you can see the bears have a new low on 2:30 as well. Not boding well here for the bulls on their intraday relief rally. We talked earlier, just to review again. What I hope that we can get is this low down here. That my price target is down below. I don't know if we get it today. I don't know if we get it tomorrow or into Monday. We have Apple earnings today at end of day. We've got guidance coming out later. The conference call, but the report should be right at the bell, unless I don't know, unless something I'm missing here.
Natural gas June futures settle at $2.10. NYMEX diesel June futures settle at $2.23 a gallon. NYMEX gasoline June futures settle at $2.32 a gallon.
There's all that supply down there, just begging for us to go down there. So there's no supply on the upside, all supply on the downside down here. We also know that we'll probably experience some weakness into the close today over Apple earnings. You'll see people exiting Apple to not have risk on in the market on that ticker. We saw the reaction today to AMD, though in my view, I was talking to Winky here for a minute when I wasn't on stream.
NYMEX WTI crude June futures settle at $68.56 a barrel. That's down 4 cents or 0.06%.
My own view on it is that it's a short covering. That's how it was structured heading into their ER. You saw the sell off on ER, and it wasn't a bad ER report. I didn't talk about this part of it on stream, but I did my own. I did listen to or read the guidance, and then listen to the arguments for or against AMD going to zero. And the only find that I saw was that it was being shorted. It's Winky called it the goblin stock, right? When you goblin trading, right? You've got it's a stock that gets traded. It's an actively traded stock. We talked about that too on just prior to their earnings, was that it's highly traded. Apple's the same way. It's just has a lot of interest in it. And you're seeing that relief squeeze in AMD today. I don't think it's done. I think it takes multiple sessions, 5, 6, 7 sessions for it to be done squeezing. And then I think that it's just another opportunity for shorts to step back in and re-short it again. So I do think it takes multiple sessions. I did put a 2-week target on it. That it could take 2 weeks because it is somewhere around, in my view, it's somewhere around 5 to 12 sessions for it to play out. Do I think it's over for AMD? Probably not. You still have to also account for macro conditions in the marketplace will impact this as well. So do you short it from 91.67? I don't know that that's really the price to have shorted AMD today. I think it's not done going up, but I do think that it's going to get re-shorted once again at some point. I don't think it's done, in my view at least. And that's the same view that I had at 7 a.m. when it sold off. I was like, you're going to see a relief. You're going to see a squeeze on AMD. And to that point, it did squeeze. It didn't even take 2 days. It took 2 fucking days for it to squeeze. They had 0.6 days to cover. They covered. And the timing of news is never, in my view, the timing of news is always it's always suspect to me. I see something in the market or in a ticker, and I'm like, yeah, it's probably going to happen. And if it happens and it's like news driven, I'm like, dude, this is kind of fucking knew this was going to happen. It's like insiders are like short AMD for their ER no matter what. You know what else is like that? Was like yesterday with Powell. Like when Apple peaked out at 9:30 in the morning. I mentioned earlier today that while everyone was paying attention to the rate decision, people were exiting Apple, and that was like kind of a hint that I don't know. I didn't mention this morning, but I meant to. Was I don't think it mattered what Jerome said yesterday. I think I might have said it to Winky on a phone call. I was like, I think I texted him and I said, I really don't fucking care if Jerome said he was going to hand checks out to people yesterday. Market was going to trade where it was going to trade, regardless of Jerome. And I did make a comment on stream or on Twitter where I said, I was like, looking back on FOMCs, we have gotten market directional changes based on FOMC meetings, but on rate decision meetings, the market has tended to trade not to those rate decisions. They've traded to the stock, to the actual chart, not to any rates that have been decided. And we're kind of seeing that right now today, playing out yesterday into today. Now, you're not actually seeing like the rate decision having any impact on how the stock market is trading. I'm not even assigning any of the action yesterday and today in the SPY with like the rate decision really impacted that trading. FOMC meetings can have an impact on how the market moves. Even though we buy the meetings and we sell the minutes, we still do see some serious reactions on those meetings. So we are waiting for 4 p.m. right now for Apple ER. I don't think AMD is done squeezing. I think it's a process that takes probably at least 5 sessions, up to 12 sessions. And it is becoming bullish on the daily. It's becoming bullish on the hourly. I don't think AMD is done. So if you're trying to short AMD, you can. I wouldn't. I'll show it to you here. Now, macro can impact this, but still saying that, I'll show you here. So when we were going into AMD earnings, I said that I like their earnings better than Starbucks. How the chart looked.
That doesn't mean we're at the end.
And I'm still holding on to that posit. And it was mostly had to do with this stuff right here. That they were, so before their earnings, I'll snap a line here. So before their earnings, I was like, of the two charts, if I was looking at Starbucks, or is this when their earnings was? I think it was back here somewhere. Anyways, I think their earnings are right here. But just looking at a chart on AMD, they're at the bottom of their daily bearish divergence. And they're now actually starting to come back up again on this squeeze. And you see the hourly starting to go to the high side as well. Hourly is bullish. And you are starting to see it come up here. So this has nothing to do with the squeeze. Today, the squeeze was based on, I was looking at the short data on it. So I don't think that AMD is done going up per se. Even if there's momentary weakness in the market, I think it's still headed higher. And you could see violent moves in this with market conditions for it to continue to go higher. So AMD is still bullish. That's going to take some time. And if you look at the short interest on March 10th in the days to cover, and then you check it against the same short interest just heading into their ER, it looks very similar. And actually, you can see that blast down right here, too. I don't know where it was, somewhere in here. Where's March 10th? Let's see it right down in, where's March? January, February 23rd. Yeah, right there, March 13th. March 13th, March 10th, right here. This whole, this is identical to what happened previously. They ended up selling off. They had like 0.6 days to cover. The exact same number, like almost to the 100 of shorts on AMD, and then it fucking just went crazy. It just went crazy. It took multiple sessions, and it just ripped faces up higher. And so, do I care about a Microsoft deal? I don't. I don't care about Microsoft deal at all. I care about it going back up and hitting that $100 one more time.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
AMD puts working so far. Yeah, earlier in the podcast, I told you that it'll pull back. Like that initial squeeze will come back down. I'm not talking on your timeline, your 5-minute timeline. We're talking about before, not after. We're talking like 10 sessions, 12 sessions. When AMD chips can do it for you. NCLH, yeah, I can look at NCLH for you. No worries. NCLH. I like NCLH. You used to trade this, right? It's coming down. I'm making squeeze here, but it's coming down. It's not done going down. Hang tight for a second. Okay, so sorry about that. I apologize. So NCLH, sideways trade. Here, matter of fact, here's a prime example. So, so you want the counter arguments, right, to AMD? It's right here. So, not a counter argument. So, where I'm saying I'm bullish on AMD, I'm bearish right now on overall. I'm bearish on NCLH, and that's mostly due to this right here. It's topping right here. Can it top? So like, can it top right here and squeeze higher? Yes. So let's. Matter of fact, I'll just draw it out for you. I'll make it simple because normally this works. Normally we come back to these tickers, and like I'm talking like 90% of the time we come back, and it follows these tracks. So we'll do it right now. Let's make it simple. Just like that. Whoop, hold on. Whoa. Let's put that in the trash. Might clean it up a little bit. You're in a 1, 2, 3, 4 trigger. One month there. Your max price on it is 18.55. I'm gonna go with $18. And due to market conditions, I'm going to tell you no fucking way. Hey, come on in. Thank you. So you're and even then, here's where your trade is dead. Your trade is dead below. Your trade is dead on NCLH at below 1346. And you have some risk right here, too. You're already being told no right there. Let me look for a price target down below. Yeah, sideways, man. $11. Buy again at $11. Unless there's something I don't know. There's got to be, if there's some like material news coming out on them that I don't know about. I haven't done any due diligence on it. Yeah, I've got. Outside of due diligence, that's what I've got on NCLH. I think any rips will be sold. Do I think it's in like accumulation mode? And I'll look on it. Let me look at another chart that I have. On the daily, this isn't too bad. Yeah, maybe I'm not as bearish as I was. I'll go higher. Let me look on something else here. Changing my opinion here quickly on it. Maybe it's yeah, trash that then. Yeah, something like that. Well, make sure I check back on this end of May, June NCLH. Not as bearish as I thought I was. I got one more thing I want to look at here in the background and just confirm that if this is real or not. Thanks for shouting it out. I'm glad I looked at it more deeply. Hold on a second. Look at cycles real quick. Yeah, cycles say it's going down too briefly, but not permanently. And then crash predictor for this one. And see. Still a buy and hold. So if your timeline is 6 months to 3 years, I don't see why you don't own it. I don't see any reason why not to own it. Temporary weakness, more bullishness over time. Nah, dude. See it right there, dude? On the 1 day, it's not looking good. That's a tough one to call. It's a tough one to call. Give me just a moment. Can you ask? Can you ask her to log in? This account has an email with the login credentials. Okay. The one thing I would say on this would be, yeah, I'm sticking with this in a May. Price target 18.50, somewhere in there. Failure up here, right there. $18 by end of May in NCLH. Not bad. Not as bad as I thought it would be. And it is a buy and hold. So how about this? Come back end of May, and we'll see what it's doing. Like, come back end of May and be like, hey, Cap, we hit that or we didn't. Because I'm interested to know. You have a sell trigger on 1413, intraday stuff, 1413 and 1435. You have a buy the dip on intraday on $13.45 on NCLH as well. If price goes below, well, right now price is below the 1 and 5 minute, so it's not looking good. And the price is below the 1 and 5 minute. There's a bear cross forming already on it. So if you're looking for a new entry, $13.44 and NCLH. I think market conditions are going to impact it. I'd have to chart it against the S&P 500. Did I do okay on that one for you? I hope I did. Did I not answer? If I didn't answer your question on that, or if you want to have a more important question, or like maybe it's to your position, maybe you're short or you're long, if you want to ask a question about that ticker in relation to what you're trying to do, maybe I can answer it better. 401.36. Trying to buy this down here. Let me look back on your chat here and see what you guys are saying about it. NCLH, what are you guys saying? Who said that about it? NCLH. Bill. Boy, you guys have some hard things to ask, like Bill. I think we bought Bill. When did we start buying Bill? Back when it was quite a long time ago, right? We rode Bill up all of 2020, all of 2021. We sold Bill before the crash. What do I think of Bill? I think it's a buy and hold. I think it's a buy and don't look at it. I like Bill. We traded Bill when it was worthless. We traded Bill when it was like $25, $30 or something. I shit you not. When it went 10 times. Something insane. Bill was an insane trade. Should you trim? Bill's the kind of thing where it's like, I just like owning it and then, buying and selling options against it. Is it at its low? No. You know that they started buying it down in the 20s and 30s. Can it go down to 20 and 30 bucks? Yeah. I would be like, I just have a trade plan for it. Like, I ultimately want to own 100 shares. So, what I was just talking to Winky about this offline was, let's say you want to own Bill. You buy 10 shares. Right now, you buy 10 shares, and you say, I'm going to buy another 30 shares at 30 bucks and another 30 shares at 20 bucks. And then on the way up, I'll keep adding to it to get to 100 shares. If it starts to run and you only own 10 shares, what do you care? You're making money. Either way, you're going to be making money on that trade. And I like Bill. Overall, I like Bill over time. I'm a fan of Bill, but it does get bought and sold, right? It gets accumulated and distributed. So I think it's more of a personal what do I feel comfortable with on Bill? What do I want to own it at? I want to own it at 20 bucks, I'll be honest with you. Am I going to get 20? Probably not. So you just start adding and accumulating. If it starts to turn, and you're dip buying Bill too. Like, let's look at Bill real quick. Look at Bill. So on Bill, right? Let's go to a day chart on it, so we can show it all. I like that it's an IPO, right? It launched recently. This was one of my early stock picks. So, or at least on Twitter. So, accumulation, distribution. You're catching knives right now. Let's be honest. You're catching knives. You have, we go over this all the time, right? Trap buyers, trap buyers, trap buyers, trap buyers, trap buyers. So you're constantly fighting this. On your next trip up, you're always going to fight these sellers. You've got somebody out there. There's somebody out there that's trapped right here. And they're like, well, you've got people that are capitulating from up here, but you've got like trap buyers in here that are just like, I've owned it now for 6 months. Just go up there so I can get out. Right? So the moment you get up here, you're going to get more selling problems, right? Until you wear it, all those sellers, it won't continue to go up. And then you got the question about dip buying, like catching a knife. This ticker specifically, there's no reason to buy it here. I'll be honest with you. There's no reason to buy it here. I don't see any fundamental reason to buy Bill here. I'll be honest with you. There's no reason to. And I'll explain why. It's so simple. The reason why. Even this here wasn't worth buying, in my view. Oh, I guess it is. I guess you can buy this here for closing these gaps above. But if for like a buy and hold for this kind of a run right here, you're looking for consolidation, right? You're looking for other buyers. Like I don't want to work. Like I don't want to be like the guy that like has to buy a knife and then sit in it when I can put money to work somewhere else. Right? Like I don't want to be buying down here and hoping and praying that some other people jump in up here. But this is the first good sign. So this is a good sign right here for Bill. I mean, I'm not going to lie to you and say, hey, that's not a good sign. There's accumulation here. That is a good sign. Like between now and March 10th, this is a good sign. You're watching people before you were buying it. I can't say that's bad news. But I always like to see continuation. So I'm always looking for like that continuation higher, right? So buy this here, and where would I like to buy it? I'd fucking like to buy it right here. Right, I'd like to buy it here. 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 Right, if it's going up here and it starts to break, let's say I bought it right here, goes back up and it starts to break through, I haven't lost $1, right? I've actually made some money, a little bit, but I haven't got my, if I have like raise my stop limits as we go up, sounds great. But do I buy it today? No. This was an entry point, another entry point, set an alert down below here. For trading out a Sigma move outside of the expected range. I wouldn't buy any if we squeeze up here and do this nonsense, right? Then it becomes a buy, right? So I can't I can't say you shouldn't buy it here. I was saying a minute ago, like, do I think this is a buy? I said no. I would buy this yellow line right here. And then I wouldn't go full port. I would go like 10 shares, save another 10 shares in an alert right here. I'd snap another line on previous lows. If I only accumulate 10 or 20 shares, so be it. But if I'm able to accumulate over time and believe it or not, grab this $20 down here. Nice round numbers, grab 50. Just nice round numbers. If we tag 50, 40. That way you're not just like super bull. You're like, yeah, I can accumulate to 100 shares somewhere in here if things go to shit to the south. I can catch this run up as long as I want to. Right? So if we start running up here, I can buy these dips until it fails. And if it starts to bloodbath down, continuation down, I can buy down here. Right, cut my actual winnings, and continue to add down here. So you're buying all the way up with stops, and you're accumulating if it goes down, so that you have a nice DCA. I'm not really saying it's bad. I'm just saying. And what's the price target on this stuff? You've got a gap to fill at 95.69. You have this gap up here to fill. I think you fail this gap a bunch. I think what you're gonna do is you're going to get up here. You're going to come back down. You're going to come up here. You're going to come back down. You're going to come up here, and you're going to trigger a major sell. Fight your way back up. You come up here to fight this one. You're going to get sold right back down again. You're going to consolidate, and this is going to take time. This could take an entire year to get there. Not that it's going to, but it can. This can take time. This can take, this whole process could take 1, 2, 3 years. You might not see this ever again. You might only see 200 or even 140, 120. So just be measured in your... I don't see a bunch of accumulation down here. I do see some capitulation down here. That's a good sign. That big red bar right there is 20, or what is that? 21 million shares. Pretty good to see. I like seeing that. That's positive. Means that people are getting worn out. That's positive for Bill. So I have mixed feelings on it. I just wouldn't fall in love with it. I'd probably be doing some pretty big... I haven't looked at Bill's due diligence recently. I stopped looking at it back in 2020. I think we bought it at $29. We traded it all the way up to like fucking $200-300 or something insane like that. But you can put it on a list of tickers. You create a list of tickers for yourself that put on a list of tickers for yourself that you put on a watch list. Whatever. Yeah, that's the last part. I was talking to Winky on the phone about this a moment ago, which was when you make like a list. when you make a list of like 1,000 tickers, you don't tend to fall in love as much with the story that's being told. And you do an honest thing like, I want to own Bill at $40. If Bill runs away from you and you don't get to buy it at $40, you're not like, well, I guess if you're only looking at Bill, you'd be like, damn it, I missed Bill. And I would have made so much money, I'd been rich. And so you kind of get pissed off at yourself, right? You're like, I wish I had that one. But the truth is, if you have 100 of those tickers, 1,000 of those tickers, one of them is going to hit for you. And you're going to be like, hell yeah. I just got an alert, and I'm going to go and check what the news is, why it's selling off like that. Is it something material that they're never coming back from, or is it something that's an overreaction or just a capitulation move? Is that the actual bottom of that ticker? And then you're not falling in love with one ticker, because you're like looking at 1,000 tickers or 100, and you should, as an investor, spend years doing that so that you can accumulate, add, take off tickers. And specifically for me, I'm looking for tickers that have IPO'd in 1 to 3 years. And I want growth. And that ticker got its growth. That ticker went through its growth cycle. It fucking cranked. It was what, 100 multiple or something, right? I mean, excuse me, a 10 multiple. 10 or 12 multiple or something like that. So just looking at Bill right now, like in a larger scheme of things, the trade on Bill, in my view, was when it first IPO'd. And as a matter of fact, we were just talking about, what were we just talking about? What ticker? We were just talking about AESI the other day. AESI just IPO'd. Just IPO'd. When did it IPO? IPO'd on March 9th. I think the IPO price was $18. It's trading $16.85 right now. I'll bring up AESI for you. So over time, if I can own ASEI at $16.85, if I can own it at $15.08, if I can own it at $12 and hold it for 2 or 3 years, I'm a happy guy. So just look at it, ASEI. Just launched, just IPO'd. Do I care what it trades for right now? Fuck no. I'm looking at it like I looked at Bill in the beginning. Like, so so mark my words. If we look back on ASEI in 2-3 years and it's trading for $200 or $150 or $90, you're gonna be like, shit, I missed it. AESI. I think we talked about that one the other day. So, you wouldn't have thought that with Bill, right? You wouldn't have thought that when Bill IPO'd. So I'm looking for accumulation. I'm not looking to catch knives. I'm looking for accumulation. I'm looking for, there's an insider that bought, there's actually on March 13th or something, an insider bought, I think it's one of the principals, but he bought $5 million worth of it. I'm like, sweet, man, this guy bought $5 million worth of AESI. I'm like, I want to join him and come back and look at it in a year or 2 or 3 and see what happens with it. They're selling sand. They're selling material. I think 2 or 3 types of material, but for drillers. And they're selling an actual product. Like, here's your sand. I'm not like, I don't have it in development, and I've got customers, and I'm going to bring money, profits to my shareholders. Yeah, career low. Like you run that on like 1,000 tickers or 100 tickers, and you don't fall in love with these tickers. That's a key point, and you're just looking for being able to get in. Right? Like you run that on your new IPOs. If I give you a ticker and I'm like, hey, look at AESI, do your own due diligence. Like dig deep. Track their ERs, and if they don't have so right now AESI doesn't have a guidance out. I do want to see one earnings and one guidance from them. I prefer, to be honest with you, to see 3. I like on a new IPO. I want to see the first 3 ERs and guidances come out. I want them fucking making something that they're. I don't want I'm not looking for a Tesla here. I'm not looking for someone that's like, I promise to do this 10 years from now or 20 years from now. I'm looking for a spec growth company that is actually producing something. Launched within 1 to 3 years, has a few great ERs underneath their belt, and they're like, we're making hand over fist money, and we're filling a niche. And we're undervalued. And we're worth more money than where we're at right now. All those things. And there's 15,000 tickers out there. So that's I was just talking to Winky about this. I was like, we're talking about AMD and Apple. I'm like, can I get Apple to go 10 times in the next 3 years? Probably not. Can I get AESI to go from $16 to $100? Probably a better chance of that with AESI. I might want to watch a few ERs from them first, or see if it continues to be accumulated. But still, it's on my radar. We'll put the Apple chart up for the release. White House spokeswoman Jean Pierre. We will keep a close eye on market developments in banks. Biden will lay out the consequences of a default to congressional leaders next week. Biden can fuck off with that. Anybody that's talking about that shit can go fuck themselves, in my view. Anyone talking about debt limit? I'm talking like politicians, bank people. I don't want to hear it. I'm with Fed Powell on this. With what he had to say yesterday. You guys already had me on record. What my take was on that whole discussion. I think it's garbage. I think anyone that talks about it, like any politician talking about it, is like a fucking clown, in my view. I think it's gross that it would even be discussed. It's like discussing aliens. Like we're going to make decisions based on aliens that aren't real yet. It's like basing some shit on something that whatever that guy would say there. That conspiracy theory guy. I wish I had read that first before I even said something about it. Let's see if we can get time's right now 3:14. Yeah, I'll put that Apple chart up here in just a moment. Like the fact that it's even being discussed is kind of gross. Here's SPY right here. Yeah, maybe I'll mute the let me mute Bookmap here. What we'll do is there's your SPY chart. Give you some targets on Apple. Apple selling off into their earnings, not unexpected here. Take the money and run. 164.24. $166.64. $154.57. Oof. Apple has a lot to lose today. And I'll ask you guys in stream. Oh, no, I don't want that one. I want to know from you guys in stream. Let me know if you think we go up or down here. 143.07. Oof. Forget guidance. I want to know 143? 143.53? That's a buy down there. A big old buy. Let me know in the chat. We're not going to show that one. We're just going to show these two right here. Bad ER. Bad numbers. There it is right there. 155. Good numbers. We know what happens with good numbers, right? We can still go down there. We know that good numbers with bad guidance down there. We know that good guidance down there. Better be some AI shit. Better be a product we don't know about. Better be a stock split. Better be more than just buybacks. Price target would be above would be to grab that, retarget that 172 above. I really do think, man, if we get good reports, your max is 172. Up there. Everything is against Apple going into this ER. I think I agree with Winky. It would need to be like, if they have a beat, I think it still goes down. I think and you're gonna get some volatility until he talks. He tends not to do that though. He does sometimes, but he tends not to. The one good thing about Tim Cook is he doesn't like save too many surprises. Sometimes you get them, but it's just not usual. Usually you'll get like a product launch. You get like an event. Sometimes you do. It's just rare. Some of what he does in some of his ERs, he'll tell you something really good, or not you, but he'll tell reporters something that's really good, but it's not flashy, or even portrayed as flashy. Like, hey, this is going to make us a ton of money, but it's not a phone. And then it takes 2 or 3 earnings for those things to be priced in. And let's be honest, it's been traded up for. It's been traded pretty high. Now, the counter argument, if you're a bull, The counter argument would be that the banks know that we're going up, and they just want a chance to buy a dip for us to go up. So any kind of dip is going to get bought in this ER for a trip higher and for the market to trade higher. I think a lot of this will depend upon where the market's headed to. I'm going to not assume, but I'm going to assume that an institution to an extent knows if we're trading sideways and up, or if they're going to start to shed their holdings in the next into the end of this quarter. So I think that I'm on the boat that they hold into September. They might not be adding to their position, but they're going to hold into September. They might rotate out of Apple into something else, but they're in at a much lower number. So if we go down to 154, it's just another accumulation. Or a chance to accumulate more Apple down at 154. So I like that 154 number. I like it. I like it a lot. If I was an institution, I'd be like, yeah, I bought it when it's cheap. If we can get it down to 154 bucks or even lower, if we can get it down to 140 bucks and I can buy in down here, like it's 143, I think institution should be happy. Be stoked down there. And they'll use specifically right now. You're seeing out there. You're seeing any excuse being used, right, to dump or buy. It's very prevalent right now. It's like glaring that it really doesn't matter what the reports are. It's where the price is. Like price is important right now. It's playing a role right now. Is anyone bullish on Apple? I'm gonna give it I'm kind of bullish on Apple here, but I have the same view. Like I'm kind of bullish on Apple going up and breaking out, but I still want to buy it at 145 bucks for it to do that. So I'm like greedy bullish. I'm not in the camp of we just start fucking squeezing to. I'm like cheap bullish. I'm like cheap bullish. I'm like the bull that's like sell it down to 145 so I can buy it for the rip higher. I'll take 154. Yeah, I like the Apple Bank idea too. Yeah, Jar Jar is saying the market needs an excuse to bounce. Yeah, I agree with that too, Jar Jar. Like when I'm looking at so when I was looking at Apple yesterday when they sold it, I'm like, man, that's an auto sell right there. And then I'm like, we've been selling off that downward, that negative divergence, and we've done it 3 times, or I think this is the 4th time, right? This will be the 4th time that we fail here. And you always know that one of those times, like, it's just the law of probability, right? Like you sell off that divergence once, twice, 3 times, 4 times, and it's like, yeah, we're going through that shit at some point. We're gonna rip some faces off. Everybody and their brother's gonna be on puts and short Apple, and it's gonna rip some faces off. And Jay Powell cares about Apple. Yellen cares about Apple. 401ks care about Apple. I don't think Winky's here. He said he was taken off. I would ask you guys a poll. Just answer inside the chat. Just say, let me ask the question. Ready? This is a big question. This is what we really need to know. You ready? Does Apple open tomorrow above 166.60 or below 164.20? That's all I'm going to ask you. From right where we are right now. Does Apple open at 9:30, not 4 a.m.? I want to know like 9:30. Does Apple open above 166 or below 164? That's the question. Above 166 or below 164. In the chat. And I'll give you my honest opinion. 9:30 is what matters. Give me a second, I'll look. Oh, shit. Fucking Apple. Give me a second, I'll look. I'm going with down. I'm saying below 164. I'm going with down. Ooh, Slot's going with above. I'm reading you guys right now what you guys are saying. I'm going with down. I'm going with below one. So this is what I'm going with. Let me expound. I'm going with below 164, but that shit gets bought right up. Like, I think if it's at like 154 or 140, like between now and Monday, it's gonna get vacuumed right up. Like, just vacuum cleaner. Just buy. And I'll also posit this. You're going to see like all these shit posts from now into Monday saying how Apple's going to crash and how Apple sucks. And they're going to rip that shit right over that negative channel. Yeah, going down based on QCOM. If they rip it over that channel though, if they rip it, I'll say this too. If you're a bear, you don't want to fucking see it rip over this. You don't want to see it rip over that channel. This is kind of like your jam here. Like, if you're sell side, you're like, we do not. If you're sell side, you're like, we do not want Apple getting out of that channel. That is not positive. It's like a confirmation that we're going sideways and up. I think it takes time, though. I think breaking out of that channel, it's not an easy thing. I think that's why I'm like cautiously bullish. Like, I think for us to break out, we're not in money printing. I think that it's not going to be like one try and done. I think it's going to be like a grind for Apple to get over. It's like, here you go. We'll do this for you. Nobody won cash. Everybody in cash is too scared. We're going to put the price over for you and, do your consolidation that you need to do.
Early market on close imbalance, currently sitting at 29 million to the sell side.
That's my, I think it, like anything when you're going to break out from.
Sponsored by TickStrike.
It takes, or especially from down, like a negative channel, I think it takes time. I think it takes like 2, 3, 4 attempts.
At tickstrike.com.
As a matter of fact, too, just on that same point, if it rejects on that negative channel and it doesn't immediately, like doesn't start bloodbathing, that would be a sign, right? If the dip gets bought, let's say it gets sold on that channel at 172, it gets sold down, but it doesn't immediately start just like slamming down. That'll tell you that we're not done here. Apple's going to be a good indicator in the coming weeks. The price of Apple will be a good indicator. to the rollover. We know that in every previous example, it was relentless selling. It was just like fucking sell Apple. So you're going to be trying to compare those 4 previous examples. The last 4 times we were here, it was like sell, major percentage points. You'd see the SPY down like 10, 15%. So it'll be good to watch. I mean, this is a good one to watch. Jar Jar made a good point about that, because, I mean, if you don't see like 145 in a day, that's cause for concern that we're going up, right? That's telling you that there's demand. Where in previous 4 examples, there was no demand. And think about those 4 previous examples with sentiment. Sentiment here pays up. Sentiment and J. Polyester are going to play a major role in this. Are market participants willing to accept the market going sideways and up? Or are market participants saying, nah, fuck all that. Time to take profit. I want to buy Apple at, $70 again. This will be a good bellwether for that. This is an important earnings. Definitely probably the most important earnings of the season. It's probably the big boy. This is the one that this is going to tell you definitively in the next 1 to 3 weeks, Apple will definitively tell you which the overall direction of the market. And you don't need to catch either side either. Like, you don't need to, if the market's going to sell, if the market at large, at all, is going to roll over in a big way, like I think your wife's boyfriend yesterday said that JPM said 350 by June. If that's the case, we're going to 350. You don't need to call this roll. You'll catch plenty of this. You'll have plenty of time to jump on an Apple short. You'll have like a month and a half, 2 months. Yeah, it does. Apple does have the power. Apple here in this ER is going to be a large deciding factor in sideways and up for the market or some major new lows for the market. Hey, your wife's boyfriend, how you doing, man? I didn't know. Thanks for showing up, brother. We're just talking about you. And about how Apple's going to influence or be an indicator as to where the market's headed. Another fascinating one. You could actually compare this to. Let me see if I can bring this up real quick. We have a few minutes. And to this point that we're talking about Apple, I got something for you guys. To this point, Apple squeezing now. Just to this point really quick. This is a chart of SPX. There's 1, there's 2, there's 3. Right? There's your 4. But just note that it went back again to retry, right? Needed to find more support. But we didn't get the bloodbath down here, right? It found more, but that second tag above, I want you to see that here, right? We come down, we come back up, right? We just went straight down. We had a failure to go back to look, right? We never went back to look. We had a failure to look. We came back up here, right? Failure to look above. Came back down, right? We came up here. And we actually looked again. We actually made a new high. That's a bullish. indicator right there. Even though we came back down for more support, that was a tell for the bulls saying we looked above. We failed 3 times. The 4th time we actually got a new high. We were just looking for more support to break out. And pretend this is Apple right here, because Apple looks just like this. Even if it sells off here, if Apple sells off here, but it gets bought up at 145, it's predicting a breakout, right? If Apple sells off on its earnings and doesn't come back, fails to come back, that's an indicator that the market is going to roll over for that 350. Make sense? So when we saw this high, this secondary high on SPY here, we got a new high here, believe it or not. I believe that we did on SPY, I think, or at least ES, I think. But this right here was a key player. And it takes work to break out of a negative downtrend. It takes time to break out of a negative downtrend. So my point here is, this here is going to matter. If it sells off, if the dip is bought, that will matter. If the dip is not bought and it starts going down, you don't need to call this. You just need to jump in for this part of the leg down here. This is just like Apple. The Apple chart on a year basis looks just like the Apple chart on a year basis looks like this right here. All this, just pretend this is gone. That's what the Apple chart looks like right now. Is right where we are, right here. So just based on this close here, if you're a market macro or where is the market headed, your bulls are looking for a minimum of, does the dip get bought at 154? Does it get bought? Is it 154? Let's look. If you want to know the market direction, you want to know if the dip gets bought at 154 and 143. That's all you care. That's your base. That's your bottom case. Does it make another attack at 172? Get it and like retest it. You know that if we squeeze above 172 and break out from that channel, we're good to go. If you're a bull, if you're a bear, you want to sell this where we are right now, and you do not want to see 154 or 145 get bought. Because if you don't see those two get bought, and a rip higher, you know that the market's on to go lower, much lower. Much, much lower. You know, and that 145 will look like the top, believe it or not. 145 will be nothing. You'd be looking at 70s. Maybe not 70s. Let me look right now. I don't want to quote myself on something that's coming out of my, not quite coming out of my ass, but you are looking for then looking for Apple at 115, 116, probably going to hit 110, maybe even have a capitulation of 100 flat.
So we're looking again now to the early market on close imbalance, still sitting at 29 million to the sell side.
I'm getting a question here. SPY squeeze into the close on Apple ER is a question I'm getting right now. Do we squeeze into the close? Do we squeeze into the close? Man, dude, look at all that. There's just looking at that supply down there. That's a tough call, man. A 5-minute chart on the SPY. That is a tough call. I'm telling you what, man, we're getting a bloodbath. In my view, I'm going to be honest with you. I think we're getting a fucking bloodbath. So, no, I'm not bullish into this close. You know my answer? No. I am bearish into this close. I'm bearish like Bloodbathville. I'm bearish as they come. Maybe that's a counter. Put that bad boy right there. I am bearish. Where's my price target down there? I am bearish down here. There's my price target right down there. I'm bearish, man. I am fucking bearish in this close. I don't care what anybody says. I'm bearish. Oh, yeah, I'm going to put the bear music. Oh, yeah, good point. I'm going to put the bear music on. Hold on. Let me put it on. Good point. Touche. Where's the bear music? Beartown. Good eyes out there. See if they can put some bear music on here before they report. I'm bearish here. I shouldn't be, but I am. We'll start with this one. We'll get lubed up right now. Waiting on Apple earnings right now. Apple's not getting the Tesla waiting room music. Checking on a bull cross right now on Apple. Bears in the house today. Can't believe I'm doing this for Bears. I think a bunch of bulls are like, I'm out of here. Thanks, Nick. What are you doing, Apple Bulls? Scared money don't make money. Woo! PBR time. David, how you doing, my brother? All right, that's enough. I've got like Tesla waiting room music. You guys want to hear it? It sounds like shit. Yeah, let's look at Fubu. I'll look at Fubu right now. Hold on. Fubo. If Fubu tomorrow can get over $1.20, I'm looking for $2.10 on Fubo earnings.
Spreading those final orders. Market on close imbalance settling at 310 million to the sell side. So that's the market on close imbalance for the NYSE, 310 million to sell.
Your stocks doth decline, my liege. Ten minutes left right now. Entire market waiting for Apple report. This is like some Conan the Barbarian shit, isn't it? He's like... Everything's awesome right now. Everything's good, man. We just went over Apple and its 1 year chart. Does it break out and above? SPY, what it took for SPY to break out of its negative downward channel. All right, you guys want the bull music now? Well, let me go back and we'll play the Tesla waiting room music. We'll see if we can find any good Tesla waiting room music.
Today, the FTO meeting.
Welcome, bulls. I knew this would piss off the Bears. Doesn't this sound like a Tesla earnings waiting room? Yeah, this is my Tesla folder for like the waiting room music for Tesla bulls. Should we review it one more time? We'll go over one more time. We'll do the fast go over here in the market, okay? You guys are just showing up now. So we're taking a look right now. This is a pretty major thing right now, right? This is SPX, right? SPX. Easy play is to sell these peaks up here. We know that on SPX, the last attempt, we reversed and came back up for a new high to try to break out. It's going to take work to break out of a downward trend, right? And then you saw that SPX got rebought. It didn't keep selling down, right? And eventually broke up, broke back, retested. The question becomes, do we go down here in SPX? But to further that point, Apple, easy short, right? Sell it, sell it, sell it. And we're right back there again. Do we sell it down? Does it bleed down and get rebought at 164 or 145 and then make another attempt to go higher? Does it go up and down and take some time? Is it something where Apple needs work? It's not easy to break out of these channels. Big questions here. Can Apple just squeeze above and hold for the market to trade up and to the right? Does Apple sell down and get rebought down here? If it doesn't, is there a failure on a retest on a high? Bulls right now should not care as much about whether Apple rips new faces off today. Bulls should be caring about one thing only. That if it sells off, that 145, 164 gets bought for another attempt to the upside at 172 for a breakout. Even if it makes an attempt from 164 to 172, comes all the way back to 145, and then finally breaks out. It's not easy breaking out of these channels for a ticker. Oh, hold on, I gotta turn that off. Okay, so that's the key here is that as we come, this is a big thing. If you're a trader or an investor and you're like, we're going sideways and up for the rest of the year, this is gonna tell you over the coming next 2 to 3 weeks if we are. Apple is going to show you direction over the next few weeks. Going to say, yeah, you know what? We failed today, but we bought the dip at 164. We bought the dip at 143. We came back and attacked 172. We rolled over, but we bought it again at 145. We're going over. That takes work. It's not easy.
Allows you to actually hear order flow in futures, forex, and
So you want to see that, right? The base case for bulls, they want to see that in the coming weeks. If the dip does not get bought at 164, if we have a failure to attack 172 again, if there's a failure to buy 143, and we don't make that second or third attempt to break out for Apple, we know what that leads to. Leads to Apple to $100. Graybeard's got a price range for Apple today of 160.57 and 178.79. I'm going to give you both of these price targets on Apple here. Do. $178.79 on the upside. $178.79 on the upside. Downside price target. $160.57. Let us know in the chat what you think is going to happen in the next minute. Thanks for joining us today. Please like and subscribe. If these broadcasts, if these live streams every day are helping you, please consider donating. You can join us in the Discord. Here's a Discord invite. This is a free community. Costs nothing to join.
Early heads up for after the bell today, as we do get the Apple Q2 2023 earnings. So these are at half past, so in about half an hour's time now.
No, we didn't get the release yet.
Again, so estimated EPS seen at $1.43. Estimated revenue at $92.6 billion. Expecting Apple's earnings in, again, just under half an hour now.
Yeah, I'll be sticking with you guys till 4:30. Hey, you're welcome, Bebop. Be back here again tomorrow at 9:30. I'll be here with you today until 4:30, so we can see what these earnings do. I guess SPY's not real. I guess because SPY could matter here. We might have to buy some calls at 4:15 if it goes down enough. If SPY goes down enough at 4:15, I might buy some calls on SPY. If we can get a little bit of dippage down in here, anything like that, the 4:15, I might grab some. Yeah, I'm watching Q's in the background too. So there's a nasty, nasty, nasty barrowplane on the Qs. Nasty barrowplane on the 5 minute, the 1 minute.
One day decline, shares down 51%. Now that's ticker PACW.
PACW getting nailed right now. No, they're not. Oh, they're down already 50%. I see. That's from yesterday. Yeah, man, Tim Cook does not like messing around, dude. He's just like the Intel CEO. He's like the no fun CEO. He likes everything scripted. See if he'll gain any insight between now and 4:15. We're gonna look at this now. So I'm looking at 40. Let me look at them in the background. I'm looking at some calls right now for tomorrow on SPY. I'm looking at 408s. There's like 173,000 puts on 405 for tomorrow. I want that rocket fuel, man. Now it's 4:04 p.m. Looking for a call by at like 4:15 for 408C for tomorrow. But I want to see weakness here. I want to see some like blood down here to this S2. Right in here. I want to see some weakness down in here. And I want to see SPY like regain its composure by open. See that? I still use RSS feeds. Nobody uses this stuff anymore. The death of RSS feeds are like the death of webhooks with all these fiefdoms now on social media. BKNG is dumping on earnings. Give me some bear talk, bud. I did a bunch of bear talk today. A whole bunch of it. I've been bear talking all day long. Down here, I want to buy the SPY with size. Down here at 395.65 today or tomorrow. That number's a moving target. What I really want is I want volatility to collapse tomorrow and Friday. I really want the 3 red bar day too. I want nice 3 fat red bars on the SPY. I want to get down to like 21% on oversold. I don't want to see the capitulation trade. I don't know if that capitulation trade yet though is 396. Is like 21% at 400 or is it at 396? It's a big question mark for me that I haven't had answered yet. Yeah, market betting on over/under and AI mentions. They really need that. He doesn't do that. He does that stuff, but every once in a while, and they love to create shit for those releases, right? It's like a whole product launch. Oh, whoa. Dash, baby, Dash. Talking about Dash here for a week, right? Dash just flipping around right now, whiling. Dash traded to 68.83 down to 58. Acting wild right now. Lift taken to the woodshed. Yeah, give me that weakness right now. A little bit more. Get down there a little bit more. 408's now 74 cents. I'm not on him right now, but I want to buy him at 415 if possible. I want to see some weakness down into the 415 hour. Peloton shares plunge after company reports wider than expected loss. We talked about Peloton last week, right? Peloton. You guys have been hearing about me talking about Peloton for years now. Ever since the stay-at-home trade was over. I'm like, that shit goes to go to zero. I don't even want to see it. I want to see it on a shelf in a dollar store. Nope. Oh, yeah. Daddy, chill. Jar saying we're getting a coin pump right now. Man, all these fucking puts on SPY tomorrow. It just looks like rocket fuel for a rip higher. Everybody's short right now. The whole market's short right now. Now I'm looking at 407s. Just quick $1,000 trade, dude. It's like $1.05 right now. If I can get those down to like $1.98 or something, 405Cs. I think I get left behind. It's 409 right now. Just give me blood, dude. Give me like panic for the next 5 minutes. Give me panic. Oh, is Bill ripping right now? Nice. Bill's ripping up 15%. Congrats if you were long, Bill. Here, let me look at Bill. I think I charted Bill out earlier. Did it go to the top of that channel? Oh, dude, Bill, dude, crushing it. Oh, yeah, dude, Bill went right up to the top of that channel like it was butter. Dude, Bill's up $11.42. Someone else called. I was up bearish on Bill. I'm like, I want to buy it at $20. Well, I love Bill, but I want to buy it dirt cheap. Someone else was bullish on Bill into this close today. They're up 14%, $11.31. SPY making a move higher right now, trading 404.95. I'm hoping that I get it. Come on, don't start going yet. I might be missing this trade here. I wanted to buy this lower at 415. Bill getting a little bump right there. Bill cranking right now, up 13.91%. Hold on, don't go up yet. Give me time. It's easy SPY. Easy SPY, easy. I don't want to stay up tonight short in the fucking market, SPY. I was up all night long last night. Oh, man, dude, it sucked. when NVIDIA 50%? Come on down, SPY. 407C's trading $1.07. Do I just buy it? Just say fuck it and buy it? I already did it, Jar. Yeah. Dude, you should have seen that ES post that I made. It like ticked. Let me look it up right now. I have the let me look up ES. Hold on a second. It was disgusting. That's kind of gross. I think I posted this one yesterday on like late night on FinTwit, like, and this is what my fear is down here, man, is that ES just bloodbaths it down here. And then this is where the rest of that move is right there. So if you're trading futures tonight, you want tonight's trade? For ES? Right there. That's what I want. I want ES at 3,900. It's like that. Give me that blast down. And something like that. Plunge, push up, then we get the move down there. Hey, thanks, James. You're welcome, brother. If we do start selling off tonight, if I take a long, I'm long right now. If I'm gonna be long overnight, and it looks like bloodbath, I will post something. I will say something. I will be awake. I'm looking for that tag on ES at like 404375. Ooh, nice. Oh, come on, 407s. That's bullshit. So they closed me at 407 at $1 they closed the market at $1.03. And
regional banks, Royal Trading.
I'm kind of under.
Increasing their bets on Federal Reserve interest rate cuts due to brewing fears about the next financial shoe to drop. So another unsettling round of financial industry trading halts hit Western Alliance, Bancorp, and PacWest today, this time with losses exceeding 60% for each stock. So the rout engulfed several other lenders, both large and small, with First Horizon losing more than 30% after its merger with Toronto Dominion Bank was cancelled. An investigation into Goldman Sachs' role in Silicon Valley Bank's deal did weigh on sentiment today as well. So all 21 stocks in the KBW Bank Index, which includes financial heavyweights such as JP Morgan and Bank of America, fell today, with $2.5 billion SPDR S&P Regional Banking ETF was on track to be at its lowest level since October of 2020. So the bank rout kept the broader markets under control. The S&P briefly paired losses amid gains in some big tech names, but still heading for its fourth straight decline. The SIBO Volatility Index, or the VIX, Wall Street's fear gauge, surged to reaching the critical 20 level. This is in stark contrast to the calm that prevailed in the markets for the most part in April, when the index fell below 16 last week. So this also demonstrates how investor confidence remains fragile following a string of bank failures, despite Fed's Powell's assurance yesterday that authorities were getting closer to containing the crisis. So smaller lenders are under pressure after a year of rate hikes slashed the value of their bond holdings, resulted in an estimated $1.84 trillion in unrealized losses.
Yeah, I want to see the VIX hit 23, 24. But I don't think that's volatility. I mean, if we're repricing the VIX 16 to 24, if we can get VIX 28 on like a Sigma move or something like that, that'd be awesome too. Anything between like 24 and 28, I'd be stoked. I'd like to buy that dip. The VIX has still been repriced. We don't have VIX trading 30 to 40. So I'm still bullish here overall. Everybody is short Friday. Everybody's loaded up on a bloodbath Friday. Yeah, May the 4th be with all of you out there. Everybody wants to see the market go down tomorrow. I guess everybody but me. Trading 166. Oh, ruh-roh. Whoa! Ruh-roh! Bear down! Bear down! Bear down! Bear down! Hey, Sparky, how you doing, brother? Bear down, bear down. Look at this. Look at the market shorts. The market shorts like, fuck you, we ain't going up. ES is like, eat my ass. SPY's like, we're burning. We don't care if Apple goes to 200. SPY's going to 100. Oh, Apple now trading into its hourly trigger. What? Ruh-roh. Ruh-roh. Oh, did I put these on the wrong chart, maybe? Did I put these in the wrong fucking chart? Look at SPY. SPY's like, get fucked. We ain't going nowhere. We tagged the hourly trigger on Apple.
10 minutes to the bottom of the hour, but we do expect Apple to print their Q2 2023 earnings. Their estimated earnings per share is $1.43, with an estimated revenue of $92.6 billion.
If Apple prints 180, man, oh, shit. This market is hedged to the tits for tomorrow. Huge moves expected to the downside tomorrow. Or the money, that's where the money is. The money is definitely to the downside. 164 right here. That's where the
This stream is sponsored by Pivot.
Woo!
Get free daily pivot points, Fibonacci, and market profile.
All that vol coming off.
At tothetick.com.
Yeah, John Haggerty's like, bear out, exit all those Apple puts earlier for a reason. Like, I think John has the right idea. Like, if it's going to sell off, it's going to sell hard and heavy. I have plenty of time to jump back in. This is the baby, man. This is J Powell's baby. Yeah, I agree with that. I agree with you, John. Like that's my point on Apple is like if it starts selling, like says a bad ER, I'm like, yeah, there'll be plenty of time to short that shit to the ground. Plenty of time. I can wait till Friday or Monday. I don't feel like losing $100,000 or $30,000 shorting that shit right now. Next chairman of the Fed. Yeah, whole market's positioned to the downside. I want to buy it at like 145. Just like set it to 145. I'm like a greedy bull, so I'm like anti. I don't want to see Apple go to 179. I want to see it to go to like 164. I want to see it go to like 145 and buyers step in. Usually when I hope for that shit, it doesn't happen. Like my feelings versus my thoughts.
So the House panel are to hold a May 10th hearing on SVB and Signature Bank.
Yeah, if it moons to 180, I would jump back in short on it. I'd expect it to come back and check. That's called a kiss play, right? When you break above, it comes back down, kisses and checks. Seven minutes until we find out. Apple will tell us next 2-3 weeks. Apple's gonna show us the way. Hands down, it's gonna show us the way. A little bit of blood right now in SPY and Apple. Do we get what JPM is saying, the 350 by end of quarter? Naughty nurses do rock. I love you, Sloth. I was trying. So this morning before open, so what I've been basing all this off of, I was going back to see what could replace Apple to carry the market. There ain't much out there, man. Tesla carrying the stock market's one of them. We have seen that previously. Like, who do you hand off to carry the market, or even for a bullshit reason?
Where would you get Apple printing their second quarter 2023 earnings? So their estimated EPS is $1.43 with an estimated revenue of $92.6 billion.
Oh, Joey Donut's in here. Joe, I'm telling you, man, there's some Elliott waivers out there that are saying, there's some Elliott waivers out there that are like 300 still on the table for Tesla. It's been trading like a beta stock. It's been trading like a meme. It would be funny if the market went down and Tesla went up to 300. It's been trading like a meme recently, past month or so. Hasn't been trading with the market much. I agree with that too, that statement too, Joe. I don't want to see 300. I want to see 65, 67. I am in 100% agreement with you. What I want, though, what I want for Tesla, I'm not being satisfied at this moment. Look at that. You got Apple is flats right now, and SPY is down. You can see the market hedge. Yeah, dude. Joe, I'd probably, matter of fact, if we were heading there, I would start mortgaging properties for that. I would do some more. I would do some mortgage. I would take out some mortgages on that trade. So if you've been with us if you're just joining us right now, we were going over how difficult it is to break a negative trend over time, like a year. It took a lot of work for SPY to do that, SPX, ES to do that. Took a couple attempts, and even then we went and did a kiss play, came back down and checked that channel. Usually if you squeeze out of that channel, we roll right back down. You do want to see the work done for Apple to break out of that negative channel. How SPX broke out took a lot of work. So John Haggerty just made a point. If Apple does go to 180, it'd be an instant short, automatic short. I think if you're a bull, what you want to see, like your best bet to see, is to see 164 or 145 get bought, make another attempt at 172, maybe roll down for one more dip buy, and then you break out of that negative down channel on Apple, so that it is the driver for us to go sideways and up. That would be my thesis at this point with it. I know bulls, man. Tesla bulls, like, they want that. Tesla bulls have been through this before in 2016, 2019. They know all about, like, hey, we bought the dip, let's go. And you get that one last roll down. And you get trapped. And it doesn't feel good. You sit there for 4 years and you're like, oh, I hate my life. It pays off, but it's a brutal existence. Two minutes left. CVNA, Jared, get back with me tomorrow morning at 9:30, man. Hit me up in the chat, and I'll look at Carvan all day long for you.
Earnings now. So again, just one more time, estimated earnings per share is seen at $1.43, with an estimated revenue at $92.6 billion. Just under a minute's time till it's forecast to come out. So just noting Apple up around spot 2% in this brief post-market session.
Liquidity drying up right now on ES right now on Bookmap. Oh! 169. Oh, 172 is the next trigger above 172.12. PT above that.
$94.84 billion on estimates of $92.6 billion. The revenue breakdown: iPhone revenue a beat, $51.33 billion on estimates of $48.97 billion. Mac revenue a miss, $7.1 billion on estimates of $7.74 billion. iPad revenue, that's also a miss, $6.67 billion on estimates of $6.69 billion. So again, revenue breakdown with service revenue, that's a miss as well, $20.91 billion on estimates of $21.11 billion. Greater China revenue, that is coming in at a beat, $17.81 billion on estimates of $17.16 billion. So Apple also note they boost their quarterly dividend to 24 cents a share from 23. They were expected to do this as per their last earnings print as well. So further breakdown here: wearable and home accessories, that's coming in at a beat at $8.76 billion on estimates of $8.51 billion. Product revenue overall is a beat, $73.93 billion on estimates of $71.91 billion.
So this is kind of like other reports that have been coming out, right? They're not doing well in their hardware sales for big units like computers and stuff, but their small stuff like phones, man, watches, any of this small stuff beats, services beats. We've been hearing this from other companies as well, right? You saw AMD say we have lower demand on PCs. Younger generations, man, moving over to smaller devices. Still have a beat, though. Yeah, 90 billion. Yeah, that was my question about this earnings for Apple, which where AMD doesn't have this ability.
So
Go ahead.
noting Apple shares up around 2%. The S&P also paired some of its losses in this post-market session following the EPS and the revenue beat from Apple there.
EPS and rev beat. And not only that, like just looking at AMD versus an Apple, this is kind of key, right? We talked about this earlier today was Apple has to be able to show that if they have lower PC sales, not PC, but computing sales, that they can make that money up on smaller devices, and they're showing that they were able to do that in this beat right now. I'm going to assume that Tim Cook is going to harp on that. It's going to be a focal point of his today. Yeah, that buyback has been known, though, right? Kind of priced in. The real key point here is Apple able to, let's say you've got a younger generation saying, nah, I don't need to have an iMac. I need to have an iPhone, and it has to be current. And those phone sales have to be relevant, and can Apple adjust to that? That's critical, and they showed that they can. So that's big for Apple. You got to give Apple that. Guidance will be important today. You want to hear what he has to say, what Tim has to say about being able to adjust to market demands. You know that services is going to be big. China is going to be big. Sales outside of the country is going to be big for him.
This stream is sponsored by TixRight.
We'll see if this holds up through open. That my question to you earlier was 9:30. I want to know what the price is at 9:30 tomorrow. Do we sell the VIX tomorrow to try to cool off the VIX for Monday? You know how it is, right? We're down for a couple days. We were up for a few days. We come into a Friday. We sell it off. We're down for a few days. We come into a Friday, and we cool it off. So Fed Chair Timmy, baby. I'll see you guys tomorrow at 9:30. Hopefully my 407s are going to be fine for tomorrow. Right now they're looking like we might get there. Hopefully I can get to 407 tomorrow on the opening bell or by the close tomorrow and make some money on that trade. I will see you guys tomorrow, 9:30 a.m. Be here. And whoever asks me about Carvana, I will do that. I'll chart that whole thing out for you. I'll look at the short interest, all the other shit for you.
Being shifted now to other credits, hence that was so much higher.
Yeah, see all of you guys. Please like and subscribe.